We build investor audiences for small cap companies, retail and institutional. 33 years, thousands of clients. We are experts in messaging. National TV ad campaigns, investor webinars, digital media, reaching hundreds of thousands of investors. RedChip. We do it well, we do it right, we do it big. RedChip. Call us or email us today.
First speaker today is RedChip's CEO, Dave Gentry.
Hi, I'm Dave Gentry, the CEO of RedChip Companies. Thank you for being with us today. I want to first give you a brief history of RedChip. We were founded in 1992 as a small cap research firm, putting coverage on companies like Daktronics and Winnebago, Starbucks, and even Apple in the early 1990s. Over the years, we evolved into a full-service investor relations and media firm. We've represented companies like U.S. Steel, Perfumania, Celsius, Apollo Medical, and many other companies that ultimately became blue chip companies. We have a very long and rich history. Today, we offer the most robust platform for small cap companies, reaching both institutional and retail investors on a global platform. A platform that has its own TV show called Small Stocks, Big Money, titled after my book, that airs on the Bloomberg Network nationally every Saturday at 7 p.m. We have a webinar platform in which we'll put hundreds, sometimes thousands of investors on one Zoom platform for our clients to present their story. We do road shows in up to 8 U.S. cities. We have a very prolific digital media, social media platform with over 100,000 followers. And we have our national media platform in which we write and produce and air 30-second TV ads on financial stations nationwide. You can learn more about RedChip and our platform at redchip.com. Thank you for joining our conference today. And today's Metals and Mining Conference focuses on one of the most important industrial challenges of our time, the race to onshore critical minerals. Across the global supply chain, strategic materials once thought to be plentiful are tightening. In some cases, prices are skyrocketing. Supply chains have become fragile, and almost every day, common elements we've long relied on for modern technology are being reclassified as scarce. If you're watching the news, you've seen this reshaping everything from economic policy to national security. Global demand is accelerating. In just the past few months, we've seen analysts from every major institution highlighting exponential growth in electronics and artificial intelligence. According to research published this year by McKinsey & Company, the demand for magnetic rare earth elements will triple by the year 2030. Specifically, neodymium, dioprosmium, and terbium. These materials power high-performance electric motors used in robotics, medical devices, consumer electronics, drones, and microchips. They also project that lithium demand will grow more than 6 times by the end of this decade, driven largely by electric vehicles or automakers such as Ford, General Motors, and Tesla. And by the year 2030, half to more than 2/3 of all nickel produced globally will be used in batteries. In simple terms, minerals are becoming the new oil. The U.S. has a growing reliance problem. Analysts at Deloitte predict the world will need 4 times more critical minerals by 2040, a figure that could increase by as much as 500% by 2050. The United States today is fully import reliant for 12 critical minerals and more than 50% reliant for 29 others, a strategic vulnerability influencing U.S. policy. The demand for batteries metals is surging. According to Bloomberg New Energy Finance, we will see roughly a 15-fold increase in demand for key battery metals by 2035, including nickel, cobalt, manganese, and graphite. Bloomberg also expects overall battery demand to rise sharply by 2030 from electric vehicles to grid-scale battery farms. And global production of battery packs is expected to exceed 9 terawatt hours by 2035, which require an unprecedented expansion in mining and refining across multiple elements. Even base metals are becoming scarce. For example, just a month ago, Wood Mackenzie, a leading global research firm, estimated that global copper markets will face a 6 to 8 million ton deficit by 2035. This is echoed by S&P Global's Commodity Insights team, which highlighted how electric vehicles are using significantly more base metal than traditional combustion engines, expecting rare earth magnets, critical components behind precision motors, and advanced electronics to double by 2030. Energy policy is also undergoing a long-term structured shift. The International Energy Agency also predicts the demand for several critical minerals, such as lithium, to increase fivefold by 2040, with cobalt and rare earth demand rising between 50 and 60%. By 2050, energy and digital infrastructure will account by more than 40% of some core metals. In a recent report by the World Bank, up to 5 times more minerals will be required to support long-term energy transitions. That's why we're all here today. The world's mineral appetite is increasing fast, but the supply chain remains fragile and highly concentrated. China controls about 85% of the world's capacity to refine rare earth metals, while producing around 70% of the top 19 strategic minerals. As geopolitical competition rises, the United States is working to rebuild domestic capacity across the entire value chain, from exploration and mining to refining, processing, and advanced materials manufacturing. These critical minerals are essential for artificial intelligence, data centers, defense and aerospace systems, power grid modernization, robotics and automation, consumer electronics, and next-generation computing. The companies you will hear from today are at the core of that technology, mining assets, processing capacity, and supply lines that will define the next era of industrial growth. They represent innovation, leadership, and entrepreneurial strength. And for investors, this is a rare inflection point. Throughout history, from oil to semiconductors, the early leaders in every major industrial transformation have delivered extraordinary returns to those who recognize the shift early. As you listen to today's presenters, you'll learn about the broader transformation underway across America, reindustrialization, and new global supply chains you can invest in today. I want to thank all of our presenting companies and analysts and investors and institutions, portfolio managers for joining us today. You can register for future RedChip events on our webinar series and explore more emerging growth opportunities at redchip.com. And you can reach any of our specialists for more information on any of these companies today at 1-800-RED-CHIP. The race to onshore critical minerals will start in just a moment. Presented by RedChip Companies. Thank you for being with us today. Again, I'm Dave Gentry, the CEO of RedChip Companies.
Thanks, Dave. Our first guest today is Shad Marquitz. Shad is co-host of the Correlin Economics Report. Shad has been investing in financial markets since 1999 and in precious metals since 2008. Since 2001, he has been actively trading the resource sector and commodity stocks. Shad, welcome.
Glad to be here. Thanks so much. I'm looking forward to it. Can you hear me okay?
Yes, please go ahead.
Okay. I'm going to share my screen here and walk you guys through a quick presentation on the critical minerals, following up on what Dave had to say. Let me know when you guys can see it on your end, and we'll rock and roll.
We see it, Shad.
All right. Well, with critical minerals, it's a big topic, and when we talk about critical minerals, let me get one other thing here for you guys. We have a lot of different buzzwords that come through the industry. We hear defense metals, we hear strategic metals, we hear battery metals, we hear energy metals. And they've all been lumped into this big bucket of critical minerals. And it's hard for retail investors or institutional investors or even the media to parse out how all these different things jostle together. There are certain commodities like uranium that may be a defense metal and an energy metal, or lithium that Dave just mentioned that may be an energy metal, but also a battery metal. And so it leaves investors wondering, okay, we know all these things are important for daily life, but how do I get a handle on this growing space? And so when we turn to the media, they're not a big help because they pump the word critical materials or critical minerals, but they don't really define the terms. They don't really help us navigate the waters. And so I guess the big question we want to start with is, what are critical minerals and why do they matter? And so I think it's important to look at what the government is saying. And I'm going to use the lens of the US government, but we could say the same thing about Canada or Europe. Critical minerals in the US were defined in 2020 as commodities that are essential to national security. They have a supply chain that's vulnerable to disruption. And then they also are essential to manufacturing of a product where their absence would cause a problem, either for business and the economy or for national security. This list that the government updates in the US comes out every 3 years. And so in 2022, there were 50 critical minerals. Now, 3 years later, there's 60 critical minerals. The next list will come out in 2028, and we may have the whole elemental table on this list by that time, because almost everything, if it's not grown, is mined. And I think the supply chains and the governments of the world are realizing how important this is. And as Dave highlighted in the intro, China has a stranglehold not just on the manufacturing side, but really the processing and the separation of these critical minerals. And so you can see the list here, and even popular commodities like copper or silver or tin and nickel are now on this list, in addition to things like the rare earth elements and some of the hard to pronounce elements on the elemental table. And so a lot of times we want to look at what is this basket of minerals, and they get conflated with just the rare earth story. Over the last few months, we've seen a lot of media conflating rare earths as critical minerals. They are critical minerals, but not all critical minerals are rare earths. So I think it's an important distinction. There's 15 rare earth elements. Sometimes people include 2 other ones and make it 17. But the basket of critical minerals is vast, and there's a lot different supply demand drivers for each one of these. And so you really need to dial it in. As far as rare earths, you can see on the chart on the screen that China dominates this industry. The United States has a pretty good secondary supply, and then there's some supply from Asia. But really, the idea is the world needs to break their ties with China. And so there's a lot of media out there talking about all these different partnerships between different countries. You saw the US meet with Australia, Cambodia, Thailand, Malaysia, and then come up with the 1-year truce with China. And it's important that we look at how all these supply chains come together, which ones are in the highest demand. And the study from this year, from 2025, showed that commodities like rhodium, gallium, germanium, tungsten, niobium, magnesium, and about 6 of the rare earths were the ones that are really in the hottest demand, but really all of them are important. And there's also a lot of executive orders we've seen out of the US administration, and we've seen everything from 4 executive orders on nuclear power. We've seen some on metallurgical coal. We've seen different things on the development of critical mineral assets. So you've got different government agencies now, the Department of Defense, Department of Energy. There's a lot of the Department of War all coming in and weighing in on this. It's the first time after 15 years investing in this sector that I've ever seen so much government participation. When you look at the Department of Energy, I pulled up their website just getting ready for this event, and just over the last couple of months, you can see press releases about the government funding rare earth element supply chains, looking at domestic production of critical minerals. This is December and November of this year. Department of Energy looking at Lithium Americas, the deal they made to help shore that up for the lithium supply domestically. We saw famously that the MP Materials Company had an investment and a loan with the U.S. Department of Defense this year. It's the first time we've seen the government investing in mining companies directly. And then we also saw the Department of War do a $6.2 million critical minerals deal with a tungsten company, Guardian Metals. We saw the Department of Defense do 14.7 million to enhance cobalt and graphite with several domestic companies, Fortune Minerals and Lomico Minerals for the graphite. We've seen the tungsten and antimony stocks go bananas earlier this year. Now they've cooled off recently, but part of that is because of the Chinese export controls, and the 1-year truce that the United States has on rare earths has nothing to do with these minerals. So again, in the critical minerals arena, there's a lot of minerals marching to the beat of their own drum. And in the case of some of these defense metals like tungsten and antimony, there's no relief in sight. So we have to keep looking at companies in North America or in Australia, but especially Canada and the United States, that can supply the West with these critical minerals. Again, when we see the media coverage, they acted like the truce between the United States and China had solved all the world's problems. But the reality is that didn't do anything for North American supply, and it has nothing to do with some of these other critical minerals. Again, it had nothing to do with lithium. It had nothing to do with uranium. So it's important to distinguish rare earths and some of those media narratives from the last couple months and the rest of the critical minerals complex. The government is so worked up about this that the Government Accountability Office is looking at how they can extract critical minerals from seawater. This is very much like direct lithium extraction from brine wells in the oil industry, but they're actually trying to pull these minerals out of the water in the ocean because they're so desperate for a supply chain. Now, this is a generic graph, but it just shows you that this is the government Department of Energy website that shared this. This is the demand picture for all of these critical minerals. It's up and to the right. Now, that's not to scale, but it shows you the demand that we have building up. And I think it's also important what this administration, the U.S. has done, and this has spurred Canada and Europe to do similar programs. The critical minerals Fast 41 permitting process is an executive order from March of this year that the Trump administration passed to help critical minerals and mining projects advance forward because of the long lead times and long permitting red tape that they would get stuck in. They've identified about 50 companies. Some of them may be the ones on the call today that we're talking to investors about, and they are trying to expedite the permitting and development process. You can go to the government website and pull this up on the Department of Energy or under the White House under the Fast 41 permitting, and you can see all the projects that they are greenlighting to move forward. Now, they still have to do their own state or provincial, if it's in Canada, permitting process, but this is a big initiative to kick the gears on, to hit the gas pedal and really start development of critical minerals projects. And I think it's really important. I was reading one of the articles here, and this line stuck out to me that I highlighted. Prior to the Trump administration, the average time it took to permit a mining project was 29 years. I think that's insane when you think about how critical these are. If they're critical, we're going to need them faster than every 3 decades. So what you have developing here is a picture where the government is getting involved with the funding and the permitting and the expediting of domestic critical minerals production, separation, and processing. And it's sweeping the world. That's what Australia is doing. That's what Canada is doing. And I think that sets us up for great opportunities for investing in critical minerals companies. And if it's okay, I may just share one last thing, and that's if you want to find us, we'd love to have you come over and check out some of our podcasts at the KE Report. We cover mining companies, gold and silver, which are now critical and strategic, all the way down through copper, rare earths, uranium companies. We have a YouTube page, the KE Report, where you can see some of our interviews. And I also write on Substack under the Excelsior Prosperity channel, and I weigh in on the equities, the mining stocks. And I just think it's great that you guys are doing this event. I'm looking forward to participating and following along with the companies here in the panel today.
Thank you, Shad. Excellent presentation. Thank you very much. Our next speaker today is Jesse Day, host of Commodity Culture. Jesse began his journey into the commodities investing space in 2019 when he learned about the uranium industry. Since then, he's gained an interest in precious metals, agriculture, oil and gas, and all the other vital resources that allow our civilization to advance. Jesse, please go ahead.
Hello, everybody. My name is Jesse Day, the host of Commodity Culture. Thanks so much to RedChip for putting this conference on. Greetings from Novi Sad, Serbia. I want to talk to you today about separating signal from noise in the uranium market. And I want to start with this chart. This is the year-to-date chart of the Sprott Uranium Miners ETF. I think it's one of the best proxies for the uranium sector as a whole. We can see when the DeepSeek chatbot launched near the start of the year, a flash crash in uranium stocks and a continued downtrend before recovering and breaking out to where it is today. Now, anybody who realized that DeepSeek has nothing to do with uranium, and in fact, AI has nothing to do with uranium, and took advantage of this as a buying opportunity, would have been a very profitable situation. And I want to point this out because I believe we could see a larger bursting of the AI bubble with companies such as NVIDIA and other members of the Mag 7 largely held up by hopes that the AI revolution is going to be incredibly profitable in the future. I think that potentially may not pan out. And if we do see a big correction or even a crash in the broad market, I think uranium would sell off even more significantly than it did here. And once again, for those who understand the underlying fundamentals of the sector, it would be an even more tremendous buying opportunity than was afforded here. So let's talk about noise in the uranium space. The first noise is the spot price. This is contentious. Some might disagree with me because it is the price that investors most look at because it is the most frequently updated. However, on a good year, it accounts for 25% of all transacted volumes on an annual basis. So it doesn't make sense to pay that much attention to it. It's also thinly traded. It's an illiquid market. It's largely traders flipping pounds to make a few bucks a pound. It is not where you should be looking to understand the underlying value of a pound of uranium. However, it can drive short-term sentiment because as I mentioned, it's what investors look at. And so if the spot price is dropping, it can cause a sell-off in equities. And once again, if you recognize that the underlying fundamentals are still very strong, then in my opinion, you could comfortably buy in that situation, knowing that eventually in the short term, the market is a voting machine. In the long term, it's a weighing machine. AI data center build-outs, like I said, this is not something that uranium will be a beneficiary of. Nuclear energy is not being used to power data centers outside of a few corner cases. Amazon connecting a data center to a reactor in Pennsylvania. Microsoft announcing they're restarting a reactor at 3 Mile Island that will be used to power data centers. But by and large, natural gas is going to be the commodity that is most used to power these data centers. Now, a lot of people talk about SMRs, small modular reactors. Well, we can set up AI data centers and they can have SMRs, and that would be perfect. That would be perfect, but we're not in a world where small modular reactors are close to large-scale commercial adoption and rollout. Now, some might argue with me there, but even if you do believe that SMRs are coming quickly and are going to be used to power AI and other things, it's just the cherry on top of the icing on top of the sundae. Uranium demand from SMRs is not going to be a part, in my opinion, of the supply-demand fundamentals. It is an interesting thing to watch. It's a promising technology, but we don't need it for the uranium price to go much higher from here. The green energy transition. Now at COP28 in December of 2023, 22 nations committed to tripling nuclear capacity by 2050. The number of those countries who have signed on is now up to 35, I believe. This doesn't mean much because those politicians will all be out of office by the time 2050 rolls around. And so they're jumping on this pledge to make a show of it like they always do. We support green energy. It doesn't really matter in the long run. And in fact, the green energy transition is starting to wane a little bit, in my view, as reality sets in, that wind and solar can't really do it, which is one of the things that has led nuclear to be one of the standouts amongst that crowd. And what that has done is allowed for wider acceptance of nuclear energy by the public and by the political class. I think that's a positive thing, but I think you can mostly ignore any narrative related to the energy transition. It's not important. Let's talk about the signal, the things we should be paying attention to. The term price, the long-term contract price, accounts for the vast majority of uranium that is sold each year. It's a much better barometer from which to value uranium. It has its own issues, which I'm going to talk about in a moment. The supply deficit is the signal. The The uranium market has been in supply deficit for several years. We're going to talk about that. Production shortfalls, everybody from the big producers down to developers ramping into production are facing challenges. And of course, reactor buildouts and extensions. There's a lot of reactors being built, being planned. There's extensions that are happening. These are all important to be paying attention to when it comes to the demand side. Let's talk about the spot price versus the term price for a moment. The term price is the dark blue line here, going back to the beginning of 2020 until today. We can see it has been a slow and steady rise with very little volatility, no dips, just a smooth upward journey. By contrast, when we look at the term price, we can see it fluctuates, sometimes overshooting, sometimes undershooting. And so the term price is a much more accurate barometer, especially when we consider it accounts for 75 to 91% of annual deliveries of uranium. Now, the term price has its own issues because many, if not the vast majority, of long-term contracts for the sale and purchase of uranium have non-disclosure agreements attached to them. And so we don't even know the prices at which they're being transacted. So even the term price is somewhat of a best guess. And uranium's unique in the fact that the pricing mechanism is essentially broken, which means it's much more important to pay attention to the underlying fundamentals as it is to even the term price, although it's a much more accurate barometer, as I mentioned, than the spot price. Supply deficit, the cumulative deficit from 2021 to 2025 stands at approximately 185 million pounds. The uranium market, from a mined production standpoint, has been in deficit for longer than that. However, post-Fukushima disaster, when Japan shut down all its nukes and many countries then condemned nuclear energy and shut their own nukes down, there was large inventory overhangs that subsisted, which is what kept the price so low for so long following Fukushima. Also, there was the megatons to megawatts programs where Russia from 1993 to 2013, I believe, decommissioned a lot of nuclear warheads and used that material to power nuclear reactors. So that was a big surplus of supply that has largely been eaten through. And with the current demand, along with things like the Sprott Physical Uranium Trust, which is buying pounds on the spot market and taking it off the market so that utilities cannot access them, is also putting a squeeze on supplies that is very significant. Production shortfalls. Kazatomprom, which historically produces around 40% of the world's uranium, has slashed production guidance, citing sulfuric acid shortages, which are needed for their in situ recovery mining operations. And there's potentially several other problems going on at Kazatomprom as well. They're a state-run enterprise. It's been a revolving door of management. We don't know exactly what's going on, but they've cut production guidance, and that's a big deal. Cameco has cut production guidance. The other giant operating out of Canada, they have hinted that they will need to go to the spot market to purchase pounds to fulfill long-term contracts. These two giants facing these issues is massive. We're also seeing developers moving to production-facing challenges. Everything from a coup in Niger to Boss Energy in Australia having difficulties, Encore Energy in the United States. The list goes on. Companies are having problems finding personnel who are trained up in uranium mining and the nuclear industry. And so that is a persistent challenge. Where are these pounds going to come from? The price has to go up, and it has to go up a lot higher from here, in my opinion. Reactor buildouts. There's approximately 70 reactors under construction and 110 planned. China has announced plans to build 150 new reactors by 2035. This is a massive difference to, political so-called leaders at COP28 saying, we're going to triple nuclear capacity by 2050. What does that mean? What does that even look like? China's saying, no, guys, we're moving forward. We're building 150 new reactors, and we're getting down to work, and that is what they're doing. I hope this has provided you a good overview of separating the signal from the noise in the uranium market. My channel is Commodity Culture. You can find me on YouTube. You can find me on X, my website, and please feel free to send me an email if you'd like to discuss the uranium market or anything else. Thank you so much, and enjoy the rest of the conference.
Thank you very much for that excellent presentation, Jesse. Now, let us hear from leaders and CEOs in the critical minerals space. Our first company today is The Metals Company, ticker TMC on the NASDAQ. Presenting today will be Craig Shesky, the CFO. We will begin with Craig's presentation in just a moment, and then we'll open the event to your questions. I will keep everyone's lines muted throughout this presentation. To submit a question, please click the Q&A button at the bottom of your Zoom window and type in your question. Now, before we begin, please allow me to briefly read the Safe Harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1999. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Craig, please go ahead.
Hey, thanks. It's a pleasure to be here. I'm not sure if anybody can actually see my video. It looks blacked out on mine. Might be having a little technical difficulty, but happy to proceed and share my screen and go through some of these slides. But yeah, we are at the Metals Company developing the world's largest estimated resource of metals for energy, infrastructure, manufacturing, and defense. And these metals are in the form of polymetallic nodules. These polymetallic nodules lay unattached on top of the seafloor in an area of the planet known as the Clarion-Clipperton Zone. They are beneath 4,000 meters of water. They are between Mexico and Hawaii, and this particular patch is of main commercial interest given the fact that these nodules occur in very high abundance here. There's also a very high grade of nickel.
Hey,
copper.
Craig. Hi,
Yeah.
Craig. Sorry to interrupt, Craig. This is Craig. We need to see your deck. Is it possible for you to use the share screen function and show us your deck?
Yes, absolutely. Was just going
Okay.
to do so. Give me one moment, please.
Mm-hmm.
There we are. Can you see the deck?
Perfect. Yes, Craig, we see it now. Thank you very much.
No problem. And apologies, I'm not sure why my video's not working, but the deck is most important regardless. So at TMC, we are pursuing this nodule resource for many reasons. As I noted, they're polymetallic. That means multiple metals. These nodules contain high concentrations of nickel, copper, cobalt, and manganese. They're far offshore. They're very deep, and they're not in anybody's backyard. And that's important because the deeper you go in the ocean, the less life you find. In fact, there have been some pretty major discoveries on the relatively minor impacts of polymetallic nodule collection, even relative to what we had expected when we started on this journey about 15 years ago. And you may have seen very recently a New York Times article to that effect on some of the biodiversity impacts and why TMC's transparent approach has been leading this industry forward. Now, importantly, these nodules are not buried, so they can be collected as opposed to mined. It's more like picking up golf balls on a driving range than traditional land-based mining. There is no digging, there's no blasting, there is no tailings, and there's nearly zero solid waste. So this is really a great way to get the metals necessary for U.S. defense infrastructure manufacturing needs. And it's very critical to do so. I mean, I think all of us on this call would recognize that China has a very large lead in some of the critical metals, whether it's transition metals, whether it's rare earths. And what TMC can provide is a resource that can really provide resiliency for the United States supply chain. For example, nickel, cobalt, manganese, nearly 100% of these metals are imported today. There's one operating nickel and cobalt mine in the United States. That is the Eagle Mine in northern Michigan. And even that's going to be running out of ore in a couple of years' time. So what TMC can provide through our SEC compliant resource statements is a resource of over 1 billion tons of nodules. And that would represent approximately 330 years of manganese based on current US consumption, 210 years of cobalt, and nearly 100 years of nickel. So this is something where it's not a marginal solution. This is the type of solution that can truly change the game for the United States. Now, why TMC? Well, here's a few snippets on the company. We have been around for 15 years. This isn't something where, because there is a clear permitting path, and more on that in a minute, we are just jumping in head first. And there are some companies that are seeing open permitting in the United States and trying to take advantage of that. TMC has been on this path, developing this resource for a very long time. We were established in 2011. We've established probable reserves. We have a pre-feasibility study. We also have onshore and offshore partnerships, which have allowed us to develop this resource in a very capital light way. Still, we have raised nearly 700 million at this point, and a lot of it's come from very strategic blue chip investors, including Korea Zinc and our partner Allseas. But really focusing on the resource is what I'd like to do today. This resource is 1.3% nickel, 1.1% copper, 0.2% cobalt, and nearly 30% manganese. So if you were to roll all of that into nickel equivalents, it will be over 3%. That would be a higher nickel grade than nearly any other resource on the planet, approximately 10 times higher grade than many of the competing projects in Canada or Australia. If you were to roll it into copper equivalents, the equivalent grade would be about 7%. And the average copper mine last year in the world graded just around 0.5 or 0.6%. So you get a sense of just how big and high grade this resource is, and that allows us to collect it in a very economic way, and it also mitigates many of the environmental impacts. You just have to move a lot less material to get the same amount of metal. We are led by a very experienced team, and I think this is one of the proudest elements of our story. It's been a very difficult run as a public company since we de-SPACed in 2021. Of course, it's been difficult for many former SPACs. None of our team has left in what has been a very difficult environment. In fact, we continue to add, both on our leadership team and our board, established leaders in multiple industries, including Steve Jurvetson, who was on the Tesla board for over a decade, currently on the SpaceX board. We have Michael Hess, who joined our board after investing in a registered direct offering in April this year. And our team, onshore and offshore, really comes from some of the largest resource companies in the world, whether that's Allseas, Rio Tinto, Bechtel, or BHP. So the fact that we're pushing this forward with a very established team, I think shows the belief that we and our key shareholders, including many of our retail shareholders, and I know some of them are listening today, who have been with us on this journey. And I think now people are seeing it starting to pay off for a few different reasons that I'll dive into just now. So we have achieved many milestones since inception in 2011. We've been ranked by mining.com as the largest and second largest nickel project on the planet. We have a net present value of nearly 24 billion based on SEC compliant technical reports, a pre-feasibility study, and an initial assessment over the rest of our resource. We've collected nodules at scale. I'll play a quick video in a few minutes showing you what that looks like. And we've also measured environmental impacts, both on a relative basis, doing life cycle assessments, showing that these nodules can reduce some of the worst impacts of land-based mining, including carbon emissions, tailings, and solid waste. But we've spent about $250 million on our environmental research program. And it's that research that is giving us the confidence, and we believe our regulator the confidence, to get us permitted so we can begin production in the fourth quarter of 2027. Now, TMC is the first applicant in the United States to launch an application for commercial recovery permit. That would be the permit that would allow us to go into production at the end of 2027. We've also applied for 2 exploration licenses over areas that we've known and have studied for over a decade. Now, taking a step back, looking at the critical mineral space, it's no secret to anybody that there's been quite a bit of focus from the US government on funding resiliency and supply chain, whether it's rare earths, whether it's base metals, whether it's uranium. TMC is developing a resource, again, that could solve nickel, manganese, and cobalt in one fell swoop. You may have seen yesterday, there was a Bloomberg article as well, that there is possibly going to be an increased allocation to the Development Finance Corp, who has been working alongside Orion Resource Partners to find equity and debt investments in the critical mineral space. There was also a Berkshire Hathaway representative who works closely with Warren Buffett, who just joined JP Morgan to help them implement their 1.5 trillion with a T pledge to bolster national security. And the first thing that Jamie Dimon mentioned in that initiative was bolstering critical minerals. So it's hard to predict anything in terms of timing. There's no particular headline I can point to other than we are talking to all of the agencies that you would expect us to. And many of these agencies named on this page were directed in an executive order from President Trump in April to focus on critical minerals laying on the seafloor. And that's because this executive order from April not just directed the Commerce Department to expedite permitting for this space, but it also directed the Department of War, the Department of Energy to explore other types of support, whether it's stockpiling or offtake agreements, and then direct investment potentially from the DFC or Exim Bank. So we anticipate that these conversations are going to continue. I know a lot of people are focused on them. I'm actually in DC as we speak. But obviously, too, we want to make sure that we are pushing this resource forward in a way that is beneficial, not just for the environment, but for our shareholders. And we do anticipate that these conversations will go on. And I also recognize that many of the names on this page are getting new appropriations from Congress and are looking to spend it in ways that can truly move the needle for U.S. resources. So we continue to be very bullish on where this industry is headed based on significant support from the U.S. government. Now, in terms of permitting, well, the United States put in place a permitting regime back in the 1980s prior to the United Nations ever implementing the International Seabed Authority. So back in the 1970s, there were companies like Lockheed Martin, BHP, BP, Shell, Kennecott, U.S. Steel. They were out in this area of the Pacific known as the Clarion-Clipperton Zone, collecting nodules at scale, thousands of tons of these nodules. But the United Nations stepped in, and the UN and the countries of the UN determined, hey, we need to come up with a framework to allow clean legal title for this resource. So the UN came up with the UN Convention of the Law of the Sea in 1982, which established familiar boundaries within 200 miles of a country's coast. It's their territorial waters. Anything beyond that is international waters. And nearly 170 nations signed up to this United Nations construct. The one holdout was the United States. Back in the Carter administration and then through the Reagan administration, the Bush administrations, Clinton, Obama, Biden, Trump, this has always been the US position that they did not want to give up US sovereign rights to regulate seabed mining in international waters. So rather than sign up to this UN construct, the US put in place their own regulations to allow this deep sea mining to continue. In fact, they started granting exploration contracts in the 1980s. NOAA, the National Oceanic and Atmospheric Administration, put in place regulations to allow commercial recovery in 1989. So this is a well-established legal precedent that gives companies like TMC, any US entity, frankly, that wants to apply, the potential to not just explore for, but commercially recover polymetallic nodules and other resources. Now, there has been, I think, a lot of conversation. I'm happy to answer some questions on these points. A lot of conversations about what the U.S. Actions in this space mean for international law. Well, it's quite clear that treaties don't apply to countries that never agree to them. The U.S. position on this issue has never changed. The U.S. maintains high sea freedoms, just like the U.S. allows its companies to lay cables in the deep ocean, just like the U.S. allows tuna fishing boats to extract their resources in international waters too. This is something that the U.S. has every right to regulate. And in fact, they put in place the rules to regulate this industry prior to the UN ever putting in place the International Seabed Authority. So we are now moving systematically through a very transparent and enforceable process with NOAA. NOAA was actually one of the pioneering deep sea research agencies. In fact, they did a study in the 1970s and 80s of a programmatic environmental impact statement over the Clarion-Clipperton Zone in the Pacific and beyond. Bottom line, NOAA's conclusions were reported to the US Senate in 1995, and their conclusions were that the environmental impacts of deep sea nodule collection were manageable, and the US should push forward with this industry. So NOAA knows this resource very well. This isn't something where there's an executive order that is forcing anybody to necessarily, skip over steps or rubber stamp anything. We're going through every step of the NOAA process. Now, there has been, through the executive order, a streamlining of this process. In fact, NOAA reportedly in late October presented to the White House rules that would consolidate the application process for both exploration licenses and commercial recovery permits. Bottom line, we anticipate getting our permit in 2027, and that will put us in production in the fourth quarter of 27. And we can move fast like that because we already have the first production vessel provided to us by our partner Allseas. Allseas is a 15% shareholder in TMC, and that's the vessel, the hidden gem, owned by Allseas, that collected about 3,000 tons of nodules and lifted them to the surface in late 2022. So this is a proven resource with proven technology behind it. We also have support onshore for partners from partners like Pacific Metals and Korea Zinc, the largest non-ferrous smelting company in the world. Korea Zinc invested 85 million in TMC back in June. And I think this just shows a lot of other companies and countries around the world are seeing the US as a place that wants to accelerate critical mineral supply chains. And folks like Korea Zinc see TMC as a great feedstock to potentially supply some of those ambitions. So we are exploring ways to continue to work together with our partner Korea Zinc and others. But one of the great things about this resource is that it does have a proven processing flow sheet onshore. And in fact, we were able to process about 2,000 tons of nodules that we had collected in 2022 at our partner Pacific Metals in Japan, turning these nodules into high value intermediate products like nickel, copper, cobalt alloy. So bottom line, we are de-risked offshore. We feel we're de-risked onshore when it comes to the technology development. So far, TMC has delivered really many of the world's firsts within the space, and that includes the resource itself. We were the first to have SEC compliant resource statements and also now a pre-feasibility study for a nodule resource. And in fact, in August, we put out a pre-feasibility study that declared probable reserves showing commercial viability. So much of what we've been demonstrating has, again, been based on the prowess of many of our partners, but also TMC's internal team that has really pushed the ball forward on nodule collection and processing. Now I'm going to play just a quick video. I should be sharing my sound, but let me just stop sharing and reshare to ensure that everybody can hear the video. This will just play for about 1 minute, and it'll give you a sense of what nodule collection looks like 4 kilometers below the ocean surface. Well, I apologize. It looks like the video is disabled here. But bottom line, the nodules have been collected at scale. We, again, lifted about 3,000 tons of these nodules to the surface in late 2022. And we've also demonstrated that we can turn these nodules into valuable products such as alloy, matte, and even take it further to sulfate materials. In fact, we were able to produce manganese sulfate from these nodules earlier this year. This is important too because you look at a lot of automakers, GM, Ford, have been talking with LG Energy Solutions, for example, about producing LMR batteries, lithium manganese rich. So that would use quite a bit of manganese. It would use quite a bit of nickel as well in the cathode. So there's a lot of talk of LFP batteries. There's a lot of talk of nickel manganese cobalt batteries. Where does that mix end up? I think the nodules have such a attractive mix of these 4 metals. TMC is well hedged through this basket of commodities, really in any scenario. And keep in mind for nickel, that's an environment where the demand is still growing for stainless steel, which is about 2/3 of the nickel market. That demand's growing by about 5% per annum. So we expect you're going to see some emerging deficits in the nickel market in the coming years. So it's less about electric vehicle demand. That's certainly part of it, but it's really necessary for aerospace, defense, and infrastructure for the United States. I did mention, and I'll end on these last few slides, we put out 2 economic studies in August of this year, showing a net present value of the resource of about 5.5 billion for our first block, what we call NORI-D, and then the rest of the resource, 18 billion through an initial assessment. So combined NPV of $23.6 billion, 50 million of probable reserves, and a low first quartile position on the cost curve. Now that's counterintuitive to some people, given the fact that you are collecting this resource at depth. But the fact that you have over 50% of your revenue coming from byproduct credits, that puts us in a position where we can operate in the lowest end of the cost curve in really any commodity price environment, because we'd get approximately 45% of our revenue from nickel. We'd be getting about 55% from the other byproduct credits. So that's why we're able to operate in nearly any commodity price environment. This is where our resource is between Mexico and Hawaii. This dark blue block is NORI-D. That is what's covered by our PFS. And the medium blue areas are covered by our initial assessment. So we would be getting approximately $600 in revenue per ton at steady state production from 2031 through 2043. And that would put us in steady state EBITDA margins of about 43%. So very attractive margins for this resource. And again, we'd be looking at approximately life of mine, about 369 billion in revenue over the life of these projects in total, and about 200 billion of EBITDA. And yet, when you look at where TMC is trading relative to peers, if you're putting, let's say, a 60% multiple on our pre-feasibility study net present value and a 35% multiple on our initial assessment. That would suggest a 10 billion market value. We're still trading at a small fraction of that. In fact, our peers, nickel and copper developers yet to be in production, on average trade at about 43% of their net asset value. And then, of course, as one approaches production, you can trade at 100% of NAV or higher. So we see a path for the stock to continue to perform very well, as we are sitting really in the eye of the storm when it comes from what the US needs to do to diversify supply chains for these metals away from China. We can supply about 300 years of manganese, 200 years of cobalt, 100 years of nickel, and truly bring mineral independence to the United States. So with that, I'm happy to stop and answer some questions.
Thank you very much, Craig. Press the Q&A button and type in your question. Now, as we can only take your written in questions today, we ask that you not use that raise hand button at the bottom of your Zoom window. Craig, we've already received several great questions for you here. TMC has more than $160 million in liquidity and no near-term need to access capital markets, this person writes. Given the scale of the planned offshore and onshore systems, how do you envision sequencing capital deployment between engineering, environmental work, and commercial readiness? And he also asks, what are the signposts investors should track to assess whether TMC can execute its capital-light strategy without dilutive financing?
Yeah, that's a great question. And certainly it's the type of question I'd be asking too in my former career as a resource investor. Trying to get a project off the ground is always a challenge when it comes to capital, particularly in metal projects like nickel or copper, where the average project takes 15 to 20 years to go from discovery to production. So for this resource, the reason we have and continue to pursue this capital light strategy is because we don't have to build out the infrastructure that many other land-based resources would have to. Typically, you would have to build processing or refining close to where the ore body is, and that usually involves the construction of power plants, railroads, water supply. We have the unique ability to take the resource from the seafloor, lift it 4 kilometers to the surface, and then find partnerships and find existing facilities to do that processing and refining. Now, we do have ambitions, as we showed in our pre-feasibility study, to build out some refining capacity in the United States. Most of that spending would be in the 2030s and beyond. But I think the flexibility of this resource is what really stands out. So with about 160 million of liquidity, some of the milestones and the prioritization, as the question was posed, I would say people should be tracking where we are on our permitting process with NOAA. We anticipate in the coming months to have this application on the federal registry, and people will be able to see signposts of our progress as we progress towards a commercial recovery permit. So it's not just going to be any sort of black box. There will be updates on the commercial recovery permit process. As we approach commercial readiness, I would focus on partnerships. So I would focus on what we're doing with Allseas to get the hidden gem ready for commercial production, modifying that vessel to go up to 3 million tons per year for nodules. And the way we would be able to do that is adding a second collector vehicle, putting in a wider riser pipe, putting in a more powerful compressor spread. So as we are getting closer to the permit, I anticipate that you would see the valuation of our company start to increase as we are getting closer to that certainty and closer to commercial production. But we are not going to be in a position where we're going to, go tap the public equity markets or, try to do any sort of capital raise until we are exploring what I think is a very interesting opportunity in the United States for public-private partnerships. So there is no imminent need for us to raise funds. We have very sufficient liquidity. And the question would be between us and Allseas, at what point are we going to be hitting go on spending for some of our longer lead time items? So there will be a point sometime earlier in 2026 where we might start spending some portion of that existing liquidity alongside our partner Allseas. But thankfully, we have quite a bit of flexibility to do that based on our current balance sheet. So no, I wouldn't think there's anything imminent to expect in terms of capital raise. We do, of course, have an ATM facility, and we have a S3 shelf registration statement. And as a matter of good corporate housekeeping, we will continue to keep those active and refreshed. But bottom line, we feel very good about where we are from a capital position.
Next question, Craig. How should investors think about the critical inflection points that remain between today and a commercial recovery permit, and what aspects of the consolidated permitting approach, if adopted, could materially accelerate the development timeline?
I think right now the development timeline is mainly based on the modifications that we in Allseas will be making to our vessel. So there are potential streamline options on the consolidated permitting process with NOAA, where let's say certain elements where the statute says you may take up to 180 days to review an environmental impact statement, perhaps that's something that can be compressed. And in fact, the Trump executive order from April directed NOAA and the Commerce Department to do just that, to think about where they can streamline elements of the process. But it's very important that we don't skip over any steps. We want to make sure that as the permit is granted, this is a resource that can be in production for decades. Not something where we would want to worry that, upon some future administration, it can be easily challenged in the courts because steps were jumped over. So that's why we are going through this in a very measured approach with our regulator NOAA. But we do see some areas where we might be able to accelerate certain elements of the process.
Craig, with the world's largest deep sea environmental data set, do you see the data advantage translating directly into permitting speed, lower future costs, or strategic leverage in potential partnerships?
That's another great question. I think there is some strategic advantage. If you talk to any of our competitors, and frankly, if you talk to some of the I would say adversaries who don't want this industry to go forward, I think most people would admit that the transparent way in which we've collected and also shared some of that data, particularly on biodiversity, it's hard to really it's hard to not give us credit for all of that work that's been going on, not just with TMC's scientists, but with many of the partnering research institutions. So I think the way that can be a strategic advantage is, yes, it can be attractive to use that data set with other potential partners, whether that's offshore or potentially other areas even outside the Clarion-Clipperton Zone. I think more likely I would look at that data set as building confidence, where when TMC gets the first commercial recovery permit and we start production in that first area, the data set we've collected is only going to go up exponentially as we're able to monitor our production in real time through an EMMP, Environmental Monitoring and Mitigation Program. So we're going to use that data set to then help build confidence to get the next area permitted, and the next after that. So you'll get this flywheel effect where the environmental data is going to build confidence, not just with the regulator, but with stakeholders around the world. And that'll make the next blocks quite easy, in our view, to get into production in due course.
Craig, we're rapidly approaching the bottom of the hour. If you could quickly answer this final question: what remaining engineering or operational risks do you consider most critical to address before commercial operations begin, and which elements of the collection or riser system are likely to see the most refinement during upcoming test programs?
Another very good question. I think the refinement is going to focus really on three areas. It'll be on the compressor spread, it'll be on the riser pipe itself, but really the collector itself. That is a very important piece of machinery that was designed by our partner Allseas. One of the key designers of it, Rutger Bosland, he is now working for TMC. So we have a lot of that important engineering prowess now on our team. But again, we continue to work hand in glove with Allseas. So I think building that second collector and improving the efficiency of the collector is where we can focus. We already assume in our pre-feasibility study that we're picking up less than half of the nodules that are known to be in our first production area. So there is an opportunity to increase the production rate and actually increase the efficiency of the system such that we leave fewer nodules behind. Now, there will be an amount of nodules that we, along with our scientific partners, have decided we want to leave behind to ensure that they can stay as an ecosystem for some of the limited organisms that are existing at that seafloor. But we anticipate collection to increase after we start commercial operations.
Perfect, Craig. Thank you very much.
Thank
For
you.
more info, yeah, thank you. Excellent presentation, excellent answers to those questions. For more information on the Metals Company, reach us at 1-800-REDCHIP or email us at tmc@redchip.com. If you didn't have your question answered today, just email it to us at tmc@redchip.com. We'll make sure that Craig sees it. Our next presenter will be Rita Adiani of Titan Mining Corporation. She'll begin speaking in 15 seconds at the bottom of the hour. Our next company, as I said, is Titan Mining Corporation, ticker TII on the New York Stock Exchange American. Presenting today will be Rita Adiani, the President and CEO of Titan. We will begin with a brief presentation in a moment, and then we'll open this event to your questions. I will keep everyone's lines muted throughout the presentation. To submit a question, please click the Q&A button at the bottom of the Zoom window and type in your question. Before we begin, please allow me to read the Safe Harbor Statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Rita, please go ahead.
Thank you for having us here. This is it's a very exciting time to be here. Titan Mining is a dual-listed company. We do have a Toronto Stock Exchange listing, which is TSXTI, but as provided in the preface here in the introduction, we are also listed on NYSE American, and the ticker is TII. If we can move on to the investment highlights. Titan Mining is a unique company in the sense that we have operating cash flow. We have now been in production for 7 years as a zinc mining company. We purchased the asset out of bankruptcy, put it back into production, and have doubled, in fact, taken production up 2.5x since we actually put the mine back into production. We have a very strong operating base in upstate New York, which has some fantastic infrastructure. We have a full-scale processing facility. As of today, we employ 165 employees on site, most of whom are residents of upstate New York. And we do have one of the largest mineral rights holdings also in upstate New York, which is about 120,000 acres of mineral rights. So we've established a very, very solid operating base, and we've been operating now for 7 years. And about 3 years ago, we came across traces of natural flake graphite on our property. And the unique thing about graphite is that the United States imports 100% of its graphite requirements, with about 42% being from China. So we see this as a very, very unique opportunity to be able to onshore critical materials, which is obviously the subject of the webinar today, but be able to do it very quickly and to be able to do it very efficiently, both from a capital standpoint and from an operational standpoint. To be able to begin qualification of our material, because graphite obviously requires a spec-based contract. So we are able to supply the material to potential customers. They qualify it, they provide us with contracts. We have already put in place a production facility, which is about 5% of the commercial facility which we're looking to build out. That production facility commences production. We've already begun ore processing, and that the production will commence in the next couple of weeks, which will make us the first end-to-end natural graphite producer since 1976. And we're now looking to ramp this up to about 40,000 metric tons per annum, which will be about 50% of the domestic natural flake graphite market. We see a very, very significant life ahead for the operation. We've outlined an initial 13-year life, but we see this as, a 15 to 20-year operation in the years to come ahead. A little bit of background about the group. We are part of a wider group of companies called the Augusta Group, which has really had some fantastic successes in the mining sector, and that has involved, being very, very technically thorough with the identification of mining assets, the development of mining assets, and some of the numbers here on the page give you an idea of our thinking, management's thinking of how we look to develop these assets, which really is we look at capital efficiency, we look at time to market, and we also look at scale. And Titan and Kilbourne, the graphite project that we have here today, does meet all three of them. So we're very excited to now be at an inflection point and obviously creating significant value for shareholders as we move ahead. The leadership team comprises of some very well-known and very well-known stewards from the Republican side, which has been Governor George Pataki, Speaker John Boehner, and then we also have Bill Mulrow, who was Andrew Cuomo's chief of staff. So we're very well represented on both sides of the aisle. And the group has significant amount of operating experience. We're largely based out of New York State. That is myself, the VP of Operations, the VP of Commercial and Sales, and supported by a team in Canada as well. So this is, one of the very exciting things that we've been able to accomplish this year is bring on board some very strong strategic federal support, funding support for the project. We became the United States EXIM's first ever mining transaction. So they are a direct lender to the operation. And the only reason, and I think that, the engagement has really been driven by the fact that we have an existing operation. We have 160 plus employees at site. We generate cash flows. So they see that as a very strong foundation. And it really forms a great base to take forward the graphite project, for which they've already indicated about $120 million in non-dilutive financing support. They are also financing the feasibility study for the graphite project, which we'll come to talk about a little bit more. So what this whole funding package really does is outline Titan and Empire State Mines' very critical importance really to mining in the United States. And we truly believe that, having an existing operation, having very early federal support is going to help us be one of the first movers in the graphite space, which is a very critical material, not only for defense purposes, but also for, long-term energy transition, which we're all aware comprises of batteries. Okay, a little bit about graphite. Graphite has various applications. One of the biggest applications of graphite tends to be on the anode side for lithium-ion batteries. As we know, a significant part of the world, or uses, are transitioning to battery, which includes energy storage, obviously electric vehicles. Military uses of graphite range from coatings which are needed for nozzles for the rockets to coatings which are needed for artillery. Graphite has some great thermal management properties, which really allows it to be used in decent quantities for the purposes of military applications, which is really where our end use case is focused on. And you can see on that chart there, where graphite actually sits as a very critical material. Um, as mentioned earlier, China really dominates graphite mining, graphite processing, and obviously instituted export controls on it not too long ago and has relaxed it temporarily. So all of this to really say that, graphite is very high up on the US government's list for valid reasons, and more for national security reasons and supply chain resilience more so than anything else. I think we put out some initial economics around our graphite project, which really demonstrates the robustness of the project, the long mine life of the project, which is initially 13 years, as I mentioned, with a significant upside on exploration, on development coming forward after that. We're looking to process about 40,000 tons annually, which we believe is going to be covered by US customers, largely in the defense space and longer term in the energy storage space. So we believe that there is a core use for our material. The after-tax NPV of the project alone is about $513 million with an after-tax IRR of about 37%, with a very quick payback of 2.7 years. The initial capex on the project is close to $160 million. As indicated earlier, we already have an indication of non-dilutive financing for about $120 million from United States Exim. And so together with existing cash flow, we believe that we can actually finance this project in a very, very capital efficient way and in a very minimally dilutive way for shareholders, whilst creating a significant amount of value and being able to generate, close to about $140 million in annual EBITDA from this project alone. Some of the core uses that I addressed earlier are really expected to be on the defense side and longer term on the energy storage side. We've positioned ourselves to be and our production capacity to largely gear to customers who need the product today, who face supply chain risks from China and potentially from other countries. But our goal is really to begin, supplies on the graphite industrial and defense side, really within the next 24 months or so. The project has significant amount of upside as we look towards, more protective pricing mechanisms potentially, which may come into play in the United States. Being a domestic producer, they haven't been factored into the project economics. The economics are using current landed prices for graphite. And so just on a standalone basis, we see, significant amount of upside really just coming from pricing in the shorter term. I think we can skip forward to the EBITDA page, where we can actually see the zinc business today. We produce about $25 million of EBITDA, together with the graphite business, which at steady state would be running at about $125 million of EBITDA. This project, has the ability to provide a very, very valuable uplift to the company, to the shareholders. And as I said before, it's a very capital efficient project with the ability to finance a significant part of it through long-term non-dilutive financing. The financing being provided by Exim is a 12-year loan with 10 years repayment, 2 years interest only, at a cost which is, sort of very much linked to treasuries. So we see this project really being able to change the scale and the trajectory of the company in a very short period. From a catalyst perspective, we have completed our initial technical work in 2025. We put up our demonstration facility, all funded from internal resources, and obviously are looking towards starting up production. And this will take us into 2026, where we're looking to complete our feasibility study, which, as I mentioned earlier, is partially financed by US Exim, complete our debt work streams, which will largely rely on information from the feasibility study. During 2026, we also expect to enter into offtake agreements with potential customers so that we have a committed amount of product for the commercial facility. And as we move into 2027, we look to finish our permitting and begin construction with the goal of production commencing in 2028. So really, as we stand out from here onto the next 24 months or the next 36 months, the company is really going to see a very, very significant change, and be able to create a significant amount of value for shareholders as we move forward. Okay, I think we can probably stop there.
Thank you, Rita. We are now going to take those questions. Press the Q&A button and type in your question. We can only take your written questions today, everyone, so please don't use that raise hand button. Got a question here, Rita. With China, as you mentioned, controlling around 90% of processing and new U.S. projects at their earlier stages, Titan appears first in line to supply the domestic market. Which competitors or technologies do you see as the most credible challengers in the next 3 to 5 years?
So with respect to US competitors, there are a few other mining projects which are in development. There is one up in Alaska, one in Alabama. There are other opportunities and developers effectively in Alabama as well, for natural flake graphite. But really, I think the advantage which we have is speed and being the first mover, given that we are an existing site, and being able to fast track this largely because we have put up a production facility already. So it's a case of us scaling up. And then finally, being able to have designed a project which is really very capital efficient. So whilst we see competitors out there, and we're very aware of who is doing what, I think our focus really remains on moving this project as quickly as possible into production. And the fact that we discovered the deposit about 3 years ago and have already started processing should be, proof and evidence that we have the ability to make it to market first.
Another question about China, Rita. Given China's dominance, how does Titan's position as the only U.S. natural graphite producer reshape America's critical mineral supply chain? Could you reiterate that, please?
That's a very good question. Obviously, China controls 80% of, approximately 80% of graphite mining, and it controls about 90% of graphite processing. And being able to stand up a facility and be able to begin production, I think gives us a very, very significant advantage to our customers to be able to not only have a viable domestic alternative, which they don't have at the moment, but also be able to rely on, end-to-end production from the United States. A number of processors in the United States are currently relying on Chinese feed material, which really then they process and then they sell to customers in the United States. So being able to break that chain of, going from mining all the way up to, down to processing and refining for some of the defense-based materials, I think puts us in a very unique position.
Exim's support is unprecedented for a U.S. graphite project. What does this signal about Titan's strategic importance, and how does this partnership de-risk both financing and project delivery?
So I think we've been very, very fortunate to have Exim's partnership early on. As I mentioned, we became one of their first ever mining deals, and they're an existing lender to the business, which really started off with the zinc facility, but their focus has largely been on the graphite side. And being able to have Exim involved earlier on has really given us the confidence that there is long-term capital available. So as I mentioned, it's a 12-year facility, and therefore being able to, you know, be able to see forward and say that we have a partner for the long term will really help us de-risk not only the financing side, but also the operational side of the business. So I think it has been absolutely, crucial to its getting to this stage, and having Exim's partnership as part of it.
Now, graphite demand is projected to surge with energy storage and defense needs. How does Titan plan to capture premium markets, and what pricing or margin advantages do you see?
So the way we look at the market is really twofold. Upfront and going into production, really within the next 24 to 36 months, our focus is the industrial sector and the defense sector. And there we see the ability to effectively bank on customers who have to source domestically, one for national security reasons, and secondly, obviously they're getting, their supply chains turned off and on due to China, which they don't really want to rely on. So from a pricing perspective, what we really want to be is we want to be competitive. There will always be a price differential between producing in the United States and China, and I think our customers are very aware of that. But in the initial feedback which we've received, we don't see any major pushback towards a modest premium on US sourced, US processed, US refined material. And as we move into the latter years of our business plan and we transition into battery segments, that's where we actually begin to see, pretty robust pricing power, let's put it that way, because the volumes driven by, the battery sourcing companies are quite large, and obviously they're looking for domestic feedstock. So our market entry is positioned on segments which are available today. The premiums that we're going for are not significant, they're modest and help us position ourselves well. And as we transition to the battery sector, I think we will be in a position to be able to be, the first end-to-end supplier.
How does the integration of zinc operations with the emerging graphite business strengthen Titan's long-term growth strategy and financial resilience?
I think what it really does is it de-risks the whole process because we have an existing site, we have manpower, we have infrastructure, we have people. So from an operational perspective, I believe, the zinc operations really provide the platform for the graphite operations to be able to scale very quickly. But really, from a cash flow perspective, everything that we've achieved so far has been without raising any equity. And that has been with excess cash flow from the zinc business. And we expect that to continue and therefore, be able to build a whole commercial scale facility with minimal dilution. So I think what it helps us is helps us on both ends, helps us both with respect to operational readiness and speed, and obviously financing capability.
With the Kilburn demonstration facility now producing, Rita, what are the key milestones on the path to commercial scale, and what should shareholders expect in terms of value creation over the next 12 to 24 months?
I think again, that's a great question. The reason we stood up the demonstration facility is so that we can begin to qualify the material. And the material will, as will be provided to customers very shortly so that they can begin their processes. And what we expect to see in 2026 is, the demand indication, the pricing indication, so that we can begin to enter into offtake contracts. And that I think will be a very, very big de-risking factor, like it is for any industrial operations, is to be able to have commercial contracts lined up before going into construction. And also it allows customers to be able to have line of sight into a supply chain, which we all know is not easy to build in a single day. And it is a process, and it gives them the ability to know that we're moving in the right direction. We have the contracts, we have the financing, and we will be able to become a credible supplier to them.
Here's another question about the Kilburn project, Rita. It shows strong economics, this person writes, on a relatively modest initial capital base, and it leverages existing ESM infrastructure. As you move from the 1,200 TPA startup facility in 2025 toward that long-term target of 40,000 TPA, what do you view as the most material execution risks? Would they be metallurgical, operational, or would it be customer qualification related? And how are you sequencing de-risking steps across those dimensions?
Again, great questions. So if we just take if we take in the order of in the order of priority, what we're really doing to de-risk, there are two elements to this. It's the operational side and the commercial side. With respect to the operational side, we're going through a full feasibility study, and the feasibility study metallurgical output is really influenced by runtime data, which is provided by the demonstration plant. So the demonstration plant is is operating 5 days a week for 8 hours a day. That is providing real-time data all the way from the ore feed to the recovery to the output of the product. That gives us the data for the feasibility study, which then obviously forms the basis of a commercial operation. So I think we're dealing with the operation side through live feedback, through live data, which is the best way to deal with things. And then really from a commercial side, the key risk as identified remains, customers, pricing, which we're looking to de-risk really through this process. So before we commit, when our FID will be at some point at the end of 2026, we expect to have very good certainty on the customer base, on the pricing, and a fully completed feasibility study. And one of the key things to note, obviously, is United States Exim is doing a significant amount of technical work, which is underpinning their underwriting. So it's not just us going through the works and making sure that we're ticking all the boxes, but we do have an independent third party who is lending to the asset, who will also be able to verify all our technical work.
Rita, we have time for one more question. I think it would be appropriate for you to give us the essential value proposition, some closing thoughts here. Why should anyone be interested in the Titan Mining Corporation right now?
So as I said before, I see this as a very unique opportunity. You have a company where there's, current EBITDA of about 25 million, being able to 5x that within the next 24 to 36 months. And the steps towards, realizing that very significant amount of cash flow for the company and effectively a valuation re-rate is comprised of steps which are well on their way through, and the de-risking proposition is well on their way through. And being first to market is important for all of us. And I think, being part of a very unique story where you're first to market will give investors a significant amount of, unicorn value exposure. So there is fundamental re-rate potential, which we believe is, near term, but it also comes with the ability to be part of something, very significant as a first mover in the critical materials space.
Thank you very much, Rita, for an excellent presentation and for answering those questions. For
Excellent.
more
Thank you.
information on Titan Mining Corporation, reach us at 1-800-REDCHIP or email us at tii@redchip.com. Our next presenter will be Mark Smith of NioCorp Developments. He'll begin speaking at the top of the hour. See you then. Thanks, everyone. This is the RedChip Virtual Investor Conference, Mining and Metals. We are going to just start at 11 a.m. Eastern with Mark Smith. So please stand by for less than 1 minute. Thank you. Our next company on today's RedChip Mining and Metals Virtual Investor Conference is NioCorp Developments, ticker NB on the NASDAQ. Presenting today will be Mark Smith, the CEO and Chairman of NioCorp. We will begin with a brief presentation in just a moment, and then we'll open the event to your questions. I will keep everyone's lines muted throughout the presentation, but to submit a question, please click the Q&A button at the bottom of the Zoom window and type in your question. Before we begin, please allow me to read the Safe Harbor Statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. I now turn this webinar over to Mark. Please go ahead.
Thank you, Craig, and thank you for such an honor to participate in this seminar about the race to onshore critical minerals. NioCorp is clearly right in the center of that activity, and we're very excited to tell you more about it. Let me start out by talking a little bit about NioCorp, who we are, what we've been doing, some activities that we're very heavily involved in right now, and give you a sense of how far along this project is. NioCorp is pursuing the construction of an underground mine and above ground processing facility for a very large ore deposit in the southeast corner of Nebraska. This will be a greenfield project, and it will be approximately $1.2 billion. We will be producing niobium, scandium, titanium, and the magnetic rare earths. Interestingly enough, the United States imports 100% of the niobium it needs today. It imports 100% of the scandium it needs today. It imports 85% of the titanium it needs today, and it imports almost 100% of the magnetic rare earths that it needs today as well. So this certainly, falls into the category of critical minerals for the United States, and we think that it's an extremely important project to get off the ground, because this is something that the Department of War needs. This is something that commercial vendors need. I mean, this is something our country needs, and we're really pleased and honored to be where we are with this project. NioCorp is traded on the NASDAQ under ticker symbol NB. Should also note that we have zero debt on our books and zero convertible debt on our books. That happened in February of 2025. We're very proud of that. NioCorp also had the very great satisfaction of raising over $370 million in 2025 alone. This included largely equity fundraising activities, but also included the exercise of various warrants and other fundraising activities. We have all of our permits in hand to start this construction, so there is no permitting risk on this project, which is very unique in the United States in particular. We have unbelievable state and local support for this project, really national support as well. But we just had a town hall out at the Elk Creek town site. This last week, we had about 600 people come out to that event. Not one naysayer, not one protester. It was a very constructive event, and the community support remains exceptionally strong. That's very important to us, and we are plan to work hard to keep that level of support for the project. We have multiple portions of our plan. We have unbelievable.
Ladies and gentlemen, we're currently experiencing some technical difficulties. Please bear with us. We'll be right back.
Primarily China. Titanium
Ladies and gentlemen, we apologize. We have lost contact with Mark. There appears to be a Zoom issue. We do, however, have Alex Guthrie with us today. Alex is the Director of Investor Relations for NioCorp, and we'd like to go directly to Q&A with Alex about NioCorp. If that's all right with you, Alex?
Yeah, let's do it. Sorry about that.
No problem at all. We have been getting questions here. First one, NioCorp has made progress on funding and de-risking Elk Creek this year. How should investors think about the remaining steps to secure full project financing and the key milestones on the path to a formal construction decision?
It's a great question, and I just really wanted to re-emphasize the success that NioCorp has had in 2025 to date. Now we've brought in through the door, over $370 million in 2025, which is a significant portion of capital that's really, bridging us on the de-risking path of this project. As Mark stated, it's a $1.2 billion capex project. We're separating the sort of financing of this project into two portions, equity and debt, working with the Export-Import Bank of the United States. So 35-65 equity debt split. So it puts us on a very progressed path on the equity side to date. Now, in terms of sort of moving forward with a formal construction decision, the project needs to be financed. So as I mentioned, we're working with XM on a $780 million debt package. Now that project sort of debt application is advancing well. I want to highlight, and as Mark touched on this briefly, we recently had a town hall in Elk Creek where the project is. That small town has about a population of about 70, and we had around 600 people attending that town hall, which is quite significant. But even more important, during that town hall, the chairman and president of XM Bank appeared via video to provide his support. Now we have that video on all of our social and on available for viewing. And I encourage investors to go and take a look at that video because it's quite substantial and significant, the support that is sort of conveyed during his remarks. Now, moving on forward to the path to a formal construction decision really requires on fulfilling sort of some remaining bits on our debt application with XM. We're working on technical work products that they've requested. Now that sort of is broken down into a reserve uplift, which required some additional drilling. That drilling has been completed. Those assays are being analyzed, and we've released a few of those holes recently and encourage folks to go and take a look at our news section on our website to look at the significance of those results. Additionally, we're completing some feasibility study level engineering of our upgraded processing flow of the surface facility, and all of that sort of blends into an updated feasibility study, which we're looking at releasing sometime next year, sort of Q2 timeframe. Additionally, XM wanted to see some offtake agreements, which we're in discussions currently, and we're hopefully to have some updates on that soon. And I think all of those sort of act as catalysts in terms of bringing additional equity through the door as we sort of further de-risk this project. So I think what's important to do is to look at this on two folds. One is the equity side and one is the debt side. On the equity side, we've been very successful this year in raising equity. I think there's more to go on that side. And on the debt side, we're advancing our XM debt application quite significantly. And I think the chairman's support on that and providing his remarks at our town hall just on Friday last week is a clear signal on the progress with that. So I think those are the key items as we sort of move forward to that formal construction decision for the Elk Creek project.
Thanks for that, Alex. Next question. The recent Title III award that you got from the Department of War, that is an important validation for Elk Creek. I think everyone agrees there. How will that funding be deployed across drilling, engineering, and scandium ALSC alloy work? And what specific technical or project milestones should investors be watching over the next, say, 12 months?
Great question again. And again, I want to highlight the significance of the DoD and now the Department of War and Pentagon support of this project. So just sort of a couple months ago, I think it was August now, we were awarded $10 million from the Title III award as a grant. And I think that's super imperative to sort of understand as an investor that we do have the support of that function of this project. They understand the importance of it. Now there are sort of, I would call it, four work streams that $10 million was sort of provided to support. One was the drilling, which I just previously touched on. So upgrading our probable reserve category into a proven category. So that work, again, the drilling's completed, the assays are being analyzed, and that technical work is being completed as we speak. And it's sort of nearing completion now. So that's sort of the first work stream. The second one was, again, what I discussed on the sort of feasibility level engineering and upgrading of our processing flow for the surface facility. That is, again, nearing completion. All of those things will be packaged up into that updated feasibility study. But the last two work streams are super interesting as we sort of focus on scandium and how the U.S. government's sort of, I guess, laser eye focus on scandium has been increasing recently. And I think that's super imperative for NioCorp as we work to establish our production, which will be about 100 tons of scandium per year, which is pretty significant in onshoring that production stream for the U.S. So there's sort of two parts to the scandium side of this grant, and one is testing and validating a new approach for converting scandium oxide into scandium metal. So scandium sort of acts like a rare earth, and it's extremely difficult in reducing oxide to metal. It takes a lot of technical know-how, and it's predominantly done in China, Vietnam, and Thailand. But the traditional method, sort of out of those areas, has significant environmental challenges. Mostly the way you reduce it to metal, it sort of generally creates a very, it's quite nauseous emissions. So the traditional method to permit in the U.S. is quite difficult. So NioCorp is taking it upon themselves to sort of amplify and establish the conversion technology here on our own soil. So we found a partner who can do it in a much more efficient, environmentally friendly way. And the DoD and the DoW have provided funds to take our scandium oxide and reduce it to metal with this process. And scandium metal has a multitude of applications. Um, Generally, they are in the electronic space, sort of 5G, 6G comm systems, chips, and some military comm systems as well. Super exciting applications for scandium metal in small quantities and specialized computer chips, etc. So that technology, in terms of reducing oxide to metal, has been proven with the rare earths, and scandium again acts as very similar to rare earths. So we're working to prove it works for scandium, and I think there's low risk there. So portion of that funding is going to be used for that oxide conversion into metal for scandium. But the sort of last work stream, and something that's also super exciting for NioCorp, and I think should be exciting to investors as well, is we're using scandium, aluminum scandium, with sort of prime contractors. So we recently signed a development agreement with Lockheed Martin and their Skunk Works Advanced division, which is a super exciting announcement that we got to make. And that is really to design, Lockheed is developing an aluminum scandium alloy technology for certain fighter jet applications, which is to me very exciting. But the way that will work is that there'll be the design of the aluminum scandium alloy technology, there'll be a prototype production, and then there'll be flight testing. Now, that technology really is to make combat systems more effective. And that's something, obviously, that is quite salient to the US government right now, especially for sort of as we move, sort of toward identifying existing parts on these planes that can be swapped with aluminum scandium. So, if we take a deeper dive into that, this part can replace existing parts on fighter jets. So, sort of a reuse angle there, and it reduces mass. And reducing mass is quite significant for these sort of complex fighting machines, and it really increases their combat effective range, which means more fuel and more ability to carry ordnance on those planes. So I think sort of as we move through the next 12 months, it'll sort of be in that the drilling is completed, the technical work on that drilling as well as the engineering side will be combined into that feasibility study, which we look to put out next year. And then on the scandium side, there'll be sort of two work streams there, one with Lockheed as they design the alloy technology, they prototype the production, and we do flight testing. So we'll be looking for sort of announcements on that. And then, as Mark would mention in his presentation, on the oxide to metal form, we're looking at sort of pouring our first metal in February of next year, which is quite exciting. So I think those are sort of the timeframes that you'd be looking at for those.
Alex, thank you very much for that. Although we can't have Mark with us directly right now, RedChip does have an interview that we did with Mark recently that we think we should play. What do you think about that?
I think that's a great idea. Go for it.
Okay. Okay, good. We're going to play that right now, everybody, and we appreciate your patience. Alex, thank you very much for being with us today. You can hang on in case we got time at the end. You may have time for another question or two, but for now, we're going to run that interview recently recorded with RedChip, Mark Smith and RedChip. Okay. Alex, thank you very much. And ladies and gentlemen, we apologize again. There is some technical issue with Zoom. Thank goodness we've got Alex here with us. Let's just continue on with the questions. We've got tons of them. So we'll just move on to the next one. And we appreciate you hanging on, Alex.
No worries. These things happen. All good.
Yep. Now, Elk Creek, as many investors already know, it brings together niobium, scandium, titanium, and key rare earths in that key single U.S. project. Now, how do you position its strategic importance to U.S. and allied supply chains when you speak with policymakers, OEMs, and institutional investors?
Yeah, I think this asset is a very unique asset, and it sort of does that work on its own, which is easy for me and my job. This is a polymetallic project, meaning, there are multiple minerals that are going to come out of this project, which is exciting for us. But what's more important is the strategic importance of these particular minerals that we will be producing out of Elk Creek. For niobium, the U.S. is 100% import reliant on niobium. It comes mostly from Brazil, and this is the only niobium project on U.S. soil. So, 100% import reliant on niobium. We are 100% import reliant on scandium. 100 all of the imports from for scandium come out of China, which is makes us sort of supply chain makes our supply chain sort of weak at that stage. And then titanium, we're about 85% import reliant on scandium. And then rare earths, again, been a hot topic recently. So we're about 85% import reliant on rare earths. But when you think of the heavy magnetic rare earths, we're 100% import reliant on those, which is quite significant. And these are absolutely critical and have virtually no substitutes in military applications. And it's important to note that they're also very critical in a lot of advanced technologies as well, such as computing and clean energy. So what makes the Elk Creek project a strategic of strategic importance to the U.S. and really our allied supply chains is the speed to market of this project. And I'll just highlight that in a general sense. So the average time frame to bring a mine online in the U.S. is about 29 years. So the Elk Creek project is one of the only fully permitted construction-ready mineral projects in the U.S. Certainly, again, I'll touch on it's the only niobium project in the U.S. And its polymetallic basis is really the only strategic critical minerals project that is fully permitted in the U.S. We're about 11 to 12 years in. So we've obviously cut that time down significantly, which really, props up the strategic importance of this asset. You know, I've worked in critical mineral markets before. For the last 10 years, I was working at a vanadium operation, and China's MO has been the same for many years, and it's to control these mineral markets and use that as sort of policy making decisions. And they've done it with vanadium. In Europe, the prices are extremely depressed based on dumping. And we're seeing that sort of across the board here. So, propping Elk Creek up and getting this up and running is sort of item number one for the U.S. government in getting this project up and on the ground. So, I'll just reiterate that again, sort of looking back to our town hall on Friday with over 600 attendees. In addition to the chairman of XM Bank, who are working with quite closely on getting a substantial debt package from them, we also had the governor of Nebraska, Jim Pellin, come and give his remarks, who noted this is the greatest deposit in the U.S., which is quite a substantial statement. We also had our two senators there, U.S. Senator Deb Fischer, as well as U.S. Senator Pete Ricketts. They both were at this town hall giving their remarks and their support for this project, and we actually gave an award to Deb Fischer, who helped us get that DoD grant across the line for us, sort of championing millions of dollars for this project. So this is of strategic importance to the government. But if we sort of shift gears on sort of the institutional side, I think that there is a re-rating opportunity for this company as we sort of move down the de-risking stages of advancing those sort of check boxes as we move forward. And 2026 is going to be a super important year for this company. We have a lot of things planned, and it's exciting for the local town of Elk Creek in Nebraska, but also for our investors. I think there's a significant re-rating opportunity here as we sort of move down, get this project financed, and get those shovels in the ground.
You know, Alex, Mark always makes clear, you've just made it clear again, how far along the Elk Creek project is. You've already got key construction critical permits secured, and you've even got utility hookups. You've got land purchases. You've got geotechnical work, engineering advancing in parallel with all of that. Investors, in fact, I just spoke to one this morning. They want to know, what are those final green light steps that bridge the gap between financing approval and breaking ground, and how quickly could mobilization occur once those funds are in place?
Yeah, it's a good question, and we get it every day as well, which means that there's interest in this project and there's support for this project. People want to see this get off the ground, and so do we, and we're working hard every day to do that. But I'm just going to highlight if there's about four of those key developments, 4 or 5 of those key developments that folks really should be looking forward. And again, I'll reiterate that 2026 is going to be a significant year for this company. Now, I touched on this earlier, sort of in my remarks about getting that work done that XM required. So that technical work, so reserve uplifting, which is very well advanced, and engineering work again, which is nearing completion. XM wants to see that, and we're near those sort of endpoints for those projects. XM is going to want to see some additional offtake agreements as well. I think we'll have some exciting news on that as we sort of progress through those discussions. And sort of all of that is combined up into sort of a financial decision by XM. Going to reiterate it again. I encourage folks to go watch that video that the chairman um, has provided for us in that recent town hall. It is quite significant, and really appreciative of that. So I think that just shows a clear signal of their intentness for this project. So that's on the debt side, and then on the equity side, we have a little bit to go there. There's momentum here with 2025. I think that's going to continue in 2026. This project is super compelling from an economics standpoint, but also from a U.S. critical minerals standpoint, and sort of onshoring and reshoring supply chains. So that momentum is going to continue to 2026, and I think that will just give us some tailwinds as we go and sort of complete the remaining equity raise requirements for the financing of this project. We're also, we have some additional efforts to continue building out that complete scandium supply chain. Great slide in our deck. I encourage folks to go and look at that. And filling the gaps of that supply chain is something that NioCorp is doing in advance of producing scandium, and really, just props our sort of our initiative up on that sort of scandium initiative to sort of build that supply chain and have those customers have some assurance that once we're up and running, that product will flow. And again, the feasibility study, which we look to put out sort of Q2 of next year, which will have some additional economic information in it, and as well incorporate those rare earths into that feasibility study. And then the last one I'll just touch on briefly here is that the current administration's push to onshore critical minerals obviously cannot be ignored, and the DOW has offered its support to us with that grant. But there could be some additional opportunity there, sort of to work with the U.S. government on providing those critical minerals, and that's something that we could look out for as well. So I think all of those sort of really summarize how critical this project is, and that 2026 is going to be a great year for NioCorp and its investors.
Alex, thank you so much for filling in so capably for us and Mark when we lost him. And thank you, ladies and gentlemen, for your patience there. I think we still managed to give you a lot of information about NioCorp. If you want more information, just call us at 1-800-RED-CHIP or email us at nb@redchip.com. Alex, thank you again. Now, our next presenter will be Paul Mann of ASP Isotopes. He'll begin speaking in a mere matter of seconds. Thank you. Our next presenter, as I said, is Paul Mann of ASP Isotopes. This is the RedChip Mining and Metals Virtual Investor Conference, of course. And Paul is the CEO and chairman of ASP Isotopes. We'll begin with a brief presentation in just a moment, and then we'll open this event to your questions. I will keep everyone's lines muted throughout the presentation. To submit a question, please just click the Q&A button at the bottom of the Zoom window and type in your question. Before we begin, please allow me to read the Safe Harbor Statement. This call may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Paul, please go ahead.
Thank you, Craig. Can you hear me?
Loud and clear.
Perfect. You can see the slides.
Yes. Yes. If you could put the
Excellent.
slides on, if you could put the slides on full presentation mode, perhaps.
I think I have done. Let me advance. Does that work?
Not quite.
Okay,
bottom right hand corner, there is a little icon.
I'm going to stop sharing.
Mm-hmm.
I'm going to put the slides on presentation mode, and then we will share the screen. Okay. Hang on. Slightly different way of doing it. There we go. Okay. Is that better?
Yes, perfect. Thank you, Paul.
Okay, brilliant. Great stuff. Good stuff. Thank you, Craig. Okay, so thank you everyone for your interest in our company, ASP Isotopes. I'm going to run through the slide deck today, and we've got some questions afterwards. I should take about 20 minutes on the slide deck and then 10 minutes for Q&A afterwards. So, forward-looking statements, here's we're NASDAQ listed company, so please review our SEC filings for our complete set of disclosures and risk factors and what have you else, and please read this quickly. So ASP, who are we? Who is ASP Isotopes? So, we're a Delaware incorporated company, and we have a number of subsidiaries and a number of assets within our business. And within ASP Isotopes at the top, you'll see we have two subsidiaries, one in Guernsey and one in South Africa. And I'm actually in South Africa today. And the South African subsidiary has got 3 manufacturing facilities to make isotopes. We'll talk about what isotopes are in a moment. One of them produces silicon-28, the other carbon-12 and 14, the other ytterbium-176. To the right, you see Quantum Leap Energy. And quantum leap energy is focused on the nuclear fuels of the future, specifically high-assay low-enriched uranium, lithium-6 and lithium-7. And these are going to be needed to power the world as we need more energy. We move to a more energy-intensive environment, the clean green energy. And Quantum Leap's actually signed its contract with TerraPower to supply TerraPower, that's Bill Gates' company, for about $3.5 billion of HALEU over the next sort of several years. And our plan is to spin off Quantum Leap as a separate company in the next sort of few months or so. And then PET Labs to the left focuses on producing radioisotopes, which are required for nuclear medicine and other other kind of things like that. And so you see our three industries are medical, semiconductors, and nuclear energy. There are three main industries. We're excited to be involved in all of them. I'll explain more about these industries as we go through the next sort of few minutes. We're also in the process of acquiring Renergen. So Renergen is a South African natural gas and helium producer. And we think this is a huge operational synergies and customer overlap between the two businesses. So I think we've got a very good track record of acquiring distressed assets in Africa, creating substantial amounts of shareholder value. Good track record of exceptional project management, getting plants built on time, deep understanding of global supply chains. We've got a very strong balance sheet as well. Renergen has a very unique asset, helium, and helium and isotopes are both considered critical materials to the United States. And so there's a lot of interest from the government on what we're doing here in Africa. And these isotopes and helium will be required for next generation semiconductors, next generation stealth coatings for planes, things like that. So there's a lot of interest in what we're doing. And Renergen's also got a huge loan from the US government, about $530 million committed or drawn over the next several years. And also probably some of the cheapest energy on planet Earth at 35 cents per MCF in terms of natural gas. So we can use that to really generate a lot of return for shareholders. This just kind of highlights the proposed transaction, and we're looking forward to consummating this transaction in the next sort of several weeks. And what we have said to investors is that we expect to generate EBITDA of over $300 million by 2030 post a QLE spin. And that kind of shows you the earnings power of these two businesses combined together. Here's some of our milestones. We've achieved most of those this year. So what is an isotope? So when you think about hydrogen, carbon, and oxygen, they're different elements. One's a solid, two are gases, very easy to separate. Chemically, they're different. You can use chemical process to separate them. It's very, very easy to kind of separate different elements by chemical processes and physical separation processes and temperature processes. Isotopes are the same element, have different numbers of neutrons inside the nucleus. And that means they have different physical properties. And they're very challenging to separate using chemical methods, but can be separated using some methods we've invented. And why are isotopes important? Well, let's take silicon, for example. Silicon, sand on a beach, you can dig it out of the ground, very, very cheap. Silicon goes into most semiconductors, one of the most prominently used materials in a semiconductor. And silicon has three isotopes, number 28, number 29, and number 30. And the number 29 isotope does not conduct electricity very well. So if we can remove that 29 isotope, have pure silicon 28, suddenly the conductivity of the semiconductor and the thermal conductivity increases thousands of fold. And so for next generation semiconductors, and for semiconductors that use less energy in terms of heating and cooling, silicon 28 is of great interest, basically. When you think about the pricing of these materials, a bag of sand is probably $1 a kilo. A kilo of silicon 28 more like $500,000, $500,000 a kilo. So it's a huge difference in price. And what we do is we take these basic elements, convert them to isotopes, and generate a return for our shareholders doing that. This is why the supply chain has been so challenged. 85% of stable isotopes are controlled by Russia. Every government in the world pretty much views isotopes as a critical material. And so there's a lot of interest from various governments right now as to what we're doing and whether we can move forwards and start supplying these companies with materials in the future. We have two technologies to enrich isotopes: the ASP process and the quantum enrichment process. And so the ASP process basically is a stationary wall centrifuge. We spin the gas on a vertical axis very quickly, and that allows us to separate heavy isotopes from light isotopes. And the heavy one goes to the outside, lighter one goes to the inside, and that allows us to do that. And we have two plants for ASP, one for silicon-28 and one for carbon-14, both in Pretoria, and both are in commercial production right now and have been producing producing samples and things over the last 6 to 12 months. Quantum enrichment is a laser-based approach, so this is good for anything that doesn't turn into a gas. So take ytterbium, for example, which is an element required for next generation nuclear medicine. There is no gaseous form of ytterbium, so we take ytterbium as a metal, we vaporize it, we pass it through a very special selected laser beam that our scientists have worked out will work for ytterbium, and then we can selectively strip out a particular isotope, specifically here ytterbium-176, which is great for cancer patients, prostate cancer. Here's a picture of our carbon plant, our carbon-12, carbon-14 plant, and that's in commercial production right now. It's been producing carbon-12 all year, and it will start producing carbon-14 in January, February of next year. And that's a much higher value selling product and has needs in nuclear medicine. So to summarize, our technology is cost effective. The cost of us building a plant is de minimis versus the cost of a centrifuge. It's modular, it's scalable, so we can build the plant and add to it as market demand grows. It's very environmentally friendly. We have no nasty radioactive waste, that kind of stuff. It's a pretty clean process, and so it's a fairly, from terms of a licensing standpoint, they're easier to license than many other kind of dirty chemical plants. So let's talk about the three end markets for isotopes and the end markets that we operate in. So nuclear medicine is the first one, and this is a market growing at double digits over the next probably 10 to 20 years. Huge shortages of medical isotopes in most countries around the world. Many of the new cancer drugs will need medical isotopes, stable isotopes to make them, and there isn't really a supply of them in the West outside of Russia. So we actually have a radio pharmacy, PET labs, and that's probably of less interest to the people on this call who are probably more into mining, metals, and industrials. But to treat a patient for cancer, you have to take a stable isotope and convert it to a radioisotope using a cyclotron or a linear accelerator or a nuclear reactor. You have to hit it with a proton, an electron, or a neutron. So, for example, we think we can take zinc-68 and convert it to gallium-68, and that's used to diagnose certain types of tumors. One can take ytterbium-176, convert it to lutetium-177, and that's used to treat cancer patients. And the unstable isotopes under PET labs have short half-life, maybe a few hours or a few days. You can't ship them very far. So ASP Isotopes can ship its isotopes all around the world, simple FedEx package, but PET labs can only ship its products, a few hours. There's hundreds of PET labs around the world, and our goal is to expand PET labs into those regions. We'll be the only radiopharmacy back integrated into the stable isotope production. Ytterbium-176 is our first market. So this is used to make Novartis' drug Pluvicto, which is used to treat prostate cancer. Consensus forecasts have it at about $4 billion towards the end of the decade. And it's a very, very challenging supply chain. During the clinical trial, 5% of patients died because they couldn't make the drug. That's how hard the supply chain is. Nowadays, there's a huge wait for the drug in the United States, sometimes a couple of months. When a patient's only got 6-9 months to live, a couple of months, is a real problem. We think the market size for ytterbium-176 may be as much as $100 million in years to come. And our first plant is up and running. It's been producing commercial samples and should really start throwing out big commercial quantities during 2026. That's the plan. Second market is zinc-68. We plan to build a zinc-68 plant in South Africa to make zinc-68, which is used to make gallium-68, and that's used to diagnose a lot of the cancers that are treated with lutetium-177. Demand is likely to grow 15 times over the next several years, and it's difficult to see where that demand comes from other than zinc-68. And so we're one of the few producers of zinc-68 in the kind of type you need to make these drugs. I'll race through this slide. Molybdenum-100 is probably our largest potential opportunity. This is more of a slow burn market. We think we can make the workhorse of nuclear medicine, technetium-99, much cheaper, much quicker than most other people can. And we plan to start selling molybdenum-100 as soon as the market's ready to accept it. Another picture of our carbon-14 plant. So we've signed the take-or-pay agreement for carbon-14, which is used to tracer to make new drugs, new agrochemicals, and our take-or-pay contract is for $2.5 million a year minimum. Maybe it's nearer 5. I think the market size is about 10. We'll see how much we actually generate from this, but at least minimum is 2.5. And we had an 18-month delay waiting for our feedstock for this plant from the customer. It's a tolling agreement. That feedstock should arrive now in January. That should allow us to start generating revenues from this plant in kind of like the April, May, June kind of timeframe to Q2 next year. This just summarizes our timelines and what have you in pipeline for medical isotopes. So semiconductors is actually one of the industries I'm most excited about. And so, as I mentioned earlier, if you can enrich silicon-28 from 92.2% to 99.995%, you enable things like quantum computing, faster, cooler chips for artificial intelligence, that kind of stuff. It's potentially a real game changer in new semiconductors. We've signed 3 contracts for semiconductors, all with US companies or agencies, and we expect to start supplying silicon-28 during the first half of next year, the first quarter next year. And there's a lot of interest in silicon-28 and its ability to make faster semiconductors, better solar panels, and enable quantum computing. This gives you other isotopes that are required in semiconductors. So germanium-70, we have an order for germanium-70 as well. We'll supply that during the first half next year from the same plant. And then we're in the process of building and procuring components to build a barium-137 and helium-3 plant. And they're essential for next generation semiconductors as well. South Africa uses a lot of energy. Energy costs are quite expensive. We use a lot of energy in our plants. And so one of our plans next year is to build some ASP plants in Iceland, where energy costs are extremely cheap. We've almost got all the permits we need to build those plants now. And I think we'll probably start building those next year. We've been kind of slow walking this project because we've had other projects to work on. They've got better return on capital. We'll start this plant probably next year. So nuclear energy is a focus for many people right now. It's a hot topic both in Washington and in the investor community. And it can't be denied that the world has a problem ahead of it. The world needs to double the amount of energy, electricity, over the next 25 years or so, whilst trying to keep net zero targets. Now, that's not going to work, I'm afraid. It's not going to happen, but people will definitely need more energy. And during COP28, about 18 months ago, 24 countries agreed to triple the amount of nuclear energy by 2050. That's a huge amount to increase. This is an industry that's been flat, basically, for the last, call it, 15 years. And so we believe that the future of nuclear reactors is a small modular reactor, the SMR. There are a number of these in development. So a couple of these to the right. TerraPower, that's Bill Gates' company. X-Energy, that's Cam Garfasian's company. Rolls-Royce, the one missing here is Oklo, that's Sam Altman's company. And the problem with large nuclear reactors is that you have to build a massive reactor in the middle of nowhere and try and get that energy to a population of people. The transmission grid required to do that is immense, costs a fortune, takes years to build. The reactor typically estimates say it's going to take 10 years and cost 10 billion. It ends up being 20 years and 20 billion. It's been a horrible industry for the last 20 years. A small modular reactor is basically production line manufacturing of nuclear energy. What made a car really cheap was the Ford Model T, production line economics. And so these are much smaller reactors. You can place them nearer a population of people, and you manufacture most of the equipment and most of the plant off-site and drive it to the site. Much cheaper, much faster, much better return on capital. The problem for most of these SMRs is they require a new type of fuel called HALEU, high assay low enriched uranium. Now, in a normal reactor, uranium is enriched from 0.71% naturally occurring to between 3.5% and 5%. In these SMRs, it's enriched up to 19.75%. It gives you a much greater energy density, allows the reactor to be smaller, more efficient, and require less refueling. Now, the problem for HALEU is the only commercial supplier of HALEU is Russia, and most of that comes from downblended weapons, so it's no longer available. In fact, TerraPower has delayed the startup of its SMR by over 2 years because of the lack of HALEU, and so the world is desperately seeking for a new supplier of high assay low enriched uranium. So we believe we can use quantum enrichment to enrich uranium. I think it's the best way of doing it. This chart here kind of shows the differences between different enrichment methods. And the selectivity chart, line number 4 is the one to look at. And you'll see for a centrifuge, it's about 1.15. This is like the efficiency of the process. For quantum leap energy or quantum enrichment, it's over 50. And we're seeing up to 678 with some of our plants. And so it's an incredible step change in the enrichment factor, enrichment capacity of a plant. It's quite scientific. This is why it kind of works. And there's some real world experience of enriching elements. And so at the top here, you see lithium-6,7. The feedstock is at 7% lithium-6, 93% lithium-7. And after a single pass through the chamber, lithium-6 is over 90%, and lithium-7 is under 10%. The enrichment factor of 112 compared to 1.15 for a centrifuge. Now you'll see there's a huge supply side problem and a demand problem with nuclear fuels right now. Here are the 3 components of the nuclear fuel supply chain: the mining, the conversion, and the enrichment. And all 3 are up here like 5 times, 3 to 5 times over the last sort of 4 years or so. It's very rare to see a commodity increase in price 5 times and see a zero supply side response to it. That shows you the barriers to entry and the challenges of getting into this market. It's one of the most challenging industries to get into in any industry I've ever looked at. And so what's that meant for the HALEU price? Well, when most of these SMRs were designed, the HALEU price was thinking it'd be below $7,000 a kilo, $5,000 a kilo, that kind of number. But now you're looking at over $20,000 a kilo. And you'll see, about a third of it is in the enrichment, a bit more actually, about a third in the ore and a bit less in the conversion. So, it's fairly heterogeneous between the 3. And, we believe that our technology is so powerful, we can take nuclear waste, depleted nuclear tails, and convert that straight into HALEU. And that'll do a number of things. First of all, to clean up an environmental problem, which is the nuclear waste. But secondly, it will allow us to really lower the price of nuclear fuels. And that will allow us to take nuclear fuels to many countries in the world that can't afford nuclear power today. So we're really excited about potentially doing that. And we're working hard to get these plants up and running in the next couple of years. So just to finally summarize, a couple of concluding slides before I hand over to Q&A. We have a proven proprietary technology. It's been developed over 20 years in Africa. We acquired all the technology out of bankruptcy or business rescue. Huge growing demand in medicine, semiconductors, and nuclear energy. Multiple secular and geopolitical tailwinds. As I say, we've built 3 manufacturing plants in 4 years. We know how to get projects done in Africa. And I think, we're pretty confident we can build a lot more plants over the next several years as well. So, Craig, I'll stop there and take any questions.
Absolutely, Paul. Thank you very much for that excellent presentation. If you have a question for Paul, click your text box there, or Q&A box, sorry, at the bottom of your Zoom window. Send in your question, or you can email us, of course, at aspi@redchip.com. We've got a lot of questions here for you, Paul, and we do only have about 6 minutes, so the shorter your answer, the better. First
Okay,
question.
let's fire away.
Yes. How are you feeling? Is the ailment behind you, or will you be taking another leave in 2026? Is there a succession plan, and who would take your place in case of a permanent departure?
Yeah, so I had some pretty major surgery in September. I've kind of been disabled for the last couple of years for a left ankle that didn't work and was broken, and so we've managed to mend that ankle. I'm allowed to fly now. I'm back in South Africa today, and so I'm fired up to start working again in January. I never really took much time off. Maybe I only worked 12 hours a day rather than 15 to 18 hours a day while I was off. But I can't wait to get back. There hasn't been a succession plan, and I think the last 3 months, the board now thought carefully about putting in place a succession plan to make sure, should anything ever happen in the future, it was a succession plan. But I don't intend to get sick again. I'm very active, very young, very fit. Can't wait to get back in the helm again. And so, yeah, really looking forward to next year.
Paul, what isotopes, again, do you intend to enrich at that Icelandic plant, and when do you expect to be able to complete construction, and how much will construction cost?
Yeah, so an isotope plant in Iceland will likely cost about $30 million per plant, and we expect to start building a plant next year. We're talking to customers right now for what they need in terms of their requirements for next year, and so we'll make an announcement as and when we start construction. Construction will take about 12 months, and the longest part of that is actually the procurement phase, particularly for compressors. But yeah, we're looking forward to going to Iceland. Great reception from the Icelandic government. We're ready to go, and we just need to get a contract first from the customer, and then we start building.
The HALEU plant in South Africa, this person wants to know, what is the status there? How far away are you from obtaining the permit to enrich HALEU from the South African government, and of course commencing construction on that plant?
Yeah, I think we're pretty close now to getting the permit we need to start enriching uranium in South Africa. I think we'll make an announcement as and when we have that permit and we're ready to go, and we have our people feet on the ground actually enriching. We've had feet on the ground there for a while already. We actually built the first test bench. We're building the second test bench at the moment. So I'm hoping it's sooner rather than later. Let's watch this space as soon as possible. But I feel we're pretty close now. We're pretty close. There's some very good discussions with the government in the last couple of weeks.
What kind of sales are you projecting for next year, and do you have enough cash to reach the goals that you're projecting for next year?
So we haven't given guidance on revenue, so I won't give guidance on this call because it's not public information. But you can add up the contracts we've signed, the timing of those, and that should allow you to get to a revenue estimate. In terms of cash on balance sheet, we raised about $200 million in October, and we raised actually $100 million during Q3. So we've got a huge amount of cash on our balance sheet right now. So we're very happy with our cash position on our balance sheet.
If you need cash, Paul, can debt be an option? What is the likelihood that you'd use debt over dilution?
Yeah, I wouldn't. We haven't got a way of raising equity right now. We don't have an S3 or S1 file, so there is no possibility of diluting anyone right now. I would expect to start putting debt onto the balance sheet over the next couple of years or so. So absolutely. And as a company started up only 4 years ago, we weren't ready to take debt on. I think we are now, and so I think our next capital raises might likely look be of the debt variety rather than an equity variety, is my guess.
And Paul, if you can get this one done quickly, because we're running out of time, but it's very important. A lot of people are asking about the Renergen deal. What's the status? What's the timeline for closing the deal?
Again, I think we're very close now. I think it's not far away. I can't give you any more details. Had some good discussions with the government recently, and some good signals and body language, and so I think it's there's overwhelming support for this deal to happen. It's just about the right people signing in the right box and the right piece of paper going from Department A to Department B. So I think we're almost there. Most government officials like to leave for holidays with an empty desk, and so fingers crossed, let's see, but I can't make any guarantees.
Paul, thank you very much for that, and we will be seeing you later today for Skyline, so appreciate that. If you want to know more about ASP isotopes, call us at 1-800-REDCHIP or email us at aspi@redchip.com. Thanks again, Paul.
Thanks, Craig. Great to see you.
Okay, see you in a bit. Our next presenter is going to be Scott Monteith of Avalon Advanced Materials. He's going to begin speaking in mere minutes, in mere seconds, actually. And in fact, we need to inform you that Avalon has been called away to a very important matter today. So they are very interested in participating. They did pre-record their segment. So we will play the pre-recorded segment for you here in just a few seconds. It was recorded, I think, 2 days ago, so it's very fresh, and it was done especially for this conference. So please stand by, and we will be hearing from Scott Monteith of Avalon. Our next presenter will be Scott Monteith of Avalon Advanced Materials. He'll begin speaking at the top of the hour. See you then. Our next company on today's RedChip Mining and Metals Virtual Investor Conference is Avalon Advanced Materials, ticker AVLNF on the OTCQB and AVL on the Toronto Stock Exchange. Presenting today will be Scott Monteith, President and CEO of Avalon. We will begin with a brief presentation in a moment, and then we'll open the event to your questions. I will keep everyone's lines muted throughout the presentation. To submit a question, please click the Q&A button at the bottom of the Zoom window and type in your question. Before we begin, please allow me to read the Safe Harbor Statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. I now turn the webinar over to Scott. Please go ahead.
Thank you so much. Welcome to the presentation, and I'm here to talk about Avalon Advanced Materials. Next slide, please. So the company overview is it's a simple overview simply because we have three assets. We own Nechalecho rare earth element resource in Northwest Territories. We own the future joint venture being named Lake Superior Lithium Inc. And we own a portion of Separation Rapids, which was our first joint venture of the three joint ventures we're planning on constructing. Next. Here's a map of Canada. You can see Nechalecho is in this particular part of the geography. We own Separation Rapids, which is right here, and we own Lake Superior Lithium Inc., which is right here. And here's a few other non-core assets. Recent milestones. In 2024, we put together an MOU with Qualcomm Technologies. We unveiled a third-party economic and labor study for Thunder Bay, for the Lake Superior Lithium Inc. refinery in Thunder Bay. and we received $3.5 million in financing from our joint venture partner, Sibelco. Quickly, we don't have it on this timeline. Our first sort of milestone was the year I joined. I joined in April 2023. And previous to that, I was an operator for 30 years, running manufacturing and clean tech businesses. In the summer of 2023, we completed our first joint venture with Sibelco, a mining group out of Belgium. And that joint venture was focused on our lithium rock assets near Kenora, Ontario. And the joint venture is called, again, Separation Rapids Limited, where Sibelco is going to finance, build, and operate the mine, where Avalon maintains a minority stake in that joint venture of 40%. But we're pretty much a passive shareholder in that business. Going forward to 2025, we brought in a consultant named Mark Ashcroft to help us set the table for Lake Superior Lithium Inc. And he has since left, and we are replacing him with a full-time engineer who will work out of our office in Thunder Bay, our future office. And we announced a 28% increase in the measured and indicated mineral resources at the SRL, Separation Rapids Limited project. We closed a $1.3 million LIN financing in 25, and then we appointed Lauren Crenshaw as the new Chief Financial Officer, replacing Jim Anderson, our 25-year-long CFO who decided to retire. In the last quarter, we successfully produced lithium hydroxide, battery grade, and analyzed at Metso's demonstration scale-up facility in Finland. We shipped our spodumene to Finland for the processing, and we were very pleased with the results. And we feel that the process has been proven to be fully scalable. We closed a brokered life financing in the last month and a half. We closed close to $18.7 million to advance our projects. And we also commissioned a test with a professor at the University of Toronto, and Professor Zizel Azimi, and she recovered 15 rare earth elements after cracking the zirconium molecules with caustic soda. So we were able to use a basic chemistry. Next. So our investment thesis is basically, displayed in these buckets. We have multiple value creation levers with the management reset, which has been in process since I joined. We had a board refresh, again, in process since I joined. Strengthening capital structure, and I won't go through all the bullet points, but we've really set the table for to construct our joint ventures going forward and making the best out of our resources. Next, Lauren. Talked about the management reset, governance reset. We secured tactical funding. We're going after non-core asset sales to raise capital. We're looking to monetize the tin, cesium, and anorthosite assets. We are in the process of securing binding lithium hydroxide offtake agreements, as well as spodumene concentrate supply agreements. And we're looking for much larger pools of strategic funding to make a reality of our plans. Next. It's a small management team, but it's a growing management team. The four core members of management are myself, Lauren Crenshaw, who is our new CFO, who has a diverse background on Wall Street, including being the CFO for 3 public companies, one being Avalon. And he came from Albemarle's global lithium business, where he was the CFO. So his management experience is extremely relevant. Andrew Ramcharan is our VP Corporate Development. He's been here for over a year, Andrew has a PhD in mining engineering, and he's had a lot of experience in mining finance with on the debt and the M&A side. And Vienna Sihos is our newly appointed Director of Public Affairs and Government Relations. And Vienna brings in experience from government treasury, as well as government relations and public affairs. Next, funding secured. The funding that we secured really catalyzed the next phase of our journey. We now have a chessboard, as I say, whereas before the financing, the chessboard was non-existent. Now we have pieces to move on the board, and we are going to advance our Nechalecho feasibility study, which was originally completed in 2011 at the cost of roughly $100 million. And we're going to advance that feasibility study. We're going to commence the feasibility study for Lake Superior Lithium, Inc., with regards to the refinery that we're planning to construct in Thunder Bay. And again, we're going to be using the Metso process to do so. Go back for a second, Lauren. Strengthening the balance sheet was a nice benefit from the fundraise, and it's going to give us a nice platform to continue raising funds to achieve our strategy, and that'll help bolster our working capital. Next. So Nechalecho really it's the world's most significant rare earth element resource. Again, it's located in the Northwest Territories, close to Yellowknife. It's in a safe jurisdiction. It's the materials on site can be transported by rail and truck, and it's a very strategic location for the North American markets, which we like to call Fortress North America. Next. This is a quick snapshot of the elements that Avalon owns in its resources. This is an interesting slide because it shows the relevance of Avalon to the global rare earth market. You can see in 2011, Avalon peaked as far as market cap was concerned. It listed on the New York Stock Exchange in April 2011, and with the feasibility study that it had completed then, and with the plans to construct the mine, we saw that China crashed the rare earth market at that time, which really it prevented Avalon from constructing its mine into the Northwest Territories. Our market cap dropped, and we were delisted from New York and taken solely onto the Toronto Stock Exchange. Next. This is also a sort of the elements that we contain that are contained at our resource in the Northwest Territories. These elements have application in electric cars, wind turbines, smartphones, speakers, computer drives, and defense. Defense probably being the biggest. Next. The project overview for Lake Superior Lithium is it currently is a 100% wholly owned subsidiary, and we will be constructing a joint venture at this location with partners from automotive OEM, from big cement, government financing, and private equity from Wall Street and Bay Street. Actually, if you can go back to the last slide, Lauren. The timeline for Lake Superior Lithium, aka Leslie, we expect to have financing committed to in 2026, with construction planning to commence at the same time. Next. And you can see lithium demand it's a growth market. It's 10 to 15% annualized growth per year in North America, and we are very well situated in Thunder Bay to facilitate this demand. The first phase of construction from Lake Superior Lithium will produce 30,000 tons of lithium hydroxide per year and 70,000 tons of analcime. Because it's an alkaline process, we don't produce acidic tailings. The analcime is the byproduct, and analcime is basically clean sand. That's a commodity. It's a value-added commodity that can be blended into cement to produce green concrete. And green concrete is concrete with a lower carbon footprint, which is stronger and lighter than traditional concrete. Next. So with Leslie, from byproduct to breakthrough, the analcime is, again, it's a very interesting material that we're excited about, and it's also going to create a nice revenue stream to diversify that operation, which should be completed by 2029 based on our current plans. Next. We have growth tailwinds of both rare earths and lithium. So Avalon's very well positioned to facilitate critical mineral demand in the coming years. Again, the financing that we completed was transformational, and we're looking forward to really grow the value of our company. Next. That's the conclusion of the presentation.
Thanks, Scott. We are now going to take your questions. Press the Q&A button and type in your question. As we can take only your written questions today, we ask that you please not use the raise hand button. We have several questions already for you, Scott. Avalon has transformed into a multi-asset critical minerals platform. How do you define the company's strategic identity today, and what long-term vision should investors focus on?
Thank you for that question. Today, Avalon is in a transformational position from its older junior mining model to an operating joint venture model. We are focused on building operations in both mining and refining.
Thanks for that, Scott. Second question. The Thunder Bay facility shows multi-billion-dollar economic potential, this person writes. What key milestones do you see between PEA and a final investment decision? And why is this project so critical for North America's battery supply chain?
The biggest milestone to start construction on the Lake Superior Lithium facility is to receive commitments from government financing sources. It's important that we receive those commitments because this process has never been constructed in Canada before. It's currently being constructed in the U.S., in Texas, and in Tennessee, but it's, again, has never been constructed in Canada. And with government financing commitments, we'll be able to stabilize the risk profile for private money to come in. And we are in deep discussions with both strategic and financial sources of funding for Leslie, who are waiting patiently for those government financing commitments.
Thank you, Scott. Next question. Nechalacho is one of the few Western rare earths projects with a completed DFS. How should investors understand its strategic role in defense, clean tech, and Avalon's future revenue mix?
Well, Nechalacho is, again, the world's most significant resource of rare earths. It's been fully proven. Spent $100 million on a feasibility in 2011. It's almost fully permitted, so it's closest to the starting line of any resource that we know of in the West. It's high grade and it's heavies, and we're very excited about its application, in particular with regards to defense. Right now, rare earths are extremely important in powering the nuclear naval fleets, in building nuclear power sources, nuclear reactors. The materials are critical in all of the areas that I've spoken about: telecom, satellites, healthcare, automotive, etc. And localizing the production and processing of those resources, it really de-risks the supply of these materials to these important industries.
Thank you, Scott. Next question. As you advance multiple high-value projects, what does the ideal funding strategy look like, and how does this align with your expectations and timing for a potential senior exchange listing?
Ideally, again, starting with government commitments of financing is where we're focused on right now. We're talking to both U.S. and Canadian government sources for such funding commitments. And again, we're in deep discussions with strategic OEMs, both automotive and big cement, and we're talking to private equity, private equity-based financial sources of funding. So once the capital stacks are constructed, we'll be able to commission the engineering and the building of our management teams at both Lake Superior Lithium and at Nechalacho, and procuring equipment and trying to hit our timelines.
Thank you, Scott. Next question. As you advance multiple high-value projects, what does the ideal funding strategy look like, and how does this align with your expectations and timing for a potential senior exchange uplisting?
Well, I guess not forgetting our Separation Rapids asset, we're looking to continue working at Sibelco's side to continue the plan to construct and operate a petalite mine there. Petalite, by the way, is a lithium-bearing rock that we can sell into the ceramic and glass industries. Secondly, we're looking to consolidate the financing for Leslie, for Lake Superior Lithium, in which case we can then push forward to constructing Metso's lithium hydroxide refinery, which, by the way, will allow us to turn Thunder Bay into the Houston of lithium hydroxide manufacturing for the North American markets and for the G7. So that's extremely important. It's a big focus of the company. And then lastly, again, securing the financing for Nechalacho will allow us to push forward into constructing a joint venture where we can construct a mine at the site, operate the mine at the site. We can build separation and refining capacity in Canada, and we can also leverage our good partners to the south in the USA to also coordinate the refining of these elements.
Thank you, Scott. For more information on Avalon Advanced Materials, reach us at 1-800-REDCHIP or email us at avlnf@redchip.com. Our next presenter will be Kerem Üsenmez of Volta Metals. He'll begin speaking at the bottom of the hour. See you then. And hello again, everyone. That was the recording that we made a day or two ago. And as I said in the recording, our next presenter is Kerem Üsenmez of Volta, and he will begin speaking at 12:30 p.m. U.S. Eastern. So we have about 9 minutes here. Just please stand by, and we'll be back at 12:30 p.m. U.S. Eastern. Kerem, can you hear me? This is Craig.
Yes, I can hear you.
Good. Let us set you up totally so that at 12:30 Eastern sharp we can get started. Can
Perfect.
you share your screen, please, and with your presentation?
How does it look?
Yeah, that's good. There's a better way to do it, though, where you don't see the slides on the side. Could we close it and start over again? And in your PowerPoint, bottom right-hand corner, there would be the
Okay, I'll use the
share.
PowerPoint. I was using the PDF. Hold on.
Oh, PDF, yeah. If you can use your PowerPoint, that would be better. Yeah.
That takes away the entire screen, but
Here
how do
to it's better to share the app and not a complete monitor or screen, please. Better for you. Just share the app.
What do you mean app? Which app?
Zoom will when you attempt to share, Zoom will show you that you can share a complete monitor or you can share just one of the windows, and that's what you would want to do.
Yeah, I'm trying to get the, what is this doing? Just give me a second. This, yeah, okay. No, okay. I don't use Windows, so I'm struggling with the PowerPoint, so just figured it out. Bear with me. I think this should work. Does it work now?
That's right. Perfect. Thank you. Perfect.
Okay.
Now, you can just leave that up and mute yourself here in a moment when we're done. Mute yourself and then shut down your video until we bring you back here at 12:30 U.S. Eastern.
Can you see me though? Like, how do I look?
We cannot see you. Is your camera on?
Oh, hold on. Yeah. Okay. Is
All right,
that
now I
is
see
that good
you. Yes,
framing?
now I see you. Excellent. Excellent.
The light is okay?
Uh-huh. Yes.
Okay.
Yes.
Okay, I'll turn it up.
Yeah, right. So let's share that screen again and get ready for 12:30 p.m. 5 minutes from now, 5.5 minutes. There
Sounds
we go.
Good. Okay.
Perfect. We're going to shut down our video and audio here. Suggest you do the same, and we'll see you at 12:30.
Sounds good. Thank you.
Okay. Welcome back to the RedChip Mining and Metals Virtual Conference. Our next company today is Volta Metals, ticker VLTA, on the Canadian Stock Exchange. Presenting today will be Kerem Üsenmez, the Director, President, and CEO of Volta Metals. We will begin with a brief presentation in a moment, and then we'll open the event to your questions. I will keep everyone's lines muted throughout this presentation. To submit a question, please click the Q&A button at the bottom of the Zoom window and type in your question. Before we begin, please allow me once again to read the Safe Harbor Statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Kerem, please go ahead.
Hi, thanks for having me. Volta Metals, this is a critical mineral, not only critical, but strategic mineral story from Ontario, Canada. It's a rare earth project that we have. It's somewhat advanced. We looked at all the rare earth projects. You know, there's rare earth projects and then there's rare earth projects. So there's 177 rare earth projects in North America. Obviously, how do you differentiate yourself? We looked at the stages and what kind of minerals they have. So 21 out of 177 of those projects have mineral resource, meaning defined tonnage and grade. Where do we sit? We sit almost in the middle, about 12 in grade and 13 in the tonnage. But the best part is the upside potential and the location. I'll tell you about that. So we just finished the drilling. These are some photos from that recently completed. So start with why Volta, obviously, because of the location, the mineralization being at surface and being open all directions. We see very, very in the short term that we can not only double, maybe more, find that, which our recent drilling is confirming. I'll talk about that in a minute. But the location is unmatched. No other project has this kind of infrastructure right on site. I'm talking about surface rights, the hydropower lines, so we don't have to bring any power. You can literally bicycle into the property because there's paved roads off the main Trans-Canada Highway. And it's in the best mining hub in North America, just outside of Sudbury, Ontario. For the ones are familiar with mining, you know, there's mines and all kind of talents there. So when we talk about critical minerals, there's rare earths and gallium. Those are most strategic. Why are they strategic? Not only for defense and electronics, but it goes into all day-to-day life. Our cell phones, our touch screens, normally they should explode with all the materials in them, including lithium. Rare earths are making them safe and very efficient. And also gallium is now being replaced by, is replacing silicon mostly in the semiconductors, which we know how critical that is. But the processing, the final product is always coming from China. That's we're trying to separate ourselves, obviously, in North America. So okay, we have it, it's proven, but what's the upside? The upside is two things. Obviously, we're highly undervalued because it's a news story, but because of the upside, it's only been drilled 200 meters from surface. The mineralization is on surface. We went ahead, but every borehole, so this was drilled in 2011, 2012, they got the resource. We're now updating it because no work was done since 2012 to today. What they did was they only drilled 200 meters, but every borehole hit mineralization and we're left in mineralization. So that tells you it is deeper and it's outside of it, there's more. That's what we did. We acquired this in June. We already drilled. We hit mineralization on every borehole. So we're updating the resource. We know it's going to be bigger. The reason is I'll show you in the next slides. But I'll talk about the project. Before that, just on a touch basis, what the rare earth metal elements are used. There's 17 in the periodic table. We have 15 out of 17 in our project. So very rich rare earth project. We talked about, robotics, AI, electric vehicles, all the electrification, in fact, wind and solar, cell phones, and obviously national security and defense, the premium magnets. So we have all these high value premium magnet rare earths in this project. That makes it special. There's also gallium. I don't want to go too much into it, but the numbers are incredible for rare earths, especially for the ones we have that are very, very highly valued. I'll talk about the project a little bit more. So the location I mentioned, it's just outside of Sudbury, Ontario. It's literally 3.5-hour drive from Toronto, Ontario, which it's super good. We don't need helicopters. It's very easy access. I go there for a day trip from Toronto. I lived in Toronto, and the photos on the right are from the site. You see the paved road and the hydropower dams. That's our claims, and there is 2 hydropower dams just outside of our project claim boundary. 2. It can't get any better than that. Literally, you can order pizza and eat while you're drilling, which is possible. So it's incredible, and there's massive support that we're just seeing from Ontario government as well as federal government in Canada. Even US government is supporting projects at this caliber. So it was drilled 200 meters. What we did was we drilled 465 meters because we planned for 350-meter maximum depth to drill, but we were still in mineralization. We kept going. We had to stop at 465 because we were running out of rods, and we left it in mineralization. That result came out. The entire borehole was mineralized. So on the left-hand side, you see the brown. That's the current resource. What they saw as an opportunity was at depth, but what we are seeing is that not only depth with this drilling, it's still going deeper, but also on the strike. So all areas are open. When we were going through the due diligence in April, May, before acquiring this in June, we realized that there is very thick high-grade gallium intercepts that was never modeled in the resource that was done in 2012. So with this new drilling, we're hoping to have the only gallium resource on top of a larger rare earth resource in Canada. So those results are still pending. We're waiting for assays so that those news are coming. I'll show you. And the other attractive part of this is almost all rare earth projects come with some level of radioactivity. Mostly it's uranium, but there's also thorium, sometimes if it is bastnasite, and so the ones you want are really not so much monzonite on this aspect. Why is radioactivity important? It complicates things for processing, but also permitting becomes more challenging or long time consuming. So ours don't have any uranium and very negligible levels of thorium, way lower than the threshold for permitting. So that makes it very clean for processing, but also permitting makes it very easy. So we got very excited about all these aspects, but the upside and the location is unmatched. So this shows the first 2 boreholes that we announced, got the assays, the others are coming. So on the far right, the blob that is red, that's the current resource, and the pink borehole that goes vertical, that's the new borehole that we drilled. Completely mineralized from top to bottom, 465 meters, high grade, ended in 1.8% rare earths at the last 2 meters of it. On the left-hand side, you see the boreholes and the outline of the current resource. So we went basically deeper, and on the kind of, below it, the mineralization continues. As we are updating that now, this resource, it's going to be bigger. We know that, and the photo obviously shows the mineralization is carbonatite, very clean, no deleterious elements for making it processing. So one of the things we did since we still acquired in June is we have an agreement with Idaho National Laboratory, which is the federal body that has done the work for MP materials that led government investment into that company. They're under direct mandate to find more critical rare earth element projects as well as gallium. So currently they have our samples and they're analyzing how to process it, try to understand better. That is a good collaboration that we have. No commitments from either side. They're doing it to understand, and then we'll see how it goes. But we're excited about that project, and it's a very good collaboration. It's all PhDs there that know what they're doing. Team obviously is very important when you're dealing with rare earths, especially. So I'm a geological engineer. I worked in Ontario, across Canada, globally, juniors, ran a drilling company. I sit on the board of the PDAC, so we have very good connections in the federal government. But I rely on the technical front, two experts that we have. One of them is Fred Brakes, worked for Ontario Geological Survey for 29 years. His role was to find Ontario's potential for rare earths and lithium. So he discovered two of the deposits in Ontario, and he knows obviously everywhere in Ontario, so he's crucial in this program. Alistair is a metallurgical processing expert for rare earths. That's all he did for over 30 years of his career, built in Asia, the first processing there, and he understands the metallurgy. He's very excited about that. We have Steve bringing a lot of capital market experience and very functional, very strong board. Mark built a producing company, one of the top 10 zinc producers with 4 producing zinc mines. That company started as a junior exploration company, went to almost $2 billion market cap. And Mike also built mines. Saga brings in First Nations aspects. She's a First Nation herself, and she's involved in the federal bodies and the major project coalition. So very strong, very involved, and highly valuable board. So for some investors, that's the most important slide after having an exciting project. Our market cap is around 20 million at this point, but I'll show you in the next slide the comparables where we should be or where we're headed to. We only have 100 million shares outstanding, and management owns almost 30%. That is very important because when we started, we went public through an RTO, reverse takeover. The company we had was 25% and owner of the pro forma, and we had only less than 10% at the time. So that shows you that we increased our holdings since then, because we invested in every round of investment, private placements we had since the inception of the company, and nobody got cheap stocks or anything like that. So we believe in that. We keep investing, and more to come. It's always very difficult to compare, but especially with the rare earths, because every project is unique in many ways. But we wanted to check as close as it gets to the mineralization we have, the size we have, and so forth. So Defense Metal is probably our closest one in terms of geology, etc. They're in Canada as well. So they're around 80 to 100 million market cap at this point. Their grade is high, but the tonnage isn't at the too much bigger when you use a little bit lower cutoff. But obviously we have gallium and a lot of upside potential in that. So the others are also there, larger market caps. And I think because this is a new story and we're just scratching surface as we go, I think in the new year, there's a massive upside potential there. Like I mentioned, we are, around 12th out of 21 of the ones that have the resource with a massive upside potential. So that brings in, all the things I wanted to talk about, but I'm happy to answer any questions. I have some appendices, goes more into detail. So depending on the interest or the questions, I can go more into detail on any aspects.
Karim, thank you very much for your excellent presentation. Participants, you can use the Q&A button and type in your question. We want to hear what you think. We can only take your written questions today, however, so please don't use that raise hand button. Karen, Volta is advancing the Springer rare earth and gallium deposit in Ontario as a potential Tier 1 asset. How should investors think about the scale and strategic importance of Springer within that broader North American rare earth landscape that you elucidated?
Yeah, thank you. Because it's only been, drilled down to 200 meters. It's very, very early stages of this deposit. We know it's going to be bigger when we update the resource, which is scheduled currently around, Q1 of 2026, because of what we saw in the drilling, and still will have upside probably after that. We're thinking at least double this size in tonnage. Now, where would that put us to? I think, we have long ways to go, in my opinion, the market cap. It's a news story. We have lots to do, and a lot of exciting news coming up, from, increasing the tonnage, to metallurgical studies results, that are coming up. So I think this can be developed into construction stage fairly quickly, given where it is, and the mineralization being on surface and so forth.
Karam, you have highlighted gallium's role in high-performance semiconductors and AI-related applications. How do you see gallium demand evolving over the next decade, and what opportunity does that create for Volta as a potential domestic supplier?
That's a great question. So gallium is just coming onto the market in a way that the demand is exploding. Last year, December, around this time, in fact, the first week of December, China restricted exports to US, and then they completely restricted any export of gallium in April, where, the world is like, oh my God, what are we going to do? The reason is it's a very small market. Okay, gallium is not massive. It's always being produced as a byproduct of zinc or aluminum smelting. Therefore, there's no standalone resource, except for Volta, hopefully coming up. But so we mentioned that it's being used in semiconductors. NVIDIA is using them. Actually, in fact, there's a US company called Navitas, is producing those for them, gallium nitrate semiconductors, because of its extremely faster response rate, 10 to 20 times compared to silicon chips. Now, USGS data, 761,000 tons of gallium metal was produced in 2024. 2025 data is not available yet. They released that in April or May. So 761,000 tons of metal. So it's not massive, but 750,000 was produced in China. And now you can't get it out of China. The rest, 11,000, 10,000, was produced between three countries, Japan, Korea, and one of the European countries, Germany or Estonia. The rest is divided between, minuscule levels of, India, Canada, Turkey, and so forth, not even 1% each. So that's where it becomes extremely strategic and critical. It goes into magnets, it goes into everywhere. But now the semiconductors, as we know, AI is becoming more and more common. What is going to happen? The gallium, I think I have a gallium demand here. That's the projected numbers for gallium. But how do we get it? How do we get it? US has zero production. Canada has minor 0.02% or something like that through recycling. So having a resource, having gallium, if we can demonstrate that, that will be massive. Because as I said, the location where we are, this can get into production fairly quickly.
Thanks, Karen. Springer already has a historic mineral resource and some very high-grade rare earth and gallium intercepts. What are the key drilling and metallurgical milestones over the next 12 to 18 months that could help de-risk the project and refine the development path?
Yes, absolutely. So we talked about the potential of, just only from 200 to at least doubling the tonnage from the current drilling that we just completed. That's one thing. but the intercepts that we had are very high grade total rare earths. Within total rare earths, obviously there's 15 we mentioned. Some of them are 30 cents a kilo. Some of them are almost 3,000. So which ones do you have? We are constantly analyzing every borehole we drill. What we are seeing is increasing values, increasing percentage of the high value rare earth elements within those new boreholes, predominantly increased heavy rare earths that go into these premium magnets. So there's 4 of them you want, and we have all of them with an increased levels as we drill. So I suspect with the updated resource, we're gonna have more of those. That's one thing. And if we can demonstrate the gallium, look at these are the drill results from 2011. Gallium oxide numbers are massive. So if we can also add this on, this is going to be add-on. Look, gallium is like we talked, it's small add-on. The value is in the rare earths, but if we can demonstrate a gallium resource, that will be massive. So in terms of catalysts, the drill results are still coming. So in the next little while, those are going to keep coming, plus the gallium at the end of January, say February. We are hoping to have, we will have the updated resource and the metallurgical results. And we're looking at drilling even more because not all these boreholes were included in the resource because of the spacing and so forth. So we're going to go and drill, tighten those spacings and go outside more, deeper more to even increase further. So there's a lot of potential and a lot of good news throughout the new year that we anticipate with our efforts.
Karim, you mentioned Ontario various times in your presentation. It has announced significant funding and policy support for critical minerals processing. How is Volta positioning itself to take advantage of provincial and federal incentives as you think about downstream partnerships and processing options in Canada and the United States?
Absolutely. Look, we're still at the early stages. We're still trying to understand how big this is going to get. But having said that, we're already started those conversations. US has been very aggressive, obviously. Not only US is like monitoring us through Idaho National Lab, we're seeing more and more interest from Ontario as well as federal government in Canada. Now, Ontario is probably the most aggressive province in Canada, I would say, arguably, because of their new initiatives. You know, they're really clamping down the timeline of permitting. They just have a new initiative, one project, one stop type of thing office, which we support. The good thing is we have the surface rights. We don't need a lot of permits to get this to the advanced project level that it can get into production. But obviously we're talking to them, and there's some financial support as well that we're qualifying for. So a lot of exciting stuff coming up in Canada that we are very excited. I'm very happy to be in Ontario just because of those reasons.
Now, beyond Springer, Karim, Volta also controls the AKI Critical Elements project in the Seymour Falcon pegmatite field. How do you see the lithium and broader critical elements portfolio complementing the rare earth and gallium story for investors?
Absolutely. We own 100% of this, again, road accessible, super good location near Thunder Bay. It's a discovery story. It's an earlier stage project, but initially we discovered a cluster of pegmatites, 6 of them in a small area. Since then, we acquired more, about 8 to 11 kilometers of that strike length, and there's a new discovery 8 kilometers west of that, which is next to Seymour deposit. So we're not only finding more lithium, we found high-grade tantalum, cesium, and again, wait for it, gallium in that project as well. But it's early stages, so we're focusing more of our efforts and budget in advancing Springer because it's closer to production than Aki. But Aki is, of course, we own it 100%. Very exciting project. As lithium is, getting more critical, we'll do more work as we monitor the market there.
Karim, you mentioned the great infrastructure in Ontario earlier in your presentation. This person wants to know a little bit more about that. He says, your site benefits from that unusually strong infrastructure footprint, paved roads, power lines across the property, nearby hydroelectric stations, rail access only 8 kilometers away. How do you expect this infrastructure to translate into lower capex, faster development timelines, and reduced permitting risk relative to other rare earth projects?
That's a good point. We are already seeing the reduced cost. Our exploration cost is one of the, if not the cheapest so far, because of the access, because of availability. There's so many drill rigs around. There's so many skilled work and laboratories, everything right within our reach. Now, on the capex side of things, we don't have to wait or spend money to build a road. We don't have to wait or spend money to bring power. The power lines on that right bottom photo, we're right there. We're just outside of that. That's where we're drilling. It cannot be any better. So timeline, permitting, and the cost will be, the lowest, I would imagine. Of course, because of, it's so close to Sudbury, so close to North Bay. All the infrastructure is there. We just need to do the proper work and define how big it is and get it into production. That's the rest is already there.
Karim, this participant was particularly impressed with your management. He wants to visit it again. That management team, those advisors, your board also. They include leaders with major discovery and development track records, as you explained, plus experience, of course, in rare earth processing, metallurgy, and, of course, even capital markets. How is this team composition shaping your approach to project sequencing, permitting strategy, and eventual engagement with downstream magnet, semiconductor, or defense sector partners?
That's excellent. So Fred has been instrumental on getting this project and, of course, defining it. We are seeing potential. I sat down with him last week as well. Alistair is heavily involved in our processing capabilities and how to process it efficiently, cost effectively, and most environmental friendly, because he knows all of that do's and don'ts, obviously, around the world based on the chemistry and the geology we have. Steve brings in, obviously, a lot of capital markets experience and the connections that as we grow this company, super valuable. Mark built companies from exploration stage and projects into production. So he's seen the challenges, how to overcome them potentially, and where to go for what kind of problems you have or challenges. Saga, as I mentioned, is involved in all government and First Nations across the country, and IBAs to getting them into production, after production, how you deal with engagement and having people on board and work together. Fatty, heavily involved in the federal government as well, relations, as well as capital through ethical capital partners. And Mike Hoffman, again, built mines, built companies. So he knows before you get to a challenging stage of taking an exploration project into production. Look, I've done it. I've been on the consultant side and the exploration side, but all these people I have done this many times. So they've seen the challenges or issues that we can deal ahead of time. That's what we're doing. For example, I never mentioned this, but I see most of the times exploration projects grow, they get to a point where they apply for permits. And then the government says, oh, you have to do baseline studies. You need at least 2 years of data from air, weather, water, etc.
Karim, hey, Karim,
sorry.
Karim, I apologize. We are just out of time.
Sorry
about that. We've got these strict schedules to adhere to. I do appreciate it. And thank you again for an amazing presentation, a very compelling structure here, a very compelling company. Thank you.
Thanks for having me.
Okay. Participants, for more information on Volta Metals, reach us at 1-800-REDCHIP or email us at vlta@redchip.com. Our next presenter is Chris Gertyson of Nova Minerals. He'll be speaking, well, it already is 1 p.m. U.S. Eastern. We're going to set him up and he'll get started right away. Chris, can you hear me?
I can. Do you hear me?
Yes, I can. Yes, I can. The deck is looking perfect, isn't it? Perfect.
You got it there?
Let's jump right in here, Chris.
Hold on.
Again,
one check. Is it moving? It's moving?
Yes. Yes.
Okay, great. Go.
Everything's clicking. Yep. All right. Again, welcome everybody. This is the RedChip Mining and Metals Virtual Investor Conference. We are very pleased to give you Chris Gertyson, the CEO of Nova Minerals, ticker NVA on the NASDAQ. Chris is going to jump right in just a second. We're going to open the event to questions after he speaks. I'm going to keep everyone's lines muted throughout this presentation as we've been doing all day. But you can submit your question now. Please click the Q&A button at the bottom of your Zoom window and type in your question. And let me read that safe harbor statement yet again. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Chris, go right ahead.
Thanks for having me, Craig. Exciting times at Nova Minerals, where we are developing North America's next major gold and critical minerals district here in Alaska. And the big one there with the critical minerals is, of course, the antimony. So we've become a dual commodity company, both antimony and gold. On the antimony side, the big takeaway there is we've been the successful recipient of a $43.4 million U.S. Department of War grant to establish a fully integrated antimony production. And that includes mining to refining. On the gold side, I mean, we're sitting on one of the world's largest undeveloped gold projects as well. So we really have the right commodities at the right time in the right location, being driven by a highly experienced team. Quick corporate snapshot. Shares on issue there over 414 million. Currently, cash, $11 million of, let's call it Nova cash. And then, of course, access to $43.4 million through this Department of War grant. And we've already received about $15 million of that as we're moving forward with the antimony project. Zero debt. Certainly our share price recently has reflected this, and we're on the right trajectory here and continue to move higher as people start to appreciate what we have here at the Estelle project and with Nova Minerals. The project itself, large project, over 200 square miles, over 500 square kilometer state of Alaska mining claim block. So no federal land, no native corporation land to contend with. What that means is much more streamlined permitting process, just dealing with our state entities. And to date, we've defined almost 10 million ounces of gold here across Corbel and RPM. And then on the antimony side, we're really honing in on two prospect areas, and that's Stibium and Styx. Now, in addition to those prospects, we have 20 other known prospects at various stages of advancement that include gold, copper, silver, which are both critical elements right now. Some of these are multi-element prospects and other critical elements. And there's a list of about 15 of them there that includes gallium, scandium, yttrium, about 15 of them that we're looking at, really taking a holistic approach to this project. But the big one there is antimony, which is so visible and readily accessible with a massive stibnite veining. That's the primary ore mineral for antimony right there on the surface. And that's what we're going after for the first critical mineral we're going after there at Stibium and Styx. In Alaska, such a mining friendly jurisdiction. It's as I mentioned, we're all on state land here. Literally on day one of this current presidential administration, the executive order was literally titled Unleashing Alaska's Extraordinary Mineral Resource Potential. This is what it looks like. These are the type of projects that the federal government is trying to advance, not only with our project, but throughout Alaska. I mean, recently taking equity stakes in various projects, numerous DOW and DOE grants, expedited permitting. We've already been identified as a critical minerals project and have received the letter that we are eligible for expedited permitting. And we've already seen that in some of the permitting we're doing with some access roads and other things to access that our antimony prospects. So we're fully permitted for the stage we're in now in terms of exploration, drilling, and engaging in this phase one of the antimony project, which is what the DOW award is for. Again, gold and antimony both at record high prices, and they continue to move up rapidly as there is a true in the antimony space. I mean, there appears to be a true supply shortage across the board, from the mine production all the way to refining. And really, as we move forward here, and you see a lot of companies coming online focused on antimony, really the prize will be, and the choke point will be on the refining side. And certainly Nova Minerals, with our Department of War grant, are looking to establish the first refining operation here in Alaska. With the antimony, let's look at our prospects there. So at Stibium and Styx, we have massive stibnite veining on the surface. As I mentioned, it's all outcropping. And what we're seeing is antimony values up to 60%. That reflects that stibnite mineralization. This current work on the antimony side, of course, is again backed up by this $43 million Department of War grant. We're looking at, this is a phase one grant. So we're looking to produce a specific product called antimony trisulfide. This is what's used in the munitions. So all 155 mil artillery shells, all small and medium caliber munitions require antimony, specifically antimony trisulfide. That's what we're focused on with this initial grant as phase one. We're looking, so the grant is a 24-month project schedule. However, we believe we're on track to be producing antimony trisulfide by 2026. So next year, mid to late next year sometime. And of course, we want to do that ahead of schedule, within or below budget, because then that moves us into the real prize, which is phase two, where we begin to scale things up and not only produce trisulfide, but also antimony oxide, antimony metal, potentially even antimony compounds for semiconductors. There's talk of that, not only for the Department of War munitions purposes, but for the entire U.S. industrial base. So we're in phase one right now, feverishly looking to complete that, be producing by next year, and then moving into phase two, which is a much larger grant opportunity. Here at Styx and Stibium, you can see some of these photos here. At Styx, here's one of these massive stibnite veining veins on the surface here. That one there is running, it's over 1 meter in thickness of stibnite, and we continue. What we've already done early on is we're just picking this stuff up off the surface, the antimony stibnite ore. We're beginning to stockpile this material just with hand. We're just picking it up off the surface, and you can see that photo there on the bottom on the Styx side. That's one of our stockpiles. That's me standing there with our Senator Murkowski here from Alaska, who's been so supportive of the project and in terms of the Department of War grant and all that. And then at Stibium, we also see quite a few massive stibnite veins and lots of vein swarms, kind of stringers and vein swarms. So the Department of War grant allows us to drill that and establish a resource, which we're working on now. But also the Department of War grant, what's included in that is mining equipment and processing equipment for our initial phase one. It's a smaller plant to produce hundreds of tons of antimony trisulfide. So we're already starting to procure that. And the focus is these two prospects, Stibium and Styx, where we see the the stibnite veining right on the surface, and we're already starting to extract that as we speak. Another key piece of the puzzle, of course, is where are we putting this refining? So the plan is to, of course, mine at our Estelle project and then do an initial stage of concentration utilizing ore sorters, and then taking that, which is still a coarse concentrate, taking that material and bringing it for the downstream processing here to Port Mackenzie, which is about 100 miles away. Ideal location, commercial industrial zone. This is being built out as a commodity port, really the gateway for Alaska mineral commodities to reach the US and the world. And what we've secured there is a 42-acre plot where we're right between the rail line and the road. We have power running right next to it. It's a deep water port, so year round we can bring in Panamax class freighters can come into here. All the facilities and infrastructure there, which will be key not only for our processing operations, but as we move forward, we can bring in offtake from other projects into the port and refine them in our refinery. So this is a key piece of the puzzle, and we've secured this land, and we are doing. We're starting to land processing equipment here now to begin construction on our initial phase 1 antimony trisulfide plant in spring next year. So in terms of the timeline and what we've accomplished, of course, we received the Department of War grant. We've our resource definition drilling is currently underway. We're commencing ore stockpiling just with material we can pick off the surface. So the idea is like, we're not going to just wait for a mineral resource in the typical, project timeline. We can already start extracting this material now and monetizing this now. And of course, the resource model and the resource drilling will be for longer term planning to sustain the project. But for now, it's right on the surface, and we are starting to stockpile so that we have that material available. So when our plant is commissioned next year, we can start processing and producing antimony trisulfide. We've secured the land at Port Mackenzie. We've commenced our technical studies. The metallurgical test work is going on now. We already have the first initial part of the process plant in terms of, this will be in any scenario. We'll be utilizing ore sorting, crushing, milling, flotation, of course. And then a lot of the metallurgical test work in terms of the technical studies right now are focused on that back end purification, refining. And we're looking at a number of options there, pyrometallurgical as well as hydrometallurgical refining options. And once we know that in Q1 next year, we'll order that equipment to put that to be able to commission that next year as well. Stibium road access, as I mentioned, that's been approved. The permitting is in place, so we're already starting to put that. That's about a 5-mile road to get to that first prospect from our camp. So we're starting construction on that. We've appointed a leading antimony expert working with Metz Engineering out of Australia in terms of the process design, as well as Dr. Corby Anderson out of the Colorado School of Mines with his company as well, He's Engineering. He is an antimony expert and working through all this metallurgical test work to get our process flow sheet and process designed all planned out. So that's in process. What people can expect is, of course, we'll establish a mineral resource estimate eventually, probably by the end of next year once our drilling's complete. In the meantime, we'll be constructing and commissioning a plant because we already have ore available and stockpiles of ore from our site. So the mining will commence earnestly by next spring, April, May next year. We'll start constructing next summer. By the end of next summer, around August, September, we expect to commission our plant and begin phase 1 production by Q3, Q4 next year to be the first antimony trisulfide producer and fully integrated from a mine source to the refining, state of the art here in Alaska. And the grander vision as we move then into phase 2, which is the ultimate objective here, is to then, as I said, scale things up at our mine. Also, the concentration step at site, which is ore sorting. So this will be XRT density ore sorting. And we've done quite a bit of test work with that. And we're seeing a 3 to 5 time upgrade. So we can be mining at, let's say, 5% stibnite 5% antimony, ore sort on site where the material is still quite coarse, going 3 to 6 inches. With that ore sorter, we can upgrade the material to 15 to 25% antimony, and then we'll take that coarse concentrate from the site and we'll transport that to the Port McKenzie refinery location, and there we'll do the downstream refining. Now, Port McKenzie is so key. It's a logistical hub. The Department of War loves it. Multimodal port. We got the rail, the road, the port, air freight nearby. And the idea there is to establish a central refining hub for the United States here in Alaska, with our project at the center of that. Now, the having it there at Port McKenzie in that location, of course, longer term, the idea is that we appreciate the antimony potential throughout Alaska, throughout the region, and so other projects will have an incentive to come online, produce an antimony feedstock, whether that's high-grade ore or concentrates that they can produce at their various operations, and then they have a central refinery to feed that to. This is larger scale project, medium scale, as well as smaller scale projects. Every day, I'm talking to people who have patented mining claims. Their grandfather was working it. They were after the gold, and they have stibnite stockpiles right there. These guys can, make a bit of cash by sending that material to our antimony refinery to then export, produce all the antimony products, and then export and supply the United States as well as our allies. That's the grand vision here, all based here in Alaska with a state-of-the-art processing facility and our projects at the center of that. So in terms of our flow sheet, what we're looking at, I've already touched on this a bit, but we'll be mining, of course, at our site, crushing the material down to 3 to 6 inch, and then we'll utilize these ore sorters. And we're seeing a really, 3 to 5 time upgrade already for the antimony. But also interestingly, in the ore sorting step, we're also seeing separation between gold and antimony. It's important to note that these antimony deposits that we're working on have really good gold in there as well. So we'll be getting gold credits along the way. But in that initial step at the site of ore sorting, we're separating out into two fractions. The reject or stockpiled portion out of the ore sorters will be high gold, low antimony, and then the accepted portion for the antimony project out of the ore sorters will be a high antimony, low grade gold stockpile. And then that high grade antimony stockpile will then be sent to Port McKenzie for further milling. We're also doing metallurgical test work to look at gravity. So that'll be plus or minus whether we utilize gravity. Early numbers look pretty good. And then certainly we'll be employing flotation to produce a concentrate, somewhere around a 60% concentrate. And then that'll go down to downstream refining or purification. And this is where we're looking at either pyrometallurgical or hydrometallurgical. We're testing them both. So pyrometallurgical is the traditional way to do it. You're smelting it, you're using furnaces. And that process requires you, of course, to, smelt the material, produce a crude oxide, and then, you take that crude oxide and you put it in another furnace with carbon, and you drive off the CO2 and you produce antimony metal. And then you can take that antimony metal and you can produce a higher grade, higher purity antimony oxide product. So it's quite a chain reaction. It is the traditional way people have done it, but actually, it has a lot of emissions and some issues there. And so the preferred route is hydrometallurgical, and more operators around the world that are, in China are using the hydrometallurgical method, where you're basically taking the concentrate, you're leaching it using some kind of alkaline leach or chlorine leach. And then all the antimony sits in the pregnant solution in the solution. And then having all the antimony in that solution, you then have the option of what product you produce. So we prefer that because it's one step of leaching, and then you have a plant of what antimony product to produce out of that pregnant leachate solution. And so, of course, our first priority will be with the Department of War grant in phase 1 will be to produce antimony trisulfide, but it's not much of an effort then after we have that process set up, to then put in an antimony oxide plant as well as an antimony metal plant, add that on. First step, produce antimony trisulfide for the munitions, urgent need for that. but we can then easily add on an antimony oxide and an antimony metal plant. So all of this will be determined from our flow sheet and process design and all our metallurgical test work we're doing now, and those answers will start to be revealed in the first quarter of next year. I should just briefly mention, I don't want to dilute the gold story. We do have almost 10 million ounces of global resources of gold here at the Estelle project. And this is what gives the Department of War comfort in investing with us, because we have other commercial interests, not just in antimony, but also in gold. And just to note, we have the RPM deposit, which is really the jewel in the crown, and some of the values there, and you can look at some of these intercepts: 400 meters at 3.5 grams per ton, including 132 meters at 10 grams per ton, very typical of the RPM deposit. And we're working on a feasibility study to bring the gold project into production as well by 2028. So here's the Corbel bulk tonnage system with 800 million tons here at 0.3 grams per ton. There's a higher grade feeder core there. And by that, I mean, some of these intercepts, 101 meters at 1.3, 94 meters at a gram. So I don't want to labor that point with gold, but, we are finding that all elements are actually critical elements. And this is a significant part of Nova's value, is our gold project. And it's important to note that our gold and our antimony projects are in separate standalone deposits. And so we can take these on standalone parallel paths. Our antimony is not tied to our gold project, and our gold projects are not tied to the antimony project. So we do have two paths that we're following here, which is another bonus for the Department of War in getting antimony into production. It's not tied to the gold project, and it also means that if we just focus on the antimony on that side, it's a much smaller CapEx, smaller footprint, and we can bring that antimony into production much sooner. In addition to that, we also have 20 other known prospects at various stages of advancement across the project. And as I said, that includes not only gold, but copper, silver, antimony, other critical elements. And with the other critical elements, they're not as readily or as easy as antimony, and so visible and identifiable. And so we're working out the mineralogy. We're also working with the Department of War to take critical minerals out of our ores as well. So the idea there is once we've processed material for our primary element, call it gold, copper in the future, antimony, we'll have that waste tailings, which usually just goes off to a tailings facility. We're looking to divert that to critical minerals extraction plants to take out gallium and yttrium and some of these. Bismuth is a big one there at RPM, to also produce that. Which is what the Chinese have done in many cases by putting critical minerals extraction plants and really pulling out the full value, because there's no such thing. These are usually byproducts. There's no such thing as, say, a gallium only mine or a bismuth only mine. They're byproducts, and we're looking to extract those byproducts with the support of the Department of War in future grant opportunities out of our ores, once we've already spent the time, the money, and the work to extract the primary element. But you can see exceptional numbers across the board at numerous prospects, and we continue to advance that. The point is this is the kind of project we'll be out here for decades and decades, with multiple mining centers producing multiple commodities along the way, which includes many of these critical elements, including antimony here is first and foremost. So just some points to make in closing. We are a dual commodity company with antimony and gold. We have a world-class gold project in a tier 1 jurisdiction. We have been a first mover, and we're at the center of establishing antimony production back to the United States, and certainly with the support of the Department of War $43 million grant that shows confidence in this project. It's a large-scale, long-life resource with strong fundamentals. And being in Alaska, you can't discount that. Being in Alaska with all the sovereign risk and geopolitical risk these days, being in Alaska, favorable jurisdiction, certainly being pushed by the federal government as the mineral producer for the United States, and we're right here as a central piece of that puzzle for the federal government to get these critical minerals production established for the United States. And with that, I'll leave it at that and I'll open it for questions. Greg?
Thank you very much for an amazing presentation, Chris. You can type in your question using the Q&A button if you're on Zoom. Joining us from Zoom, you can use that Q&A button and type in your question, and anyone can send us a question right now to nva@redchip.com. Got a lot of questions here, Chris. The plurality probably has to do with antimony. And how about this one? You're targeting first antimony production as early as late 2026. What remaining milestones will be most important over the next 6 to 12 months to ensure you stay on track for that near-term military spec antimony supply?
Right. So the Department of War grant allows us to drill and estimate a mineral resource estimate. That is for, as I said, for longer term production sustainability. In the meantime, we can monetize, and we've been asked to just start extracting it straight from the surface, and we feel confident we can have at least 2-3 years of production just from what we see on the surface. And so the Department of War grant also allows us to procure mining equipment, which we've now done, and we are transporting that to our site to begin serious mining with mechanized mining in spring next year. Also to procure processing equipment. And I went through all those pieces, the ore sorting, the flotation plant, all that. We are procuring that now to also transport any of that to site that we require, the ore sorting machine and the remaining processing equipment to Port Mackenzie to begin construction and commissioning next year. Now, people understand with phase one, antimony trisulfide is quite a niche product in the whole suite of refined antimony products. It's a niche product used for munitions. The production there will be hundreds of tons for phase one. And so it is a smaller scale plant, and it is very easily achievable, we believe, with what we have now, and we can sustain that production for several years just with what we have on the surface. So the milestones are construction, commissioning next year, already stockpiling ore, production by the end of 2026. We have until September 2027. That's our drop dead due date to produce antimony trisulfides. We believe we can be well ahead of the game and get straight into phase two as soon as possible, which is the real prize here. You know, now you're talking about building a much larger refinery, producing thousands of tons of all the refined antimony products.
Chris, in your presentation, you urged us to remember that you are also very much a gold mining company. This is a representative question here. On the gold side, as those feasibility studies progress, what are the main pathways to elevating Estelle into a globally recognized Tier 1 gold district?
Okay, so just the timeline there, we just completed another drilling program. If you recall, like about 2 years ago, it's a bit dated now, we did a scoping study. And even at that stage, 2 years ago, at an $1,850 gold price, we were approaching $1 billion NPV. So we've come a long way since then. And at current gold prices, you can imagine, I mean, we are far exceeding that in terms of NPV. So we're currently, waiting for our drilling results this year, coming out with a mineral resource update that'll be released early next year. And then all that to feed into our current feasibility study, the next economic study, where we can use this elevated gold price that regime we're in now. And based on that feasibility study, we can go straight into permitting. We're real advanced with our environmental studies. Being in Alaska, we think that process will take about 12 to 18 months. So as I said, everything we're in control of on the technical side will be ready to go in 2028. Now, there's some things we're not in control of. Our West Susitna access road, the permitting, you never know. But certainly everything will be in control of 2028. We are already not, of course, never recognized enough, but it's the kind of project, it's a district play, not many of these left in the world, already mid-tiers, major mining companies, we're on their radar. They're knocking at our door, some getting into our data room, having a look. There's not many projects like this left in the world. So we are being recognized. To be clear, there's no deals. Our core strategy is not to flip the project. We're project builders. However, the sophisticated the sophisticated outfits are definitely recognizing what we're onto here, and we've only scratched the surface. So the upside, we've defined almost 2 million out over almost 10 million ounces to date, but the upside beyond that is immense with all those 20 other known prospects I showed you.
Thank you, Chris. Excellent presentation, and thank you to our questioners for those great questions. For more information on Nova, you can reach us at 1-800-RED-CHIP. Email us at nva@redchip.com. Chris, thanks again. Our next presenter is Paul Weibel of 5E Advanced Materials. He should be coming on right now. Let's wait and bring Paul on now. Paul, can you hear me? Hello, Paul. You're on mute, Paul.
There we go. How's it?
All right. Paul, great to see your deck. The deck looks great. Do we need to do a video check real quick? We're good? All righty. As I said, our next company on today's RedChip Mining and Metals Virtual Investor Conference is 5E Advanced Materials, ticker FEAM on the NASDAQ. Presenting today is Paul Weibel. He is the CEO of 5E Advanced Materials. We're going to start Paul's presentation in just a moment. We'll then open the event to your questions. I'm going to keep everyone's lines muted throughout the presentation, and to submit a question, just press the Q&A button at the bottom of your Zoom window and then type in your question. Before we begin, yet again, we're going to read that safe harbor statement for you. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Paul, go right ahead.
Awesome. Appreciate the opportunity. So for everyone who does not know me, I'm Paul Weibel. I'm the CEO of 5E. Been with the company for just about 4.5 years. Was previously the CFO and got moved into the CEO role in June of 2024. 5E is a pure play boron company. We are a brand new, newly designated critical mineral. Our project is located in Southern California, about halfway between Las Vegas and LA. All of our major mining permits are in place. That includes a record of decision with the United States BLM, conditional use permit with the California Department of Conservation, and ultimately we mine via in situ leaching, an underground injection control permit with the US EPA. As you can see on the screen, this is a demonstration plant that we have. That's our small scale facility. Come January, we will have been mining at demonstration plant levels for approximately 2 years. This facility has completely de-risked our operations from the mining side to the processing side, and all that information got fed into a pre-feasibility study that ultimately was published in this past August. Economics for that is a $725 million NPV and a 19% IRR for phase 1 of the project. This facility has also been utilized to ultimately make on-spec borates and boric acid, which has been shipped to multiple customers across many different industries, and most recently a very large LCD glass manufacturer that's US-based but has material operations in Southeastern Asia. They're undergoing a large-scale tank testing trial to make the LCD glass. Often get asked, what does boron go into? What is boron? Boron is the 5th element on the periodic table. It has amazing properties, and I use the analogy if Tony Stark is to build an Iron Man suit, it is a boron-based suit. Boron is light, it is heat resistant, energy dense, microbial, is a fertilizer, and very much goes into 300 applications and makes life as we know it exist today. That's really boring stuff, such as the solid-base laundry detergent I was using in college to clean my clothes, to all forms of glass, LCD, Pyrex, textile fiberglass. And then it goes into really cool applications. So take defense, boron carbide. That's the third hardest material on planet Earth. That's what goes into Kevlar and tank armor. There's been a ton of attention on rare earths and permanent magnets. So all those high strength neodymium rare earth permanent magnets, those magnets are Nd, Fe for iron, B for the boron. You cannot make that magnet and get the high performance without the boron piece. Also, nuclear. Boric acid is a key ingredient in nuclear reactors. The nuclear industry cannot go without boron. It goes into semiconductors. So you have this wide array of demand and user applications that are ultimately very critical. And because of the diversified demand use, this market is growing at a 5 to 6% CAGR today. On top of that, this is an oligopoly. On the supply side, 2 companies control 85% of global borate supply. The Turkish government have a mining organization called Edimaden. They control about 70% of the reserves and about 60% of the boron market. Also, you do have a North American producer that's currently for sale. It's a Rio Tinto asset. They're about 70 miles up the road from us. They account for the other 20%, but that asset had a reserve downgrade in 2018 and it's currently for sale. Additionally, as you go into the derivatives, the higher value applications, that's dominated by the Chinese. They account for almost all the ferroboron, which goes into magnets, and they additionally account for 85% of or 80% of boron carbide for defense applications. So China does play its part in ultimately the boron marketplace. That's kind of very much why boron was listed most recently as a critical mineral. When you look at the supply and you have a depleting mine and ultimately a Turkish monopoly, and this market growing at about a 5.5% CAGR a year, that creates an actual fundamental economic reason for why a company like 5E needs to come online. And what you can see right now and what we have seen this year is actually supply and demand are at parity. And when you think about like what other projects could come online, in August there was 5, there's now 4. Rio had a JADAR project that's based in Serbia that had its permits revoked by the government. Rio has formally put that project into care and maintenance, so you're left with 4. Of those 4, 2 are based in Serbia, 2 are based in the United States, 2 do have their permits, and 1 has been operating a demonstration plant for the last 2 years, and that's 5E. So as this market need on a fundamental economic basis requires a new borate producer to come online, 5E is really positioned well to take advantage of that. Let's talk about the project specifics here. We do have the largest resource in the United States. We have a reserve statement in our pre-feasibility study. That's a 39.5-year mine life. That only includes about 25% of our actual resource space. If you think about that for the SEC and formal reserves, your reserves are a function of your mine plan. We mine via injection recovery wells. Our mineralization sits about 1,300 to 1,500 feet underground. We inject a very dilute hydrochloric acid solution with 95% water. That reacts with the minerals and we dissolve that. If we want to increase our reserves, we add additional wells. So our initial mine plan contemplates 27 wells, and so that accounts for about 25% of the resource today. From an infrastructure perspective, we already are tied into the grid, and SoCal Edison provides us a monthly electric bill where we about have 1 megawatt of shore power today. Our demonstration plant runs on that shore power today. 2 miles away from us, and also included in our record of decision with the BLM and our major mining permit, is the Kinder Morgan Mojave natural gas pipeline. That pipeline runs all the way down to West Texas and the Permian Basin. So as we think about the power required, we're permitted to tie into that high pressure natural gas pipeline. And what's included in our capital number is a budgetary bid from one of the major cogen providers, and we have and will have reliable power at scale. We're currently commencing a trade-off study where we're looking at potentially tying into the grid versus what's the cost to tie into the Mojave natural gas pipeline. Ultimately, that'll come down to an NPV and IRR decision. we'll make a decision based on what is most accretive for the economics of the project. We're 2 miles off of Interstate 40, 2.5 hour drive from the Port of LA, as well as Long Beach. So as you think about the customer base, you can serve the entire Western United States, being very close to rail and major highways. And then you can service Southeastern Asia pretty easily, as you're about an 18-day boat trip across the Pacific. We just sent 2 super sacks on a supply chain trial this summer. That turned out very well, and we just shipped 20 tons of product in August that have now commenced a large tank testing trial. From a mineral tenor, we have about 200 acres of real property we own in California. The mineral rights are conveyed with the real property, and ultimately all around us is BLM land where we have the load claims. Most recently, we did upgrade our mineral resources, which it now has a very sizable deposit. We have a large uptick in measured of 8.9 million tons of boric acid, 16.8 million tons of indicated resource, and our first phase of commercial production is about 130,000 tons of boric acid. So you're looking at 25 million divided by 130,000 tons of this is measured and indicated resource. You're at like 197 mine life. This project will be around for many, many generations to come, and we've adequately de-risked this over the last 2 years. When we talk about how we've de-risked this, it's been that demonstration plan. That plant has been fed with 4 injection recovery wells. As I noted, we mine in situ, kind of very much a mine of the future mentality. And that's governed by an underground injection control permit with the US EPA. This summer, we took 2 of those wells and we converted them to horizontal sidetracks. All of the people we're collaborating are from Exxon, Shell, Devon, Chesapeake, because there's one thing this country is very good at, and that is drilling for oil and gas. And so we've basically taken the page out of their playbook, aligned ourselves with people that have 30, 35 years experience out of oil and gas, and we've taken that mining method and applied that to our critical mineral deposit. Out of that, we've produced on-spec product. We've done all of our vendor testing and our bench testing before we put our pre-feasibility study out. So we've de-risked how the flow sheet will actually, or we've ensured that there's not going to be any changes on the flow sheet so that you do not have scope increases during the feed phase as we get ready to FID this project. And then any changes we've made on the flow sheet, we've incorporated and made economic-based decisions on, hey, will this change be more accretive to the overall economics of the project? And so the name of the game has gotten pretty simple right now, where we just need to stitch up some offtake agreements. And so as you can see in this picture, this was the 20 tons of product that we're getting ready to ship overseas. We've qualified 14 customers. We proposed offtake in the fall. The customer is ultimately looking to double check. They're pulling 3 market studies to make sure that slide you saw with the upward facing price is truly going to be the case. And ultimately, after we get the results of this large test, we're in a position to formally be under negotiations for our offtake agreement, which will basically underpin the debt financing for the project. From a team perspective, we have the right team in place right now. I've been with the company for about 4.5 years. Lonnie Bailey was our VP of operations. He spent the good portion of his career at Albemarle. Josh Malm is our CFO, was previously our chief accounting officer. He comes directly out of oil and gas and PwC. Mark Zamek is our VP of commercial operations. Mark sold borates for Rio for about 20 years and was their North American sales manager. Rod McLean has worked for various EPC companies and has built projects across the globe. So we have the know-how on our team to ultimately set this up for commercial success and scaling. From a board perspective, we keep this project very lean and mean. You can kind of trace all kind of the skill sets of the board back to how they impact our business. Graham spent his entire career at Shell and knows the chemicals industry and processing plants inside and out. So all of the above ground activity is Graham's expertise. Bryn is a solution mining veteran, Barry on the financing side, and Kurt on the policy side. One item to note on Kurt, incredibly helpful director. He was the chairman of the Federal Energy Regulatory Commission under both Clinton and Bush, and is highly plugged into the DC landscape. As we think about commercial scale project economics, 725 million NPV, 19% IRR. It'll cost about $435 million to build this. We do have a letter of interest from the United States Export-Import Bank for a $285 million facility. Additionally, now that boron's been listed as a critical mineral, it opens up the financing toolbox like tremendously. That now includes DFC, Office of Strategic Capital, as well as the DOE. We look at this project coming online and built by 2028, so we can commission and ultimately be producing in 2029 then. As we think about what comes next, you have various different options. One, we do have a lithium chloride in solution. We could monetize that, as well as a magnesium stream. Additionally, you could go bigger. Obviously, we have at 130,000 tons, a 200-year mine life. We can double that, triple that accordingly and scale up. Or you can take that boric acid and further process it and make advanced boron derivatives. As we think about this, we're very much focused on the project finance during 2026. Let's get working on our FEED engineering to do our feasibility study, which then segues into an FID where you're focused on the detail and the build to be online in 2028 and 2029. As we think about the catalyst roadmap, everything in green, those little checks, what we've accomplished. We've done a lot and we continue to execute. Most recently, we are collaborating with Los Alamos National Labs as part of their Mines of the Future. We're working on our offtake agreements for the bankable customers. There's an $80 million NOFO out right now. It was actually due in 5 days. We were like ready to go. They've extended the deadline. We'll apply for that by January 30th. We'll ask for about 30 million bucks. We applied for a $10 million EXIM loan once the government reopened. That'll cover the cost of FEED engineering. We've filed a prelim patent that basically locks up the IP. We will have a meeting with the Office of Strategic Capital here in the new year. We've been told to come in with a specific ask, as well as a modeled economic IRR for what kind of investment the US government can expect. And then there's additional grants that we will be eligible to apply for. And then obviously we do have the LOI where you can kind of look at that versus what does the Office of Strategic Capital come back with. All this will dovetail right into our FEED engineering and ultimately our feasibility study that we look to publish in a little less than a year's time. All this kind of ties into stock re-rating. And as I can think about a valuation perspective, a lot of times you look at mining companies on a P to price to NAV. And so if you take our NPV of 725 million, use a conservative or PFS, we have a reserve, we have Floor out of Greenville, South Carolina, signing off on our economics. Ultimately, use a 0.5, that's a 300 million and change NPV. We're 22 million shares outstanding today. That's a 1640 share price. I think we're significantly undervalued. I've continued to buy stock and will continue to buy stock. As I think about this and where we
put me on camera now, yeah.
We are ultimately a newly branded critical minerals project. There's very few, if none, diversified domestic producers that have large runway of resources. Major mining permits are in place, and we've been ultimately de-risking this over the past 2 years to really set ourselves up to scale at commercial levels into the future and be the next boron miner for many generations to come.
All right, Paul, and you're finished now then? Let's move into questions.
Great.
You're ready.
I am.
Okay, we've been getting a Lot of questions, and I'm going to choose this one because it segues so nicely with how you just ended your presentation. What emerging applications for boron excite you the most in the next 5 to 10 years?
Yeah, listen, I think if you look at we did this very elaborate market study as part of the PFS. And so you can break out the boron market into kind of glass, non-glass, and specialty applications. And so when you look at what's growing, your glass is kind of growing more in line with inflation, 3.5 to 4% per year. Your non-glass applications, which is a lot of construction materials, your insulation, that's growing closer to 4 to 4.5%. And then you have your specialties. So boron carbide. You also have the ferroboron for the permanent magnets. There's CAGRs there that are like 15, 16%. And that's what's really creating a demand for boron. And it's the criticality that it goes into. You cannot make an electric vehicle or make a wind turbine spin without the permanent magnets, and that requires boron. Additionally, as you think about AI and semiconductors, there's going to be more of a need for boron as it goes into semiconductors, and then more critical is nuclear. So for us, we have, and this is a little bit on the nerd side, but the nuclear industry requires B10 isotopes. So you'll have sophisticated companies like a 3M, they'll procure boric acid, $1,000 to $1,100 a ton. They'll then go spin out at the atomic level all the B10 isotopes, and then they take that and they sell that for like $100,000 a ton in the nuclear industry. So there's really, if you think about this market, it goes into some really high-end application. And what excites me most are 1, permanent magnets, 2, the semiconductors tied to AI, and 3, how important boron is for nuclear.
Paul, that pre-feasibility study, it outlines a $435 million capital need for phase 1, with $285 million of it targeted from the Export-Import Bank. How are you structuring the remainder of the financing, particularly in terms of potential customer prepayment, strategic equity partners, or non-dilutive federal programs? Also, what financing milestones should investors be watching out for in the next, say, 12 months?
Yeah, so I think if you can assume 435, there's 285 in project debt, I don't know, 130, 140 million balance. And it's a great question because it's something constantly giving thought about. And as you think about this administration, not only do they care about the science, but they also care about the economics. And so 1, you do have customer prepayments. That's already been proposed and by a customer. And can you get 1 to 2 years of prepayments? We proposed 25,000 of our 130,000 tons. You can use a function, we proposed $12.50 boric acid price. So from range of, funding prepayments, 25,000 times 12.50, that does wonders for levered IRRs. So that's one tool we have. Additionally, we have this Mines of the Future NOFO. We had already been collaborating with Los Alamos National Labs, and this is a DOE grant. It was released 3 weeks ago. We're going to ask for 30 million, of which 25 million goes to chip away at that additional 130. And so then behind that, we don't have any royalties on the project. So we'll look at potential any equity financing, and we'll do the trade-off analysis of hey, do we, and I have term sheets from royalties, but I don't want to do that now. But that's a tool in the toolbox that you can contemplate. And does the royalty ultimately make sense? And then listen, on part of the government's in the business of owning equity in companies for good projects. And I'm going through this NOFO for the DOE, there's a question, would you take an equity subscription from the DOE? And so that it obviously needs to make sense, but you can look at what MP did. They did the preferred. They then came in with a loan from Office of Strategic Capital, and they came in with like a multifaceted financing project. And so I do think that we did a small public offering, which is really kind of has helped liquidity from a trading perspective. Stock really ran in October with the whole entire space. And I think on top of, as we think about going into 2026 and some non-dilutive opportunities, that really puts one, a dent in the additional equity requirement, and two, our catalyst that can cause the stock to really run, as you've seen with names like MP.
Paul, this person writes, thank you for showing how boron sits at the intersection of national security, decarbonization technologies, permanent magnets, next generation alloys, etc. But which of these emerging markets do you see driving the earliest and strongest pull for 5E's products, and how are customers signaling demand as they qualify material through your pilot plant?
So no doubt the biggest user of boron is LCD glass. And so we have a public LOI with Corning. It's in our 10K. Corning is the largest borate supplier in the world. So right now, this market is an oligopoly, and ultimately, as the other US project depletes down and mine life becomes challenged, the customer landscape is ultimately staring down the barrel of a Turkish. You think about, you cannot make glass or some of these high-end applications without boron. The glass is definitely the leader. Next, it's boron carbide. There's a group that received approximately $40 million of DPA Title III money. They've been piloting how to make boron carbide to basically de-risk the supply chain from China. So as I think about 5E and how we play our part in that, we are specifically providing the feedstock to that company to ultimately de-risk from the Chinese supply chain. So for us, obviously we need the offtake agreements. There's a big focus on the LCD glass market. We are talking to, in addition to Corning, some of the other producers, because they know ultimately this is a highly concentrated supplier market, and they need additional options to procure their materials to have a very viable business. Two, it's boron carbide. How can you underpin defense? And three, it's the permanent magnets.
Paul, this person wants to know, how does your team foster innovation internally to stay ahead in such a specialized market?
So it's definitely on the mining side. We have a full-time PhD chemist. We have an actual lab at our facility. It's a true pilot plant, as you saw from the pictures. That lab is supported by 2 full-time lab technicians. We have a full ICP analysis where we run our own tests. And as we think about that, that lab is our eyes and ears to de-risk our mining operations. We have very standardized operating procedures where we're catching samples of solution. We're looking at the concentrations of boron, of lithium, of calcium, of sodium, et cetera, in the solution, and constantly looking at the analytical and understanding and tying that back to, hey, what did we do here, and did it result in a more positive outcome? Additionally, we're talking to Los Alamos as an extension of our team. As we think about this, we're gearing up to go into FEED. We're going to apply for this NOFO, and we're then going to look to take our project from a basically TRL 6 and 7 up to TRL 9, and how can we partner with the DOE here and the US government to really be a springboard platform for other critical minerals project. ISL mining is a little bit unknown. A lot of companies do hard rock, and the way we mine is innovative of itself. We're the only company mining borates via ISL. We fully have de-risked this, and we're basically setting up as kind of a blueprint for how can you replicate this to other deposits to produce more critical minerals in the United States to either, one, have a less impactful environmental footprint, two, mine deposits that wouldn't normally be economic, and three, potentially extend mine life.
Perfect way to end it, Paul. Thank you for an excellent presentation and for those excellent responses to our questions. For more information on 5E Advanced Materials, reach us at 1-800-REDCHIP or email us at feam@redchip.com. Thanks again, Paul. Now, our next company on today's RedChip Mining and Metals Virtual Investor Conference is Skyline Builders Group, SKBL, on the NASDAQ. Presenting today for the second time will be Paul Mann, who is the Executive Chairman of Skyline. Paul, are you there?
Can you hear me okay?
I can hear you just fine.
Brilliant.
Are you going to be showing a deck?
I will do. Let me find the deck now and share it with you guys. So I think I'm showing my deck. Can you see it?
Correct. Perfect.
Fantastic. Actually, just to be precise, I'm not the executive chairman. I'm executive chairman from January 1, although I'm one of the main investors of the company and help create what we're doing. So,
thank
and
you.
actually,
clarify that.
I am the chairman of ASP Isotopes and CEO, and we have a controlling stake in the company. So I am kind of, I guess, the chairman in some way.
Absolutely.
So that's good.
And Paul, Paul, let me just get a few little matters out of the way here. As I say every time here, we will keep your lines muted throughout the presentation, but we welcome your questions. To submit one, please click the Q&A button at the bottom of your Zoom window. If you're joining us from Zoom, please do it that way. You can also send an email to skbl@redchip.com and send your question that way. Let me get that safe harbor out of the way, Paul. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Now, Paul, please tell us the story of Skyline Builders Group.
Thank you, Craig. It's great to be here for my second time today. Actually, Skyline Builders is a subsidiary of Quantum Leap Energy, which is a subsidiary of ASP Isotopes. And we expect to change the name of Skyline Builders Group Holding Limited to Supercritical Materials, Inc. And that's likely going to happen in the first few weeks of 2026 is my guess. So let's move on to the presentation. We've got time for Q&A at the end. So there's a disclaimer here. If you could read that, that'd be great. And also there's a forward-looking statements here. Please read that as well. You'll find all of this stuff on our website and through filings on, actually, we're a Cayman's company, so 6Ks rather than 8Ks. With the SEC and all the rest of it. So that's fantastic. So the Energy Act of 2020 defines a critical material as the following: any non-fuel mineral, element, substance, or material the Secretary of Energy determines has a high risk of supply chain disruption and serves an essential function to one or more energy technologies, including technologies that produce, transmit, store, conserve energy. So there's many different types of critical materials out there. ASP Isotopes, I presented about earlier, obviously focuses on isotopes and helium, both of which are classified as critical materials, both essential to many things like healthcare, nuclear fuel, and energy and semiconductors. But this company now here focuses much more on mining and production of feedstocks that may go into our enrichment processes further downstream. So here's an example of some of the critical materials. It just shows you how reliant the US is on imports of many materials that are totally reliant on things such as magnets, electronics, aerospace, warfare, defense, and in some cases we're 100% reliant on other countries around the world to supply these materials to the United States. And given the way the world is right now, the US is desperately looking for alternative suppliers of these critical materials. We've seen supply side shocks of many of these over the last 10 years. That's seen prices skyrocket, but it's also curtailed certain industries who aren't able to carry on with their industries because they can't get hold of the materials. We'd like to think that we're going to be able to produce 23 of the most critical and scarce materials needed by the United States. And we intend to do this using both well-proven mining technologies as well as less proven, more novel, potentially cheaper mining sources that we've developed, or our partners have developed over the last several years. So our goal as a company is to become the transformational change agent for the security of the supply of domestic nuclear fuels and critical materials on an industrial scale. It's very important we do this on an industrial scale, and research scales doesn't really satisfy the United States needs. It's an industrial scale. So how do we get to where we are today? You saw the name Skyline Builders. Well, so in late August, myself and a group of investors, we raised about $18 million, and we gained control of this Cayman Islands exempted company listed on NASDAQ. It has a Hong Kong-based civil engineering provider within it. We expect to divest that business in the future. The owners of the business didn't really want it to be listed on NASDAQ, so it's a pretty easy conversation. The company's currently listed, currently headquartered in Hong Kong. We expect to relocate the headquarters to Washington, D.C. And during the acquisition or the take control, whatever you want to call it, Quantum Leap Energy acquired a number of super preferred voting shares. So Quantum Leap Energy, which is a wholly owned subsidiary of ASP Isotopes, acquired 78% of the voting control of SKBL. So we can kind of control it for the near term. Then in October, we raised an additional $24 million. I've personally put $3.5 million into the enterprise. And then a couple of days later, we announced that we had acquired a 20% stake in a Delaware LLC that has significant critical mineral assets in Asia. Now, we haven't announced exactly what those assets are yet. We have to get approval from the government before we can announce that, and so we are doing that at the moment. But we expect to announce the specific transaction in the coming weeks. On the same day, we also announced a strategic change in the company, and that I was going to become the executive chairman. And actually, we've already identified the next CEO, new CEO, and CFO. We'll announce those in the coming weeks as well. Then in mid-November, we announced we'd entered into a letter of intent to acquire 100% of a company called Supercritical Technologies. And we'll talk more about these technologies later in the presentation. That's a company focused on the extraction of uranium from seawater, cost competitively at an industrial scale. And I think that's really unique. It's been funded by the DOE for the last 10 years. About $20 million has gone into it. And it's an incredible technology that we think will rapidly accelerate the speed it takes to get to build a new uranium mine, and also the cost of doing it. And finally, we recently acquired an 11% stake in an Australian company called Remag, and they're focused on recycling critical materials from magnets. And we expect to increase that stake to about 50% during the next few months or so. And it's really unique technology. Again, could become a very low-cost producer of rare earth metals that go into magnets, very cost competitively, very quickly. And we're also focused on many. I spent the last year meeting many companies in Africa and around the world. We've got really interesting resources that the US may find very useful. Things like tin, tantalum, lithium, copper, things like that, basically. And there's a lot of stuff I'm looking at in Africa. I travel in Africa a lot, and that's kind of where we're at. So just to summarize, we own 20% of a large tungsten, lithium, and rare earth metal mine in Asia. Proven technology, quantified reserves, should start producing free cash flow during 2027. We have this uranium asset, an MOU, which we expect to be extremely interesting and really change the cost curve for uranium production. And then NRB, NEFB, a recycling business for rare earth magnets, and then tin. And as I said earlier, they produce 23 of the most critical and scarce metals that the world needs. So here's the management team, or as mentioned at the moment. So I'm the executive chairman. My background is I'm a chemical engineer by training. Spent most of my career in finance at Morgan Stanley, Soros, and Highbridge Capital Management, managing hedge fund money basically. And last few years, I founded the company ASP Isotopes. We acquired some assets out of bankruptcy in South Africa. We have built 3 manufacturing plants here in Africa, and we're listed on NASDAQ. Brandon Pretorius is a PhD in chemical engineering from University of Pretoria. He's actually the CEO of Quantum Leap Energy, very interesting technologies in fluorination and other technologies, and he's run his own company before he became the CEO for Quantum Leap Energy. And Jacob Rowe is also an engineer, and he spent a lot of time working on many DOW type projects in the United States. And we expect to announce a couple more new directors and also a CEO and CFO in the next few weeks or so. So let's talk first about uranium. And so, it's fairly well known the electrification of data centers and AI is pushing demand for electricity well beyond supply capacity. Renewables, won't be able or unlikely to be able to supply a base load given the intermittent nature of wind and sun. Fossil fuels have historically been the main provider of energy, but there's clearly a demand to be net zero over the next 50 years, whilst doubling the energy capacity. And also, distribution is a real problem. Transmission of energy is a real problem around countries. Actually, having localized production would be an awful lot easier. To the right here, you see the IEA estimates of global energy demands versus installed capacity that's indexed. And you'll see there's a real supply side shortage. And the world has to sort this problem out over the next several years. It's widely believed that next generation nuclear power is the future to increase energy and electricity. The chart to the right here shows the producers of uranium. You'll see the USA right at the right-hand side without much production at all. And you'll notice that most of the countries here are not exactly allies of the United States. The reason nuclear energy will be the main provider is because it's reliable baseload, exceptional energy density, a low carbon footprint, and it's very scalable as well. And so, if we're going to double or triple the amount of nuclear power, we likely need to double or triple the amount of uranium that is going to be produced to fuel those power stations. This chart here just kind of shows just how, what the current requirements for the US nuclear fleet is, 43 million pounds a year. And, given the policy that's currently in place, that will need to more than quadruple over the next 25 years. And, if we're going to see nuclear be 50% of the energy by the end of the century, probably to go up 20-fold. So there's a huge supply side shortage, huge demand growth anticipated in nuclear power. And traditionally, you dig this out of the ground. So a traditional mine can take 15 years to build, cost billions of dollars. The world needs more uranium in the next 5 to 10 years, not 30 years kind of thing. So there's an urgent need for more uranium. So the DOE over the last 20 years has developed techniques to use essentially ion exchange to absorb uranium from seawater, and this will involve putting submerged fibers into the sea and removing the uranium from seawater, and then taking it back to land and removing the uranium from the fibers, and then recycling the fibers back for second use. What's interesting is that the oceans have far more uranium in them than the land does, and we actually believe that we can probably get uranium out of seawater for a lot lower price than building a new mine, and also a lot quicker. So here are some of the main benefits. So very low capex to first production. We think for less than $50 million, we can actually get to our first production. Admittedly small scale, but we can prove technology works. Speed of ramping this up is also extremely quick. By the end of this decade, we think we can have significant revenues coming from this business. And we believe we can have over $1 billion annual run rate in revenues by the middle of next decade. We think the levelized operating costs and the cash costs of this are substantially lower than a mine or a greenfield mine. And so, we're aiming to have levelized cash costs below $58 a pound. I suspect a brand new greenfield mine is probably north of $100 a pound. And actually the main drivers or the variables unknowns in our cash costs are how frequently we can reuse the fiber. Can we reuse it 5 times or 10 times or 3 times? And also the temperature of the seawater has a big effect as well. And obviously the concentration of uranium in seawater has a big effect. So they're the main drivers of it. As I said earlier, the oceans have got 4.5 billion metric tons of uranium alone. That's over 1,000 times what sits on the land, and that's a huge amount. Now, finally, domestic production of uranium. Obviously, there's a number of executive orders that are aligned with this. We expect to get a lot of support from the US and other governments to help bring this to market quickly and efficiently. So a bit about the technology. So it was designed at the DOE, and they've done a lot of the bench research, the test research. It looks like it works very well. Our goal over the next 18 months is to scale that technology to be the lowest cost producer in the world. We started this in March 2025, and we have an exclusive license from the US government for this IP, and we've added other IP to it during the last 12 months or so, including how to extract more metal oils from seawater, other recovered metals from seawater, decreasing the time it takes to do this, and then increasing recoveries. And we obviously expect to file for DOE loan during 2026 to try and make this more capital efficient for the company. So let's talk about tungsten and lithium. So in October, we acquired a 20% stake in a Delaware LLC, has significant mining assets in Asia. Initially, the company will focus on converting tailings facilities to produce lithium. Commercial production is targeted for 2026 and likely cash flow in 2027, that kind of time frame. And we kind of feel the NPV of this project is close to kind of $400 million using 3-year trailing lithium prices. At current prices, it's about sort of $300 million. And in addition to the lithium, we believe there's large tungsten deposits that are actually extremely valuable, as well as other rare earth oxides, and we think that's valuable as well. So why is tungsten important? Well, tungsten is one of the hardest and most dense materials on planet Earth. It's used a lot in military applications for bulletproof vehicles, armor-piercing bullets, hypersonic weapons, that kind of stuff. It's also used in semiconductors. It's used in various manufacturing processes as well as being used in electric vehicles. And so you're seeing great demand for tungsten right now. And I'd also add that about 90% of tungsten comes from China, Russia, and North Korea. And that's really put the supply side security of tungsten right at the forelight of the center of what the government's thinking about. And you'll see prices have gone up exponentially in the last few months, mainly because of the supply side problems and concerns about is there enough tungsten around. So we, where prices go, I can't comment. I don't have a crystal ball, but anywhere above 300 metric tons is a very good price for us, and 200 is not bad either. So finally, let's talk about rare earth metals, our third company that we've made an investment in. And so most magnets, when they're used today, are never recycled. They're just thrown away. And the reason for that is because it's very complex to recycle magnets, very strong atomic bonds, which make separating them very challenging. There's not a lot of infrastructure. Historically, recycling them has required very harsh chemicals, high temperatures, and also recycled magnets typically have lower performance to new magnets. So that's why recycling of magnets has not been that attractive historically. So we've taken an 11% stake in a company in Australia, and we expect to grow it to 51% over the next few months. There's a proprietary magnet electrolytic process, and this basically has almost 100% recoverable material. We're able to put magnets into a process and then convert it into a powder. You can convert into a new magnet. What does this mean? Well, it's a very low-cost, sustainable way of recycling magnets. It's likely cheaper to use this method than mining new virgin materials. I think it's cost competitive with China. And we're very excited about bringing this to the market over the next several years. We're racing towards building our first plant at the moment. That should be completed during 2026. And we look forward to seeing that product come to the market. And, basically, this kind of shows you how we do it, the main benefits of what we do. But there's, this is a room temperature process. It's fast, efficient. There's no grinding, no energy, and it's very, very high recoverable again, which is very important. And this kind of slide here shows what we think about the anticipated unit economics. So, we estimate right now that it's about $26 for a per kilogram for magnets made in China. We think we can get down to $15 using this process here. So that will put us in a cost competitive advantage, and clearly, environmental-wise, it's a game changer. And there's a lot of interest in this technology from, as you can imagine, a number of the EV manufacturers and governments and what have you. So we look forward to having those discussions. So actually, Craig, that concludes my slides, Craig. I'm happy to take questions now, question and answers.
Okay. Thank you very much, Paul. Type your question in after you have pushed the Q&A button for our Zoom participants. If you're joining us on X, you can use skbl@redchip.com to submit your question. We've already got a lot of questions here, Paul. Some of this you've gone over, but I don't think it's a bad idea to go over it again. These people want to know about it. How should investors think about the long-term strategic identity of the company following the proposed acquisition of Supercritical, and what attributes define the types of assets that you intend to aggregate under that Skyline umbrella?
Yeah, that's a great question. So, I focus very much on return on capital. That's been the driver through my career. And so clearly any asset we bring in has to have a good return on capital for shareholders. We focus very much on materials that the United States and QLE and ASPI require for their feedstocks, for their processes. So let's take, for example, uranium, quantum leap energy. We're building some enrichment facilities for uranium, and we're going to spend a lot of money doing it. But if in 5 years' time we have the enrichment facilities, but we can't get hold of a feedstock, I think our investors and our customers would kill us. Likewise, if I dropped $1 billion into building a uranium mine that comes on stream in 15 years' time, also our investors would probably kill us. So the idea of this is it solves a lot of those supply chain problems and feedstocks to ensure that we have the feedstocks we need for our processes, and the United States has materials that are that are strategically important to the country. Obviously, any arrangement between QLE and Skyline Minerals will be done on a commercial basis, so it'll be commercial prices, but they'll be there available. In terms of some of the examples of materials I think are interesting, look, uranium I think is probably the largest supply-demand imbalance of almost any material I see out there. If we want to triple nuclear power over the next 25 years, we probably need to triple the amount of uranium, that kind of number. The last mine I saw, greenfield mine I saw come on stream, took about 15 years to build. So with 2025 today, if you start building today in 2040, you get a new mine, it's difficult to see how we get 3 times as much uranium by 2050. So that's an important one. Tungsten, where 90% of it is controlled by countries that are not necessarily, friendly with the United States. It's also very problematic too. So they're the kind of things we're looking at. I think I said earlier, tin, tantalum, copper. They've all become the supply side concerns of those have also become very concerning recently, and also by focusing on minerals that the US government need or would like. Hopefully it means we will get some support from various governments around the world to help build these mines, which improves our return on capital to shareholders.
This person writes, exciting to see Skyline undergoing this strategic transformation. He wants to know what the long-term vision for the company is, particularly in 5 years. How should investors think about Skyline's identity? Will it be a diversified critical materials company, a technology commercialization platform, or a broader strategic minerals operating group?
Yeah, in 5 years' time, I'd view it as a critical materials supply company. So a mining company with some novel and non-novel mining methods. Right now, we've clearly got some unproven technologies that we are working on, but in 5 years' time, I expect them to be proven, and that means we're basically, mining a number of different critical materials with a diverse range of materials. What I've learned over the years is that what's in short supply today may not be in short supply in 5 years' time, and vice versa. So having a diverse mix of materials makes it a much more robust, risk-averse company.
Given the technical sophistication of targets such as supercritical, do you foresee Skyline partnering with national labs, universities, engineering firms, or strategic corporations? What principles would guide you in selecting partners?
Yeah, so we will likely have some partnerships. I'm not sure of national labs, but certainly with engineering firms and that kind of stuff, we'll certainly have partnerships or certainly contracts or relationships with them. And I think in terms of rare earth metal recycling, battery recycling, it would make sense to have partnerships with a number of the EV manufacturers who require magnets, and maybe doing it on a tolling basis rather than on a cash basis. But we'll shape that out over the next sort of 12, 18 months or so.
As you said, Paul, supercritical, it holds the exclusive U.S. government license to extract uranium and critical metals from seawater. And of course, there was that decade of research, $20 million in federal funding. What were the key drivers that led Skyline to prioritize supercritical as your first major acquisition target? And what strategic advantages does this give the combined company?
Yeah, well, we've been talking to the company for a long time. I've known the CEO for a long time. I've been having interest in it for a very long time as well. And so it became obvious that we could help finance it, accelerate his plans to finance it, accelerate his plans to get to market. And so that was the main reason for doing it. And so yeah, I mean I think it looks an amazing technology. Let's bring it to market. Let's solve the supply side problem.
Okay, Paul, we've got 30 seconds. Could you give us an answer to this one? the supercriticals engineering program. It's already underway to design platforms capable of producing 1 million pounds of uranium. With that scoping study expected by late 2025, what role will Skyline play for the resourcing, financing, and potentially accelerating that?
Yeah, so we have the cash in our balance sheet to fund that, and the access to capital to fund that, and so we will do that. And having proven that out, we'll then help fund the production, the construction of a commercial platform, a commercial vessel to do this mining with.
Paul, thank you very much. I know that was too short of an answer, but I do appreciate you trying. Thank you very much. Thank you for the great presentation. Very exciting what's happening with Skyline. Thanks a lot, Paul.
Thanks for your interest. Have a good day, everyone.
Thank you. All right, welcome again to the RedChip Mining and Metals Virtual Investor Conference. Our next company is Foremost Clean Energy, FMST on the NASDAQ. Presenting today will be Jason Barnard, CEO and President of Foremost. Jason, are you there?
I am here.
Okay, could we get your decks set up? Make sure everything's all right with that.
Yes. Share. Share. Wait.
Looking good. Perfect. Thank you. Okay, Jason will begin his presentation in just a moment, and then, of course, like always, we'll have your questions. I will keep everyone's lines muted throughout the presentation. To submit your question, please click the Q&A button at the bottom of your Zoom window and type in your question. And if you are joining us on X, for example, or other social media platforms, you can type in your question into an email and send it to fmst@redchip.com. Before we begin, please allow me to briefly read that safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Jason, go right ahead.
Hi, yes, thank you. And thanks for joining us, Foremost Clean Energy. We have 10 uranium properties in the Athabasca Basin, and we have partnered with Denison Mines, our most strategic partner. We hit the ground running. On our first inaugural drill program at Hatchet Lake, we actually hit uranium mineralization on a 600-meter step out, and that's pretty incredible on your first drill program with uranium with our partner. I'm going to just touch on forward-looking statements. You want to check out this slide. We're going to, here at Foremost Clean Energy, we're a high-grade, drill-ready, discovery-ready uranium explorer, and we have 10 properties in the Athabasca Basin. We have a extensive group of assets, though. If you've not heard of Foremost before, we have been around a while, and why we were able to do such a creative deal with Denison, who trades on the New York Stock Exchange, was because we have a great exploration team. Now we've hit in lithium. If you've heard of us before, we started to focus on uranium. We had found a lithium discovery, and so we've hit discoveries before, and now we're focused mainly on uranium. We have an industry where there's strong tailwinds. There's a lot of drivers. President Trump has declared nuclear power a security threat. So the lack of uranium coming from North America and nuclear power is something that administration is driving huge amounts of capital in, and we'll touch on those in the future. Denison Mines, who I've mentioned, is a $3 billion uranium developer. They'll have one of the next large uranium mines go into production here in the near future in the Athabasca Basin. So they've been at it for about 40 years. Great partner, and I'll touch on them as well. So one of the advantages to owning Foremost is we are somewhat de-risked compared to a lot of exploration companies because we have that Denison partnership. So they have world-class data that they've brought to the table with us and our partnership, and we can use that data and millions of dollars worth of exploration to go and find the next discovery, which we're supposed to do for Denison while they get ready to go into production with their mine in the Athabasca Basin. We have a tight float. There's only 14 million, just over 14 million shares outstanding. Denison is close to 20% owner. Myself, I'm a large shareholder with over 5%. So tight float. And of course, there's lithium upside, and I'll touch on our other assets, gold as well. So Foremost and Denison, we did a partnership and a collaboration to earn an option into 10 properties where we will have 70% and they will have 30%. That's quite the endorsement, given that Denison doesn't choose many partners to go and deal with in the Athabasca, and they're taking properties that they've spent millions and millions of dollars on over the years and basically saying, okay, you guys go and explore on these and let's make a discovery together. That is quite incredible and somewhat de-risks the situation because you're using their technical data. The thinking is, well, you've already got a lot of exploration that's been done, some drilling on most properties. You should know a lot about where to put those drills and how to find uranium mineralization on your further exploration, and we've done so, and I'll touch on that. They're a very they've got deep pockets, Denison. They recently did a financing for over 335 million on the New York Stock Exchange. They already have a big cash position of over 100 million, and they own 2.2 million pounds of uranium. So that's worth a lot if you're checking out the uranium commodity. So we've got the technical expertise from Denison, and we've also got, as Dave Cates, their CEO, is on our board, and we've got their financial help too. They like to keep their percentage ownership up, and so they participate in any financings that come along. That I've touched on Denison. Yes, they have a strong balance sheet and a lot of cash in their treasury. And they've got a couple of deposits, one that'll be going in to production in the Athabasca Basin, and then they'll need more. And that's how you build a great uranium company. And that's what we're going to help them do. Value creation. We have a $6.5 million budget this year, and I'll touch on how successful we've been with our drills and our exploration. 10 properties. We've got a lot of historic work to deal with, so we're strongly positioned. And most recently, we were drilling on Murphy Lake, and Murphy Lake, well, it's within proximity of the IsoEnergy's Hurricane deposit. That's 38 million pounds of 34.5% uranium, highest grade deposit in the world. And we're lucky enough in the Athabasca Basin to be drilling within proximity of it. So this is high grade country. This is where all the mines are. And we're a discovery ready company that's going to keep exploring throughout 2026 to try to bring more uranium on stream. Uranium industry, well, uranium, nuclear power, one of the biggest mega trends on the planet. The need for power that comes from crypto, the data centers that will be required with the new AI world that we're in, there's just incredible need for power. So that's why the Trump administration has got a great push behind nuclear power. It's clean, it's 24/7 power, so great baseline power. And so there's a lot of tailwinds. And when you are in an industry with already a supply deficit, and I'm going to touch on that a bit. There's a supply deficit in uranium currently. Some say it's roughly about 25%. The world needs about 200 million pounds of uranium a year, and we're only producing 1.6. So there's the supply deficit and growing. So with these new needs, with the small nuclear reactors that will come on stream, that will power the data centers that will come on stream, that's just going to make the situation worse. So we know there's huge demand, supply deficit, and we're looking for where do you get that supply, but it has a very positive effect on the commodity itself, which I think is heading nothing but north. Athabasca Basin, this is where all the high-grade deposits are in the world. You've got your larger mines, Cigar Lake, and all the situations that Cameco, Orano have and are in production. This creates 15% of the world's supply and gaining, and it's a sought-after destination, that's for sure, for uranium exploration and uranium mine development. Companies all over the world come there, and we're lucky enough to have 10 properties and a partner like Denison. So in this area, you've got mills, the McLean Lake mill that Orano and Denison have recently put on stream, and you've got, of course, corridors of where the uranium are. So it's all about grade, sometimes 10 to 100%. 100 times more than the rest of the world. I can give you statistics. In the world, the average grade mined of uranium is about 0.1%. And I just mentioned to you the Hurricane deposit, which is 38 million pounds of 34.5% uranium. So you can see what you can find in the Athabasca and why many companies are there. This slide shows you our 10 properties. And you can see that there's a lot of them on the eastern side of the basin, where you've got the MacArthur River mine, the Phoenix deposit of Denison's, McLean Lake Mills. Cameco is a very large company, been producing a long time, along with your Orano and other companies that are producing there. So this is where you want to be. Our 10 properties, you can see most of them are on the eastern side of the basin, where most of the development is. I just mentioned the eastern side of the basin, so I'll just go on. So I mentioned earlier on in the presentation Hatchet Lake. We came out and on our first inaugural drill program, we stepped out and hit 600-meter step out uranium mineralization. And this was 0.1, 0.10, 0.20, up to 0.58% uranium. And this is significant because this was a step out. Denison and other companies had drilled in other parts of the property upwards of 2% uranium. But in our first inaugural program, we stepped out and showed that over a large area at the unconformity, we are hitting uranium. And the idea now, those grades, we want to increase them. We want to increase the intersections and increase the grades and keep vectoring back to the unconformity, which hopefully we can hit uranium discovery. So that was number one drill program, hitting mineralization. That's almost unheard of. So there's a lot of excitement to go back to Hatchet Lake. There's a slide with some of the grades that we hit. And we are now, or we've just finished drilling at Murphy Lake. We'd like to duplicate our success at Hatchet Lake at Murphy. And we've recently completed a drill program there. We're waiting for assays, but this is the property that's near the Hurricane deposit and in an area where high grades are found. So you just keep, once you find that mineralization, you vector back towards the unconformity. Classic Athabasca style uranium discoveries are made there. And we'll go back to Murphy as well, but we'll wait for those results and head back to Hatchet upcoming here. Blue Sky region. Over on the western side, it's a little less developed, although, for instance, our CLK property decades ago did hit uranium upwards of 1%. It'd be great to go back and drill at CLK and have our second property with uranium mineralization. So stay tuned for news on that. A little more on the CLK. You can see the CLK did hit grades a while back. Now I'll get into some of the other assets that are with Foremost Clean Energy. As I said, if you hadn't heard of us, we were busy finding discoveries in the lithium space. And the lithium has had a resurgence. Most recently, the Department of War did an investment into Lac Minerals mine and lent them over $2.2 billion to go put that mine into production. The reason is the critical mineral situation with China. If we're producing so little of the critical minerals, it's important to onshore this. It's a worry, and now there's been a resurgence in lithium. We've got great lithium assets. We have a discovery and a resource actually in Snow Lake, Manitoba. And most recently, we've actually went back and started drilling our lithium lane projects. Zoro, you can see that there's a resource there, and we've got 4 projects and had a lot of success in lithium. Lithium's got a bid again, and it's coming back with a resurgence. So stay tuned for what we're doing with our lithium lane projects. Now, right now, we are drilling in Manitoba at our lithium lane projects. Interestingly enough, we were able to hit in 2023 lithium, 1.2% and higher lithium, but we also hit a gold hit, and essentially a discovery, 7.5 grams over 7.5 meters back in 2023. So we went back there and we started hitting gold again. Now, you know where the gold market is. We're excited to bring to you an actual gold system because we keep stepping out and we keep hitting. You'll see if you've been watching our news releases, we keep hitting that gold system. Great grades. You can see on this slide up to 102 grams per ton over 0.48. So this is an incredible thing to be doing, and we're always trying to create shareholder value here at Foremost. We have myself, a very large shareholder, second largest shareholder after Denison. So we want to create value for our shareholders. So we went back there, drilled lithium, drilled gold, and we'll continue to do so. A little bit on our project timelines. Hatchet Lake, we came out and reconfirmed even better results from our Hatchet Lake drill program. Inaugural program, we're not swinging blindly. We're hitting on our inaugural drill program, and that's because we have sort of an edge. We have a large developer as a partner with all that world-class data. So between their technical team, our technical team that's had success before, we've come together and we've been able to hit on our inaugural drill program. We've recently drilled Murphy Lake. Stay tuned for more results on that. And we're in there hitting gold and lithium in this quarter on our Gene Lake property in Manitoba. A little on our structure. We've got about 14 million shares, 14 million plus shares outstanding. Very tight capital structure. I mentioned to you that I'm a large shareholder, Denison a large shareholder. So a tight float, which affects, with these tailwinds, the market very positively sometimes when you're highly leveraged to uranium like we are. And we've got about 8.98 in cash and cash equivalents. So we're well financed for our near-term drilling requirements and exploration requirements. You can see here we've got quite the team, my board and management and advisors. I can point out Dave Cates, who's CEO of Denison, on our board. Recently, we brought on Peter Esbeck. He actually has a cash flow positive mining situation in Canada, mining and milling, and he is the CEO of Nicola Mining, and we've recently brought him on. We've also got great advisors. Jody DeRouche has had many uranium discoveries, and and also lithium discoveries for that matter. Cameron McCabe, VP of Exploration, lives right near where we're drilling in that area, and he's had discoveries in his past too. So quite a team here. And down at the bottom, you'll see Chad Sorba, that's from Denison. Mark Fedicow, that's all about lithium, Lindsay Bottomer, gold. So we've got it covered there. A little bit on our transaction summary. We feel by the end of the first quarter, we'll have the lion's share of the transaction summary for the 10 properties, 70-30 interest with Denison finished. So investment highlights, uranium, highly leveraged to uranium, high grade properties, discovery ready, drill ready, and we've proven that we're not swinging blindly by hitting on Hatchet Lake, and we'll continue to try to do this for our shareholders and to build shareholder value. We've had a banner year, our enterprise value up, our cash position up, so we've looking forward to 2026, and stay tuned for more from Denison, ourselves, on the Athabasca, and lithium and gold in Manitoba. So now I'll leave it up for questions.
Thank you, Jason. Thank you very much for that interesting presentation. If you want to reach Jason with your question, please use that text box that will appear after you click the Q&A button. That is if you're on Zoom. If you are on one of our many streaming platforms, you can write an email to us, fmst@redchip.com. We already have many questions here for you, Jason. The uranium supply deficit is getting plenty of attention. What's driving it, and how can Foremost help?
Well, yes, it's getting a lot of attention. I mentioned there's about 200 million needed, and there's about 160 produced. Now, in the United States, they need about, I think it's 60 million, and they produce 1. So this is why the administration has declared uranium a critical mineral, and there's a major push to get this going in North America. What you will see is it's the supply side. We know the demand's going to be there. Small nuclear reactors will start to come on stream. Huge insatiable demand will come on stream. Right now, the current layout of uranium reactor or nuclear power reactors are in need, and there's a supply deficit. So where are you going to get the supply? Well, that's what we're here to do. We're here to go find discoveries with our partner Denison, and deliver discoveries that will have future production to meet that supply. So that's how we're going to do that here at Foremost Clean Energy.
Thanks, Jason. Tell us now about that Denison partnership and what it means for Foremost.
So it means everything. Those 10 properties, if you were to, this is the Athabasca Basin. This is a sought after area all over the world to go and find uranium discoveries. Companies from all over the world come there and try to do just what we're doing. They'll try to do it with one property. We have 10, and we did this in one accretive transaction with Denison. Denison's been around for over 40 years, and they have a lot of data and properties. And so not only do we have all of their world-class data, but we were able to do 10 all at once. That's amazing. This would take years and millions of dollars if a company tried to just accumulate properties. So it means a lot. And then for an investor, well, you could be highly leveraged because we've got a tight float. You can be highly leveraged to uranium. But yet, you have to know that one of the things you have to do is keep capitalized when you're exploring for a uranium discovery. And Denison, with their deep pockets, likes to invest into all of our financing, So we've got the financial support, the technical support, and we're very lucky to have them as a partner.
Your Gene Lake is an interesting story as it's a gold lithium property. You've made meaningful gold hits and just wrapped up drilling with a gold discovery. How does this connect to the critical minerals supply chain given your lithium?
So the lithium definitely, and it's recently caught a lot of attention and got some tailwinds finally because, China, then this is one of the reasons why a lot of minerals have been declared critical by the Trump administration. You know, they control too much of certain commodities. So they have been sort of pushing the price down. They're happy to, have companies not go and explore and try to find these critical minerals because they can control it, and that is a security risk. So with the lithium, we have a situation that's there's a resurgence. It just so happens that we are lucky enough in the area that we're drilling in Snow Lake, Manitoba, and we're exploring. We hit also gold. Kinross is drilling very close to us, and they are trying to drill off a gold discovery. Hud Bay is in the area. Lots of gold mines is what I'm getting at in the area. So we're lucky enough to be, yes, into the lithium, which is a critical mineral. Uranium is now a critical mineral, and just so happens gold, which is doing well as a commodity, comes along with it. So great shareholder value. We'll take that. And we keep stepping out, we keep hitting, we have a gold system. We'll take that and turn it into shareholder value for our companies. And if we need to use it for future uranium and lithium drilling, because it's actually very valuable.
How is AI shaping the future of your company?
So AI is shaping the future of our company because of the need for power, baseline power, nuclear power, clean power. Now, nuclear power has had its ebbs and flows so far as popularity. Companies like ours will, get these great assets when they're less popular, and then bring shareholder value to the market when they're more popular. So the AI, the way, a data center requires as much power as a small city. So you've got literally tens of billions of dollars from all the hyperscalers going into the data centers that they'll well be needed because AI is so good for production and profitability for companies. So there's a big boom there. And the power, where are you going to get it? Well, nuclear power is the chosen power. So small nuclear reactors and more of a pull of this clean energy for what is an insatiable demand in the future benefits us because we're a uranium explorer, benefits us so far as when we're out there trying to find the next discovery with Denison Mines that a lot of people want to finance us, own us, capitalize us. So that's how it affects us.
What catalysts should we be looking forward to for Foremost?
So catalysts, that is interesting because the way you can get re-rated to a much higher capitalization and much higher valuation is by hitting in the drills. So we've shown that we're not hitting blindly, that with all this world-class data with Denison, that we can hit uranium 0.10, 0.20, 0.58. Now that's very interesting. The headline is not maybe over the top, but what you do is you go back in and drill and you vector back. These deposits are at the unconformity. This is classic Athabasca style uranium discovery country, and you are going to look for bigger intersections and higher grades until you find that discovery. You get re-rated automatically because we're surrounded by mines and mills in an area that produces over 15% of the world's uranium. So that's a big catalyst, hitting, winning, and it just so happens we're a little more de-risked than most. Well, you go and play the uranium commodity possibly, where you see a commodity moving up. I think, one of the catalysts will be when we go visit $100 a pound again. Now, that's not a guarantee, but with the supply deficit, and if you look at the longer term contracts, you'll see where the uranium's going, and you see the demand. We don't see the supply. So that's a catalyst too. When uranium pops and moves, and Sprott Physical Uranium Trust goes and buys 200 million more pounds. Well, the effect on us works like a catalyst because we're in the uranium business. So drilling, exploring, hitting, and then it just so happens you might want to pay attention because there are a lot of and maybe some of your viewers have noticed this with being a critical mineral. Having the Trump administration's push behind nuclear power, there are these grants, there's investments, and when they come along and if there's corporate development possibly is how I would put it, that could be done that can really create a catalyst and a big increase in your valuation too. So we're always on the hunt too for the next big thing, and so watch for that too.
Perfect, Jason. Thank you for your excellent presentation. Thank you for answering those questions. For more information on Foremost Clean Energy, reach us at 1-800-REDCHIP or email us at fmst@redchip.com. Thanks again, Jason.
Thank you.
Our next presenter coming up immediately is W. Pierce Carson of Continental Critical Minerals. That's a private company, and he is ready to go right now. Now, our next company on today's RedChip Mining and Metals Virtual Investor Conference is Continental Critical Minerals, a private company. Presenting today will be Pierce Carson, Chief Executive Officer and Acting Chairman. We will begin with his brief presentation in a moment, and then we'll open the event to your questions. I will keep everyone's lines muted throughout this presentation. To submit a question, please click the Q&A button at the bottom of the Zoom window and type in your question. Before we begin, please allow me to read the Safe Harbor Statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. I now turn the webinar over to Dr. Carson. Please go ahead.
Well, thanks so much for the introduction, and I'd like to take the opportunity to also thank RedChip for allowing me to, or for inviting me to present Continental Critical Minerals. Next slide. Next slide. Continental Critical Minerals is somewhat unique in the mining, junior mining space because we have not only an excellent portfolio of exploration properties, but we're also producing cash flow and have been producing cash flow for several years. We have a plan to substantially increase that cash flow, as well as arranging for exploration of our properties. So I think we have a very exciting future. We're at a very early stage in the development of the company, but we believe that with the great portfolio that we have and with the development of our cash flow, that we're going to create very significant value. Next slide. Continental Critical Minerals owns Continental Lithium in Nigeria, where our properties are. We have very experienced U.S. Directors as well as Nigerian founders as directors. We have an operating team in Nigeria of several high-level managers and about 60 employees. Next slide. Nigeria is the second largest trading partner in Africa with the U.S. In recent years, it's turned its focus on developing the mining resources. It's very well endowed with critical minerals. Historically, Nigeria was always dependent on the petroleum and gas industries, and most of the big operators, oil and gas companies, have a presence in Nigeria. But the government has now turned its focus onto the mining sector and is very supportive of mining in the future. Next slide. This shows our licenses. Shows some basic geology. This is a country of Nigeria. And we've got 34 mineral licenses spanning 787 square kilometers. 13 of those licenses are focused on monazite, tin, columbite, tantalum, and zircon. And those are shown in blue in sort of the central part of the country, those blocks. Our licensors are within those blocks. We have 14 licenses prospective for hard rock lithium pegmatite deposits. And those are shown in green within the green blocks. That's mainly in the southwestern part of the country. We also have 5 licenses with identified gold potential and mineralization, which you can see there. We own 100% of these assets, and we're in a position to scale what we've done previously into a larger company where we would increase not only our production, but we would explore these licenses that we have. Next slide. This shows historical revenues. And you can see that the company was actually founded in 2017. And you can see starting in 2018, 2019, the revenues build up through 2022. Most of those revenues, practically all of those revenues, are coming from lithium sales. And when lithium fell out of bed in terms of the pricing, the company changed its focus onto columbite and zircon, which accounts for the 24 production. 25 is going to look pretty similar to 24, and it'll all be based on zircon and columbite and a little bit of tin. Next slide. We have 2 contracts with Chinese companies. They're large Chinese companies on the downstream processing side. One of the contracts is for columbite. The other one is for zircon. And these contracts were put together in 2023. They have a total value of about $24 million. We're in the process of expanding those contracts and extending those contracts. And in early 2026, they'll be much larger. So we see a fairly large future there in being able to continue to increase our production and to sell to these 2 companies. Next slide. This is the columbite. Little information. It's a $14.5 million offtake contract. We've been mining and stockpiling tin as well as columbite. And starting in 2026, next year, we'll be selling the tin as well. We'll be increasing our sales of tin. And this is it's a very nice contract. Our guys have been over to China just recently to negotiate the expansion of this contract. Next slide. This is a zircon sand and monazite contract. And we also, even though we haven't been selling monazite, we've been stockpiling some of it. Our main sales have been zircon under this contract, but in the future we plan to build up our monazite product. Monazite occurs in the same alluvial deposits that the zircon occurs in, and it's a matter of separating that material out, that monazite out, which we can do through our plant. We have a plant in Joss where we acquire material and then upgrade that material to produce a saleable concentrate. So that's what we'll be doing. That's what we are doing now with columbite and with zircon, but we will be doing that with the monazite as well. Next slide. This is an important joint venture with Chariot Corporation that we arranged earlier this year. The announcement came out in July of 2025. It's a joint venture that covers 10 exploration licenses in the southwestern part of the country. It's the joint venture will be executed through a mutually controlled company called CNC Minerals, a Nigerian company. It'll be owned 2/3 by Chariot, 1/3 by Continental. As part of the deal, Continental is receiving $1.5 million in cash and 42 million Chariot shares. The minimum exploration commitment, minimum commitment that Chariot has made to explore these licenses is $10 million over the next 5 years. And Continental gets free carried through production until the initial $50 million of joint venture revenue. So even though we're giving up some equity, it's up to Chariot to take these projects forward and to get them into production. They're very excited by what they see. They've had a team over there. They've got some very high-grade values from their sampling. Most of these licenses were acquired because of the artisanal mining activity that occurs, where there's outcropping spodumene, lithium-rich mineralization at the surface that is being mined by the local miners. They mine by hand and they sort the material by hand. But some of these zones that we have are up to 30, 40 meters wide, kilometers long. So they're excellent drilling targets where we know there's high quality mineralization right at the surface. The Chariot's very excited to start some drilling on these areas. And their objective is to not only put together some significant resources, but to try to achieve some production as soon as they can. Next slide. So I've mentioned a couple of times that we intend to expand our operations. Give you a little background, we do 2 types of operations. One activity is purchasing material from other people that we then upgrade into a concentrate through our plant for sale. And there's a lot of upside, there's a lot of availability of that material. And so that's one of the ways that we'll be expanding. Our objective is to go from about $5 million where we are right now up to about $45 million over the next 3 years. And a large part of that will be purchasing and processing material from other people. To do that, we'll need some capital. We estimate we need about $8 million of capital. We're arranging that now, and it should be available in early 2026. The other area that we're working on is mining, where we do our actual own mining, not just purchasing from other people. And we've got a mine, it's an alluvial mine that we started last year. Right now, we have engineers on site that are putting in additional processing equipment to get more efficient recoveries of material. We then take that material to our plant and we produce our final concentrates. So we feel that that even though this is a challenging objective to look at the increase that we're talking about, it's really only expanding what we're already doing. We're not doing anything, that's a lot different than what we're doing right now, and we think it's achievable, although it'll be a challenge to get up to those kind of levels. We think we can do it. Next slide. This is just a little snapshot of some of the transactions and sort of valuation benchmarks that have been happening in Africa recently. And we only show this if you look at what we have in Continental Lithium compared to some of these other deals, we feel that we could attract a very significant valuation in the assets that we have, and in particular with our cash flows. Next slide. Bit about our management. I'm a geologist by training. I've worked for some of the larger companies like Exxon Minerals and Kennecott. I've also been the CEO of other public companies, Nord Resources Corporation, Santa Fe Gold Corporation. Next two people, Lanre and Ronald here, are the founders of the company. They're very successful. Before they founded the company in 2017, they were in the oil and gas business, and they're very successful entrepreneurs, made quite a lot of money before they established Continental Critical Minerals. We've got some other people here you can see. I think I mentioned we've got some other senior managers and about 60 employees in total. Next slide. And our board of directors, the first three people there we've talked about. We have some other very significant to us non-executive directors. The first one is Dr. Israel Oviri. He's the chairman of BankLink Africa Group. He's raised a lot of money for infrastructure and oil and gas in Nigeria. He's a great guy. He's got a lot of good connections in Nigeria and worldwide. We have Panna Sharma, who's the CEO and chairman of Lantern Pharma, which is a NASDAQ-listed biotech company. Hannah brings a lot of experience, has been very helpful, especially on the financial side with the company. We have some other people I won't go into that are senior people on our board. Next slide. So, as an investment summary, the company has contracts in place of about $24 million right now with the zircon and the columbite. We'll be expanding that to also produce tin and monazite. We have a growth platform that we feel is achievable in terms of increasing our cash flow. We also have an excellent exploration portfolio of properties. We have Chariot Corporation carrying out exploration for lithium mainly on probably our best lithium properties. And we've got a plan to, in the future, not only sell to China, but also attempt to get good contracts in the U.S. and with the U.S. government, and also into Europe. Both the U.S. and Europe recognize that they're very far behind in terms of critical minerals, but they're doing their best to catch up, and they're allocating significant funds to deals with other companies to bring in resources, critical mineral resources, into the United States and into Europe. Next slide. So that's a brief thumbnail of Continental Critical Minerals, and I understand there may be some questions.
Thank you, Pierce. We are now going to take your questions. Press the Q&A button and type in your question. As we can take only your written questions today, we ask that you please not use the raise hand button. Dr. Carson, we've already received several questions here. Number one is this one. Continental is already generating revenue from columbite, zircon, and tin exports out of Nigeria with contracted offtakes in place. How should investors think about your path from today's circa $5 million annualized run rate to that revenue potential that you have outlined over the next 2 years?
Well, as we talked about, it's going to be challenging for us, but given some working capital, about $8 million that we're currently arranging, we think our objectives of expanding the production are quite achievable.
Thank you for that, Dr. Carson. Your licenses are rich in monazite and other rare earth-bearing minerals, giving Continental leverage as relates to demand for those vital rare earth elements, neodymium, praseodymium, dysprosium, and terbium. Hope I pronounced those right. What are the key technical and commercial steps needed to bring rare earth element concentrates into your export mix at scale?
Well, we've got the resources already, and we're actually currently mining. We have been mining the monazite. We haven't really been recovering it to the extent that we could. We're now expanding our recovery processing operations. So as we expand our mining and our purchasing efforts to bring in material, we'll be able to put that material through our processing plant and produce a good monazite concentrate. As far as the commercial aspects, there's no problem selling the monazite, especially into China. China has, of course, almost an exclusive hold on downstream refining. In the future, we hope to be able to sell some of that monazite into the U.S. and into Europe.
Dr. Carson, Nigeria is emerging as a major critical minerals jurisdiction with strong demographics and a growing mining sector, as you mentioned in your presentation just now. How do your local partnerships, governance structure, and on-the-ground infrastructure help manage country risk and support long-term scalability?
First of all, we have very good relations with the government. When I was over there, we had I was introduced to several departments in the mining sector. We're very well received. The fact that we could well have some U.S. backing and investors was very well received by the government. They welcomed us in. It's not that they don't like the Chinese, but they would love for the U.S. to come in and be part of their mineral development plan. As far as local governments, we have most of our licenses have communities that we have good relations with. We do put a lot of priority on maintaining those relations. So we don't think that's going to be a problem. Infrastructure is not a problem as far as our access to the ports, and we can increase production. We've got sufficient infrastructure to do that already. I think, the key here long term is our excellent communication and relationship with the federal government. Our guys, it's very obvious that in the meeting that I had that they feel very strongly that Lonray and Ronald, our two founders, are key to the future of lithium and other critical minerals in Nigeria, and they're very supportive.
Thank you, Dr. Carson. Continental positions itself as a non-China alternative for critical minerals aligned with U.S. and EU strategic objectives. You alluded to that just a minute ago. Now, what kinds of strategic partnerships, government programs, or downstream refining relationships are you pursuing to unlock valuation re-rating over the next 2 to 3 years?
Well, it's only relatively recently that these opportunities exist, and we'll certainly be pursuing those. As our production increases, we'll be in a much better position to arrange other partnerships and relations with the U.S. and with the European governments. We'll also be able to put together deals with downstream processing. The U.S. is scrambling right now to develop its own downstream processing, but the U.S. is also putting signals into foreign countries. Just did some very significant ones into Australia. So we think there is a possibility of arranging funding from the U.S. government, as well as possibly European government, to develop the kind of downstream sales that we want to see. So as we build up our own production, we think those types of opportunities can be developed.
Time we had for now. Thank you, Dr. Carson.
Thank you so much, and once again, very much appreciate the opportunity.
Now, for more information on Continental Critical Minerals, reach us at 1-800-REDCHIP or email us at continental@redchip.com. Our next and final presenter will be Mark Jensen of American Resources. He'll begin speaking at the bottom of the hour. See you then. And thank you, everyone, for joining. Slight correction, it's not going to be Mark Jensen, it's going to be Mark LaVerghetta of American Resources. And Mark, if you are on now, we could set up for the beginning of your presentation in 90 seconds. Can you hear me, Mark?
I can hear you now.
Can
you hear me okay?
Yes, loud and clear. Can't see you yet. There, now I can see you. Great, thank you. And I suppose we'll be walking through your deck today. If so, let's put it on the screen now, make sure it's working.
coming in. Just give me one sec. Can you guys see that?
Yes, yes. You'll be sharing a PowerPoint or a PDF version. PDF is fine as well. Oh, there it is. Perfect. That's the way we suggest it. Excellent, excellent. All right. Well, we are almost at 3:30 p.m. U.S. Eastern, and might as well start right now. And this is our final company on today's RedChip Mining and Metals Virtual Investor Conference. We are pleased to give you American Resources, ticker AREC on the NASDAQ. Presenting today is Mark LaVerghetta, Vice President of Corporate Finance and Communications. We will begin with Mark's presentation in just a moment. Then we're going to open up this event, as always, to your questions. I'm going to keep your lines muted throughout the presentation, of course, but to submit a question, you can click the Q&A button at the bottom of your Zoom window for those of you joining us on Zoom, and type in your question. If you're joining us on any of our many social platforms, you can just open an email and send it to arec@redchip.com. Before we begin, please allow me to read that safe harbor statement. This segment may contain forward-looking statements within the meaning of the private statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Mark, please just go ahead.
Thank you. Thanks for having us today. We have a little bit of a unique story here. As you said, I'm Mark LaVerghetta. I'm one of the co-founders, Executive Vice President of American Resources. I'm also a co-founder of one of our subsidiary holding companies, minority holding companies of ReElement Technologies. Our platform is built around creating a fully complete domestic U.S. Critical mineral supply chain solution platform. And how we do that is leveraging, best-in-class and innovative separation and purification and refining technology on what we incubated under American Resources, and then effectively took it private, spinning it out from its parent company, American Resources, at the end of last year. So 3 buckets of where we focus. This is not a 20-minute presentation, so I might skip around a little bit, so bear with me a little bit. But 3 operating holdings and how we build that full solution platform that American Resources is doing, and starting in the middle with ReElement, owners of just sub of 20%. Incubated, used to be a wholly owned subsidiary of American Resources. Like I said, spun out at the end of last year. Really the only domestic rare earth, critical mineral, multi-feedstock refining platform in the United States, built on innovation. I've always said from day one of our mandate of ReElement Technologies, it was built on innovation, not imitation. We believe understanding where the choke point in the global supply chain resides and addressing that problem head on. That's what ReElement addresses by bringing innovation on how you separate, purify, and refine a diverse set of inputs that meet the need of downstream manufacturing partners here in the United States of America. ReElement does that. We've been doing it for about 5 years now. We're validating a lot of our outputs, high purity refined outputs, through multiple supply chains, whether it's commercial, magnet, defense, battery. We've been spending our time bringing in a diverse set of feedstocks, both virgin ores, concentrates, recycled feedstocks, to produce high purity products and validate them with downstream manufacturing partners, allowing to leverage the attributes of ReElement, which is a very versatile, very flexible, using intrinsic operating parameters to be able to scale very quickly at any scale to meet the needs of the market. When you look at the global competitive landscape and the use of solvent extraction methods across the world, and what I believe is ReElement retains the control, the trade secrets, and the know-how of how to separate and refine using one of 2 foundational platforms that exist in the world today. One being solvent extraction methods dominated by China. I think most of the people here today on the phone are going to broadly understand that. The other is chromatography methods, what we've inherited, developed. Obviously, today we put a press release out on where we've really broadened our IP or our patent portfolio. I would say it's probably generation or version 3.0 of where we started this, focusing on niche yet highly critical defense minerals like yttrium, like gallium, germanium, gadolinium, and antimony, things like that that are critical to the needs, that are niche, and yet ReElement today has able to produce them and validate them with our offtake partners and through the Department of War, Department of Defense. Also leveraging a recent announcement that we've made in collaboration with the Department of Defense with a total project budget of $1.4 billion deal, and where the Department of War is taking a 10% stake in ReElement technology, sitting in our cap table based off of that validation of what we do and what we bring, and from a solution standpoint of bringing innovative refining, separation, and purification techniques here to the United States to compete head-to-head with China. It's essentially what ReElement does. Today, I'm sitting in our facility today in Noblesville, Indiana, where we produce high-purity rare earth oxides and critical minerals at or below, and many times below, the Chinese cost curve. Very unique, and it's how the attributes of the technology enable us to make broad and big statements like that. And the lens that we've been able to look through and how we approach from American Resources standpoint, how we approach the value chain of the critical mineral ecosystem very uniquely by leveraging this unique technology that we control and that we have. But that value chain is very broad. You know, a lot of folks want to focus on upstream mining, but what ReElement did, what American Resources as its former parent did from day one, is focus head on where the bottleneck resided, what the biggest choke point, and that was always that we don't have a mining problem in the world, we have a refining problem in the world. Now that we've validated and we've proven out our concept, it's now coming full circle back around, leveraging that and using American Resources Corporation as a full suite solution platform to not only source feedstock, but align it with downstream manufacturing offtake partners as well. While at the same time, if you look at American Resources and its critical mineral holdings, we look at to really bridge that full suite of solution platform. It's leveraging three pillars. First, really coming full circle, where we came from and how we got here today. This was built, we came out of the mining sector. Myself and other co-founding partners, we rolled up a large asset base in the Central App Basin, focusing on metallurgical coal or metallurgical carbon for the global steel manufacturing market. We closed on 9 acquisitions, did 5 bankruptcies, became one of the largest owners of mining infrastructure, understanding the mining game, understanding commodities, understanding that cost matter at the end of the day. When I go back to ReElement and I say ReElement controls one of 2 foundational platforms using chromatographic separation or chromatography that can go head to head with solvent extraction dominated by the CCP. And being able to do it at a cost structure that is highly competitive in the global markets, not needing taxpayer-induced price floors. We need to produce and compete in a global market today. Going back to American Resources, through the acquisitions, becoming one of the largest owners of mining infrastructure, through the assumption of about 60 million worth of environmental liabilities or environmental reclamation bonds, we did a broad restructuring effort. Looked at through that restructuring effort, pulling environmental remediation forward, looking at broadening our resource base and looking at the critical minerals and rare earth elements that were inherent in our resource base, doing an assessment of that, producing our own concentrates, and really how we started to look at separation and purification is we were producing our own concentrates back in 2017, 2018, really ahead of a lot of the Western world. But we knew that we needed to reside on China to do that final stage separation and purification. So we continued down that path of driving innovation under a global economic cost structure that can compete head to head through innovation. So producing our own concentrates at American Resources through our over 120 million tons of controlled coal-based byproduct resource. that it has inherent critical mineral and rare earth elements in it, refocusing on that, as well as investing in best-in-class upstream mining operations around the world and partnerships to source high-quality feedstock that can come into the United States and flow through the ReElement Technologies platform to bring high-purity products here to the United States for commercial and defense use. That's what we're able to do. Again, looking through that unique lens of actually doing it today, not putting it on a spreadsheet and saying that we're going to do it in the future. We've found that getting a hold of high quality feedstocks is not necessarily a critical, or not, I wouldn't say critical, a challenging or large choke point in the supply chain. The entire Earth's crust is full of mineral. There are a lot of rare earth projects. I'm sure you guys have been listening to a lot of upstream mining ventures going on today. Where American Resources is focused on is partnering with high quality resource that's being mined today, coming out of Southeast Asia, coming out of South America. Everybody's seen headlines. You've seen the administration doing mineral deals across the world with resource-rich nations that are actually producing these today. American Resources sits right in the middle of that to broker some of these deals for the United States of America to put it through innovative refining technology at ReElement. And finally, the last pillar at American Resources, besides producing our own concentrates, brokering upstream mineral deal, and the last pillar would be aligning high purity inputs and bringing in refining and then matching that with downstream manufacturing. I would say when you look at a lot of these rare earth and critical minerals, the markets are opaque. Some are small and some are niche. So you have to think very nimble. Sometimes you have to think smaller. A lot of people want to talk about mine to magnet, on the magnet minerals and the magnet metals. What we're focused on is a broader, more diverse set of inputs, like those, like the heavy rare earths, the terbiums, like yttriums, thermal heat coatings, gadolinium, germanium for optics. Things that are critical, things like gallium, tungsten even, that is moving up the hierarchy. Being able to align those, and a lot of times there's subsegments. Are you going to a 2.9 purity, or are you going to a 5.9 purity? A lot of those have different end uses. A lot of those have different prices in the market. A lot of them are very opaque, niche, and what we're able to do through our ability to produce high purity products to spec is align supply and demand. Our last wholly owned subsidiary under American Resources would be Electrified Materials, being an aggregator of processor of recycled feedstock. ReElement wants to focus on what it does really well, separation and purification. Electrified Materials focuses on the pre-processing of end-of-life or manufacturing scrap, recycled inputs, like battery or magnet, like hard disk drives that are coming out of hyperscalers and data centers, to produce a product that can go into ReElement to be efficiently refined. So when you look at all three pillars and developing that full suite solution platform, aggregating and pre-processing recycled feedstocks, aggregating natural ores that are, or concentrates that are being mined, and then lastly, matching that with downstream demand. Other value creating initiatives that we have, starting on the right with Sagient. Again, pulling together that full platform solution, using blockchain technology, understanding where the market is moving from full traceability and sovereignty for inputs, and whether you're dealing with the Department of Defense or auto, they want to know exactly the full supply chain, where the origins are from. Again, the unique aspects around that is bolting that onto our refining platform at ReElement allows it to run through U.S. entity-owned, domiciled refining technology, which then you put standards in for mining operations to meet certain standards and mining practices. So understanding completely the life cycle of where the origins, the sovereignty, and the traceability of all inputs are for technology needs. Like I said, I'm gonna move through this presentation as quickly as possible. Obviously, everybody knows the mandates, the speed at which this current administration is moving at. I see all entities, whether it's on the mining side, whether it's under ReElement Technologies or electrified materials, falling in line with our executive orders and mandates that this current administration is working at a fast clip. Go back to American Resources. We're currently looking at doing a broader resource and audit of our 120 million tons of coal-based byproduct resource that have a good concentration of rare earth elements in. Essentially, when you layer in innovative refining technologies, we are highly confident of bringing economically viable processing and refining to this base of resource, making, and the unique thing about this is why, and if you look at why this matters, these resources bases have already been mined, they're already permitted, so extraction costs are very, very low. You are actually taking negative particulates, so it's actually part of an environmental remediation process. Like I said, already permitted, speed to market. Having innovative refining technologies, looking at how you innovatively concentrate this stuff, turn it into a pregnant leachate solution or an input that goes into ReElement to do separation and purification, would be absolutely game changer. Focusing on doing this inside of American Resources and then partnering with other coal mining companies or other mining companies that have byproducts in their waste streams. Like we say, rare earths aren't rare. What is rare is economically viable process engineering to bring them to market efficiently, cost competitively. So it might not just be coal byproducts, it'd be copper byproducts, zinc byproducts, bauxite, which is alumina byproducts. A lot of these things have interesting mixtures and concentrations of critical and rare earth elements, but what lacks is the economically viable engineering and processing and refining to bring them to market. That's what we believe we unlock through ReElement and through American Resources. Our own resource base, we've done initial rounds of assessment. We're going through a broader audit and assessment and validation characterization program right now. But looking at what is inherent in our byproduct resource base, things that are of high importance, yttrium becoming high importance, scandium becoming very high importance. Obviously, the magnet metals like neodymium, praseodymium, dysprosium, terbium's not highlighted on here because this particular input is lower, but we would say that is of high importance. Gadolinium, samarium moving high up. Some of the defense markets using samarium cobalt magnets. Samarium is becoming more constrained here in the United States as well. So it's not just having the ability to upstream resource, it's being able to refine them and bring them to bear and bring them to market here in the United States. If you look at how we leverage what ReElement does and what it is, if you want to look at it through another way that we've put it, for some people understand this, some people don't, but if you look at a modern day Rockefeller model, Rockefeller dominated the oil market through refining. That's how we look at through ReElement. We've always believed from day one that solvent extraction methods dominated by China. While they technically can work here, economically they're non-feasible. That's why you've seen government step in with taxpayer price floors. But at the end of the day, scaling solvent-based extraction methods becomes very, very difficult. It's inflexible. It doesn't change very efficiently to a diverse set of inputs or a changing input every time you're mining something. Your mineral your mineral makeup is always changing. Again, I'm not going to spend too much time. Everybody understands China dominates these markets. And why we can leverage the technology at ReElement and do it here today, do it fast, our speed to market, the fact that we don't use chemical separation. We do use some chemical, but we are materials orders of magnitude lighter than solvent extraction. We don't do chemical separation through hundreds or thousands of mixture settler units using slight pH adjustments, which produce large quantities of acidic wastewater discharge, which is very environmentally challenging. Your wastewater treatment plans and protocols are a direct result of that, which always increases your cost structure. We do have wastewater, but our wastewater and our separation technology at ReElement is salt water, very easy to handle and purify and put it back to the municipality. Where I'm sitting today in our Noblesville, Indiana facility, we operate under our I-2 light industrial permit. We're in a light industrial strip mall. Other residents so where we're doing it, what I know, the only separation, purification, refiners of heavy rare earth elements outside of China, doing it in a light industrial downtown setting. Very unique in how and where we do this today. So leveraging a lot of this, having the ability, because we do it in a very small footprint, a very environmentally safe, permit light, we're able to co-locate as well. So moving refining to the source of minerals, so taking logistics cost out and continuing to drop your overall cost structure, again, to compete globally in the world today. We are at war, and I think everybody understands that. It's not a military war. We are in an economic war, Cold War 2.0, if you will. And costs matter, and that's what we're able to bring to the market. You know, when you look at the LCA, the life cycle analysis, much less water, much less energy, much less hazardous chemical, meaning almost zero acidic wastewater discharge. Like I said, zero wastewater and almost 70% less carbon emission. That is how you compete. That is how innovation drives this head to head to bring the supply chain here on shore, addressing what we believe is the biggest headwind and the biggest choke point. Again, this is where I'm sitting today, and the picture on the right to the left is a solvent extraction facility, rare earth refining facility in Inner Mongolia. Very environmentally challenging, sits in the middle of nowhere, where today I'm sitting in a light industrial strip mall doing this next to a church and a kids center. Like I said, I won't go to all this in detail, but the products that we are producing today, listed right here, the magnet metals, the rare earths, the battery minerals, the defense and chip minerals today. Again, it's been spent 3 years validating these across various industries, and has put us in a position to bring this and do this not only through one entity, because we're not the unique thing about American Resources is we're not a single asset platform. We're a multi-asset platform, leveraging across the value chain, bringing value to our shareholders in a variety of different ways. So I'm probably coming up on time, and maybe can open it up for some questions, if that makes sense.
Perfect, Mark. Thank you very much for that excellent presentation. You can reach us in two main ways, participants. If you're on the Zoom with us, you can click the Q&A button and type in your question. If you're on one of our many social media platforms, just write us an email with your question and send it to arec@redchip.com. Mark, as you prepare for large-scale commercialization, how do you plan to balance non-dilutive financing, project-level capital, and potential strategic equity to support rapid growth in ReElement without, of course, compromising shareholder value?
Yeah, we think about it all the time. You know, it was part of the reason why we did the strategy that we did from separating ReElement from American Resources, different capital structures. We knew we were early with ReElement. We didn't want to dilute American Resources or raise capital at the expense of American Resources. It was hard rolling up to a micro cap public pubco parent. We knew it was a private equity story. So we separated it out. That dividend was paid to our special dividend was paid to our underlying shareholders as of 12/31 of last year. We believe as we position ReElement for a public market IPO, it's going to be one of the most highly accretive dividends in public market history, potentially. We did bring in some equity capital recently, a month and a half, 2 months ago, through 2 private placements, to effectively execute on our strategy of bringing upstream resources and our own controlled resource. We think we're fully funded for the foreseeable future at American Resources, so no need to do dilutive financing. We've been able to bring in, and again, leveraging this through a multi-asset platform, Office of Strategic Capital, Department of War, investing, committing to capital at ReElement, helps American Resources shareholders, enables them to play the ReElement, enables them to play, leveraging that across the critical mineral space without the dilution, but at the same time, understanding that ReElement's a private equity story, bringing in private equity to match Department of War commitment. And then lastly, using other sources of government funding. You've seen NOFOs coming out of Department of Energy, specifically focused on coal-based resources. We think we bring a unique angle and a unique approach to bringing those resources to bear. So we'll keep our fingers crossed. Those are long-term processes, but I know the current administration is trying to work under a shortened and expedited time frame for review and award. So we'll continue to focus there from a capital standpoint.
Thanks, Mark. This person says, I'm a real American Resources fan. I particularly love ReElement. I think it's positioned for exponential growth, but carbon and metals generate consistent revenues today. Mark, which business line do you expect to reach sustained profitability earliest at commercial scale, and what are the key levers that would determine the timing?
Yeah, I think where we sit today and scaling into our larger scale Marion facility as well, the market is ready. I've always said that, as we incubated and developed ReElement Technologies, I've always said when you have to be early, because when the market moves, they're going to go to producers of high purity products. And today the market is moving. We are seeing that. That's why I'm at our facility today. We've been stacked up with meetings with downstream commercial partners in our commercial and in our defense industrial base. I would say we are positioning ourselves. We are flexing right now to bring meaningful ReElement revenues, cash flow profitability, and earnings to bear. American Resources partakes in that by 20% owner, roughly just sub 20% owner of ReElement, while also, I would say, focusing on our own concentrates and then making our own concentrates to feed into ReElement. I would say would be a mid 2026 timeframe as we look at that. And then brokering feedstock as well. We're starting to see more and ample opportunities as you continue to scale and commercialize our refining platform modularly. The ability to source upstream feedstock and broker that through American Resources continue to grow. I would say that's a first quarter 2026, if not happening in real time right now.
Mark, we've got several questions of this nature. Let's conflate them. Point blank, what is the company's identity today? Is American Resources a diversified natural resources operator? Is it a critical minerals technology platform? Or is it a future pure play in ReElement's refining business?
Yeah, I think it's somewhere in the middle of the second and third bucket that you just described. It's a critical mineral solutions platform, leveraging ReElement's unique ability to separate, purify, and refine like nobody else can do really in this world, leveraging American innovation to be able to do that. The value chain is very wide, and we do not want to, we need to keep ReElement highly focused on what its core competency is, but there's a lot of value, a lot of bites of the apple across the value chain. American Resources leveraging its affiliation with, as its former parent of ReElement Technologies, building value across the critical mineral ecosystem, both upstream and downstream of the refining process, to build shareholder value. That's its core focus. We understand we've pivoted a couple times. We started extracting coal and operating coal mining assets at the same time we were developing innovation for critical mineral refining. Well, that technology just happened to work and work really, really well. You couldn't develop both at the same time. You had to do one, we had to go full speed ahead. So we've pivoted. I think we're at another pivot point right now because of the validation that ReElement has had through the Department of War, through the US government, through its commercial offtake partners like POSCO, all across the world. We're pivoting to bring that full suite solution, whether it's traceability with Sagent, making investments in that, producing our own concentrates, brokering mineral. It's building value across the entire value chain.
Thank you very much for that, Mark. Unfortunately, we have run out of time. You made a great presentation, and those were great answers to those two questions. We will forward to Mark any questions that were not answered today. He definitely wants to hear from you. Mark, thank you very much again.
Thank you, everyone. Thanks for having me.
Yes, and as I said, for more information on American Resources, you can call us, 1-800-REDCHIP, or email us at that address, arec@redchip.com. And that does it for today's RedChip Mining and Metals Virtual Investor Conference. I want to thank all of the CEOs and company representatives who appeared today. Thank you very much for that. Every presentation was just excellent. And of course, we thank the thousands of people who have joined us on Zoom and on our various social media platforms. Thank you very much for making this conference such a success. If you want any more information about any of the companies we saw today, write us at info@redchip.com or email us or call us, at 1-800-REDCHIP. Join RedChip's next webinar with Fat Pipe on Tuesday, December 16th at 4:15 p.m. U.S. Eastern. Register for all RedChip webinars at redchip.com/events. Thank you and good night.